Good morning, everybody. Welcome to today's Trader Summit. My name is Kelly Clement. I am your YouTube host today. I will be here answering questions from YouTube all day long for you. Along with me, we are going to have Jeff Gibby be our MetaStock host for the event overall. He'll be talking to you throughout the day about what's going on, who's presenting, and introducing everybody. So I am happy to be here with you on the YouTube side. And Jeff will be joining us in about 8 minutes with our first presenter. As you are coming in this morning, tell us who you are, where you're coming in from. We'd love to hear where everybody's coming in from. Welcome, Vincenzo from Italy. Welcome, Jasnola. Glad to have you here this morning. Again, we are just getting started. We have about 8 minutes till we get going. If you are coming in and you don't know who MetaStock is, we are purveyors of technical analysis and charting software. I am going to just play you a quick video, show you who MetaStock is, what we do, and how we work here. So let me just go ahead and start that, and I will be right back with you.
Stick around for about 3 minutes, and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, well, great. thank you for taking the time to watch that video with me. I hope you enjoyed it and learned a little bit about MetaStock. But today is all about education, and what we are talking about is the markets and what is going on with the markets right now. The last week, obviously it's been a little crazy, so we are excited to have this summit today, have our market experts in here to talk about the market, what's going on and what's happening. So let me actually show you really quick what we have planned for the day. So we are going to be starting with Steve Bigelow. He is our first presenter today, and we'll be talking about the Doji Dynamite as our first presenter. We are then going to be having Alex Cole. Oh, let me see if I can switch my view here. There we go. Okay, so we will have Steve Bigelow, then we'll have Alex Cole, who will be talking to us about institutional trend following investment strategies. And then we will be going to Ed Downs, and I'll take us to that point. That is our first three presenters of the day. If you haven't registered on MetaStock's website for the Trader Summit, we are actually giving away a lot of different gifts from the different presenters. So if you go to metastock.com/traders-summit and register there, you can continue to watch on YouTube. But if you register there, you will actually be able to sign up for all the different gifts that you would like from these different presenters. So go ahead and take a moment, go to metastock.com/traders-summit. It will take you to this page, and down here at the bottom, you can see all of these great gifts that our presenters have put together for you, and also some of our sponsors like Stocks and Commodities Magazine, who we're very thankful to have as a sponsor for this event. You can go ahead and register again at metastock.com/traders-summit, and you'll be able to take advantage of these great offers. Okay, it looks like we are just about there on the GoToWebinar side of getting the presentation started. So we'll need just a couple of minutes more before we get rolling. So give me just a second. I'm just going to help the presenters get everything up and running, and then we'll get started. So thanks. Be right back with you. Okay, we are just about there. Give me just one more minute. It looks like we're just getting the PowerPoint to load, and it's having just a bit of an issue. So give us just one more second, and we'll be live. So apologies again for the late start. We're not getting started in 58 minutes. We're getting started right now, but just working to get this one issue resolved. Thank you. Okay, thanks everybody. Sorry, we are just about there. We are just having one quick technical difficulty, but it looks like it's just about resolved. It looks like we're looking pretty good over there, so I'm just going to go check in with the presenters and see if we can get going. Okay, here we go. Thanks everybody for your patience, and let's get this summit started.
Recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Before we kick it off to Steve, I do want to say thank you also to Stocks and Commodities Magazine for sponsoring today's event. They've been sponsoring us for I think we're starting on year 9 where we've been doing the Online Trading Summit, and it's been great. They've been a great sponsor of us the whole time. I think Steve's been speaking at all of them for 9 years too. And I do want to introduce Steve just a little bit. Steve, good morning. Steve, I've known for a number of years. He is just one of the nicest guys, a very smart technician. He has some of the best market jokes, but just I've had the privilege and the pleasure of traveling around with Steve, and I've learned so much from him. And I love the way he combines his candlestick patterns with some trend analysis to come up with a really unique and really, really good way of looking at the market. So, Steve, how are you doing?
Good, Jeff. Thank you again for the invite. And welcome, everybody. I know
if we can have you do slideshow, hit slideshow, or start slideshow, we'll be able to see the screen that you want to show.
Oh.
And I apologize, everybody, for a little bit of a late start. We just had a little bit of a problem we had to sort out. Hopefully, we got it out of the way.
Okay, so I've lost that screen that says start slideshow.
Okay. All right. So what I can see is your cursor. Can you go up to slideshow?
Yep.
Where it says slideshow right there.
All right.
Do you see it where it says from beginning?
From beginning. All right. And it usually goes to a full screen. Now is this the?
Yeah, we're getting some sidebars. I think it's just because it's set up for narrow view instead of a wide view.
Yeah, but that's usually when I hit start from beginning, it goes to a full screen, and I don't know why it's not doing it. So now you're still seeing the. I don't know what the problem is. All right. Well, I don't know what the solution is. Can everybody see this screen all right?
We can see it. And when we can see it a little bit better when you go into the slideshow mode, though. Can you not see the screen when you go to slideshow mode? Is that what's going on?
No, when I hit slideshow and I hit from beginning, it pops up another screen where this is now the full screen.
Mm-hmm.
But it's like set up for the YouTube.
It's not set up in the wide format.
Yeah, it doesn't go to the wide format. Pulls up a whole nother screen.
Can you still?
Okay.
Yeah, it does. It does. And since we're broadcasting to YouTube, it's okay.
Okay. All right. All right. Well, sorry for this, for the technical problems, everybody. So the first thing I usually ask is how many people have seen my presentations before? Obviously, Y for yes and for no. That gives me a little bit better feel for how extensive I go into the explanation of the charts. And now I can't see the answers. Oh, there we go. Oh. Okay. F5. Did anything happen? Okay, but if I go up here and I start from the beginning, is that a? Okay. All right. I don't know what you were seeing, but I will get started anyways. And so I'll have to flip through because now I won't see my own screens to see what the next slide is. But welcome everybody. Sorry for the delay. I see there's quite a few people that haven't seen my presentations before. So I always tell people that before I started, or before candlesticks came along, I was the worst investor in the world. And I was even a stockbroker for 8 years. And so I got out of the business, and then somebody introduced me to candlesticks because they said, you were a stockbroker. Tell me what you think of this. And it took months for me to pick it up because I figured anything as sophisticated sounding as candlesticks wasn't worth the time and effort. Jeff, you're going to have to ask or read the questions because I can't even get that screen to come up again. So anyways, we'll go fast as we try to catch up. What I discovered is that there are, out of the 50 or 60 candlestick signals, there's approximately 12, which I call the 12 major signals. And the most prominent is the doji. So the reason I illustrate the doji by itself as a separate presentation is because all the aspects of the confirming indicators that you can put on your chart is illustrated in the doji, and there's a very simple doji rule, which we'll get to. Now, a doji is where the price opens and closes at the same level during any time frame. If it opens at the top and trades lower and comes back up to the top, it's called a dragonfly doji because the Japanese rice trader said it looks like a dragonfly. A gravestone doji is where it opens at the bottom, trades up, and comes back down to where it opened. And the Japanese rice traders explain it as the warriors going out of camp, going into battle, and at the end of the day, they're beaten back into the camp, leaving their dead all over the field. That's the gravestone doji. There's also what we call a spinning top, which is just a small body. Then it looks like a spinning top. But the elements of these signals are the same. They represent indecision between the bulls and the bears. That becomes very significant for showing when there's going to be a change of investor sentiment. So there's a very simple doji rule. And it is that if you see a doji, the probabilities are pretty strong that if it will move in the direction of how they open after a doji. So this makes taking profits or going short a very high probability setup. Now, I use stochastics of 12.33, and that's nothing set in stone. Somewhere around 30 or 40 years ago, I was sitting at my desk, and the stochastics at that time were set at 14.55. That was the standard. But I'm a swing trader, so I needed something a little bit quicker. And I spent the evening going through 14.53, 14.33, 12.54, and came up with 12.33. So what is the stochastics tell us is if we're in the overbought area, the Japanese rice traders have a very simple analysis. If you see a candlestick sell signal in the overbought area, more than likely the investor sentiment is changing. If you see a candlestick buy signal in the oversold area, more than likely investor sentiment is changing. Obviously, if you see a candlestick buy signal in the overbought area, the Japanese rice traders say that's insignificant, doesn't mean anything. Or if you see a candlestick sell signal in the oversold area, it doesn't mean anything. So anytime we start seeing a doji in the overbought area, we know where it's likely to come back to. It's the T line, but I'll get to that in a minute. But this is your evening star signal right here at the 50-day moving average. We're pointing out Lucid because we're still short Lucid. We had an evening star signal and a close back below the T line. We're in a downtrend with a simple rule that as long as you stay below the T line, you're still in a downtrend. Anytime you see a doji and it opens lower, especially when you're stochastics look like they're rolling over. We also have a simple candlestick or Japanese rice traders rule that says the bigger the signal, the more compelling there's that new trend is in progress. So this is what we call observe the obvious. This is the 50-day moving average. In the overbought condition, we see a doji that just touched the 50-day moving average. The next day it opened lower. What did that tell us? They're not going in this direction anymore. They're going in this direction. And then again, the bigger the signal, the more compelling you're in a downtrend. We're still short this position until we see a buy signal and a close above the T line. Same scenario on the bullish side. If you're in the oversold area and you see a doji, again, that represents indecision between the bulls and the bears. The decision is usually going to be illustrated on how they open the next day. In this case, not only did they open a positive, but they gapped it up. That's what we call your best friend signal. It's a very simple analysis. If they're gapping up after a day of indecision in the oversold area, they've told you what their decision is. And the reason we call it your best friend is not only is the probabilities of it trading higher going to be extremely strong, but it's the magnitude of the move is going to be extremely strong. So this is what we call 2+2 analysis. If we can see dojis in the oversold area at a level that everybody else is watching, it's pretty much telling us that's what everybody's decisions are at a major support level that everybody else is watching. This is called a bullish left-right combo, which we'll get to here in a second. It's a doji followed by a bullish engulfing signal. A very strong bullish reversal signal, and obviously that's where everybody's buying at the level that they're all watching. So high probability trade setups are in a combination of what we call the T line. And this is one of the most important screens of this whole presentation. The T line is the 8 exponential moving average. It's got Fibonacci characteristics, meaning it acts like a natural support and resistance level of human nature. So we have the T line rule, which is basically if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now, what does that do to us as individual investors? It eliminates our biggest bugaboo, our own human emotions. If you are like me and you happen to have one of those rare occurrences before candlesticks came along, trading positive, what's everybody's or what's their normal reaction? Boy, I've got a profit. I better take a profit because I sure would look stupid if I let a profits turn into a loss. So what's everybody do? They take profits when there's no reason to take profits. The T line, if you put this on your chart, will act as a very high probability indicator that as long as you stay above the T line, you can stay long. Conversely, if you see candlestick sell signals and a close below the T line, you can stay short until you see a candlestick buy signal and a close above the T line. So the most powerful statement of candlestick analysis is if the candlestick signals are the graphic depiction of showing what's going on in investor sentiment, and the T line acts like a natural support and resistance level of human nature, when you put those combinations together, you've got an extremely powerful trading analysis tool. So very simple T line truism. And this is good for when you're in an uptrend and you see a sell signal that closes below the T line. Take profits because it's extremely high, and I stress the word extremely high probability a downtrend is starting. Close out the position. Conversely, if you see a candlestick buy signal and a close above the T line, you've got an extremely high probability that your uptrend is starting. And there's a caveat to that. The caveat is the further away you move from the T line, the higher the probability it's going to come back and test it. So this is where you can put your just simple analysis that if you're in an overbought area and you've started moving excessively away from the T-line, you start looking to take profits. Now, what keeps you from not taking profits up here versus here or all the way back down here? Because of that simple T-line rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. So when we see that visual analysis that we're way too far away from the T-line, we flip to our 10-minute chart. Now remember, a candlestick signal is the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter whether that time frame is on a 1-minute chart or a monthly chart. It's still the graphic depiction. So when we get up here, we flip to a intraday chart and get ready to take profits. If you're a day trader, you can be taking or using the 10-minute. I use a 10-minute chart for my bellwether if I'm trading the dollar, cattle, soybeans during the day. And then if I get ready to execute a trade, I flip down to my 5-minute chart. So here's some of the high probability trade setups that are using the doji. The best friend signal is a doji followed by a gap up in the oversold area. How long do we hold it? Did we hold on to this one? We didn't need to. That would have scared me out years past. A bearish engulfing in the overbought area. But now at least I know to say, all right, I've got a sell signal. If it opens lower tomorrow, close out the position. The only way to stay in it, it needs to open positive and continue positive. So this keeps that emotional decision making out of your trading. This is what we call 2+2 analysis. If you can see a best friend signal gapping up off the moving averages, above the T-line, above the 50, stochastics coming up and breaking out through this level, what are we observing? We're observing that investors kind of let it drift back to the 50, and then at the 50, that's where they decided to buy. We could see immediately what the strength was of that buy. We get ready for the next wave to the upside. A best friend signal. This is on Sue's. This is on Friday. Your doji, gap up best friend, off the 50-day moving average. What is our probabilities of this trade? More than likely, it's coming back up to the top of the trend channel. So I keep reminding people, this is not rocket science. This is just the graphics that the Japanese rice traders have produced for us over hundreds of years of analysis of what occurs in human nature. All we're doing is learning what those moves are based upon those signals. Your bearish best friend. We recommended this one, and we're still short. When they do a doji gap down, that's your bearish best friend. That's what your trend expectation should be. You stay short until you see a candlestick buy signal. Same thing. Oops, I forget which one this is. I forgot. Oh, JP Morgan. Notice JP Morgan, gap down. There's your bearish best friend. Now, here's the logic that you can utilize in candlestick analysis. You don't have to be a sophisticated technical analyst. All you'd have to do is recognize what's going on in human nature. If they're up here and indecisive and they gap it down, that's pretty much telling you the bears are controlling this move. And then look what's happened right here. We'll get to this chart again later, but there's your bearish left-right combo, which we'll get to. We're going to get to it right now. A left-right combo is very simple. It's a doji followed by a bullish engulfing signal. Now remember, a bullish engulfing signal is a bearish candle followed by a bullish candle that completely engulfs it. But anytime you see a doji incorporated into your signals or part of the signal, it's going to be that much more compelling, let's say. So Here is one of the very few candlestick reversal signals that you don't need to expect confirmation. When you see a left-right combo, for some reason, that is an extremely powerful move that if you were short, you definitely closed out. You didn't need to see bullish confirmation the next day. Or if you happen to see this developing after this setup, you could be buying immediately, whereas most signals you want to see that they're going to trade positive, confirming that signal. So anytime I see a left-right combo, confirmation's not required. You're going to have a high probability you're heading higher. Oh, so this was JP Morgan again. Notice this started your downtrend, wave one. They popped it back up, and this is a very common occurrence. When they pop it back up, you'll be surprised how often they'll pop it right back up to the T-line. Now, why is that significant for us? Because nobody has the T-line on their charts. When we see this happen, the T-line we've already identified as that natural support and resistance level, we know what to watch for if they pop it up to the T-line. If they take it through, your uptrend starting. If they fail, in this case with a bearish left-right combo, that means you've probably got a bearish J-hook pattern, wave one, wave two, wave three is usually the same magnitude as wave one. So again, this is based upon the reoccurring elements of human nature that we can recognize the patterns, we can recognize the signals that are going to confirm those patterns, and constantly put us in situations where the probabilities are in our favor. Caterpillar, same scenario. Look at the bearish left-right combo. There was your kind of your evening star signal. Now they've gapped it down. That was on Friday. Suspect more downside. Oh no, what was that? A flutter kicker signal. Flutter kicker is very simple. Opens here, closes here. The next day they gap it up at or above the previous day's open, but they do a doji. What's that tell us? First of all, it tells us there's been a strong reversal. And what do we know about the doji rule? If it opens positive, they're going to trade positive. So this allows us to get, even if you're a day trader, especially if you're a day trader, if you see that setup and it opens positive the next day, you want to be buying immediately because the probabilities are extremely strong you're heading in this direction. Now, the kicker signal is the strongest of individual signals in the candlestick universe. So the reason we call this a bullish flutter kicker signal is if you took out this little flutter, you've basically got a kicker signal, which is your strongest reversal signal. Same scenario on the downside. You see a candlestick gap down below the previous day's open. If it opens the next day, where do you think your next likely target's going to be? Back down here to the T-line and then starting your downtrend. This combination, if you took out that little flutter, is basically a kicker signal telling you the bull or the bulls are out of the picture, the bears are in control. The doji sandwich is another one that uses that T-line rule. That if you see a bullish candle and then a doji, if it opens positive using the doji rule, this candle right here is usually going to be the same magnitude as this candle right here. And what does that represent? The fact that probably the 200-day moving average is not going to act as resistance. You're in an uptrend. So anytime we see this situation, we have a look at our best friend, close it above the T-line, and then it does a doji type day right here on the 50. And the doji rule says if it opens positive, it's going to probably trade positive. And we know the magnitude of this candle right here is going to probably be the same magnitude as this candle right here. But what else does it also illustrate? It immediately tells us that the 50-day moving average is not acting as resistance anymore. Look for it to go to the next target. Wayfair. There's your bearish doji sandwich. Now there's a kind of high probability expectation when you see a doji sandwich. The trend is usually going to continue after that. Jeff, I can't see the questions on my screen. Has there been any questions that I've missed? Jeff? Anybody? Well, hello, is anybody out there? I was just seeing if there was any questions. My question box is not opening. Well, I was just asking. I usually let everybody ask questions as I go along, but I can't see the question box today.
Yeah, let's see. So the big question that always comes up is, what is the T line? That's one that people are always asking.
The T line is the 8 exponential moving average. And again, a lot of people say, well, why not the 9 or the 10? Put the 8 exponential moving average on your chart. You'll find, surprisingly, extremely often, that prices bounce or resist right at that level.
We also have a question about the stochastics you're using and the moving averages. BJ wanted to know what stochastic settings you recommend.
It's 1233, and somebody was asking. Now I can see the questions.
Oh, okay, good.
Each chart that we looked at, let's go to a chart. This could be a 10-minute chart, a 1-minute chart, or a weekly chart. They all are exactly the same. 1233 on the stochastics, the T line, and all the other moving averages are the same. Now, I should have illustrated as we started that the moving averages that I have on my charts, the blue line is the 50-day moving average. The red line, which is not on this chart, is the 200-day simple moving average. The reason those are on their charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. We don't, a lot of people say, well, why don't you use the exponential or the 50 exponential? We're not using the moving averages to make our decisions. We're using those moving averages to see what everybody else's decisions are, what signal formations are created at those levels. I also have the 34 EMA on my chart, which works relatively effectively. Now, the nice thing about candlesticks are they work. The signals work. Anything else that you add onto your chart should enhance the probabilities of a trend movement. If somebody says, "I'll put the XYZ indicator on your chart," if you put it on and it doesn't seem to enhance your returns, take it back off. I try to keep my charts relatively simple. But the most important one on this whole chart is the T line, this black line. It, again, works as a natural support and resistance of human nature. And if you add the stochastics to it, here's what your probability factor is, that if you see signals in the oversold area and see bullish confirmation, it's the signal that is the #1 criteria. Everything else is just a confirming indicator. Selecting momentum moving stocks. Usually with increasing volume using a 5-minute chart. Thomas, use whatever whatever improves your probabilities. I often have told people that no matter what trading system or who you're following, if you overlay your charts with candlesticks, you're going to have a much more clear indication of what's going on in investor sentiment. No, you don't. I don't use divergences as a top priority. I use what everybody else is looking at. Again, the first criteria is the signals. Then I want to see where it's going to move to. Maybe I'm looking at trend lines that everybody else is watching, or Fibonacci numbers, Bollinger Bands, anything that you can add onto your chart that you know everybody else is watching. You just have better clarity of what happens when it gets to those support or resistance levels. Stupid question. How do you know by looking at the candle if it is opened up or down? Oh, I'm sorry, Kathy. A candlestick chart, a green candle is when it opens here and closes higher. A red candle is when it opens and closes below where it opens. Now, that does not necessarily mean it's going to be a red or green candle. If something gaps up and then closes lower and still traded up for the day, it's going to create a red candle. It's just telling you how the price is opened. And with that information, you have an extremely strong indication of what's going on in investor sentiment immediately. Can you say again what the T-line is? The T-line is the 8 exponential moving average. A lot of people say, well, how do I put that on our charts? You put it on just as easy as you put on the 50-day simple moving average. Whoops. So, I want to go to previous. Series of dojis. If one doji represents indecision, a series of dojis is greater indecision. Then you're looking for this candle to break out. Same thing on the bearish side. If you see a bunch of dojis up here in the overbought area, look for that candle. That tells you there's now been a major change going the other way. Let's see. Why is he ignoring my mean reversion question? Oh, Raj, I didn't see it, number one, because I just figured out how to turn this on. Number two, I don't even know what a mean reversion is. The only time I get a mean reversion is when my wife yells at me. What about a white doji? Just watch the next candle. It doesn't matter what the color of the candle is. A doji represents indecision, so it's going to be a very small body. So far, I found the doji spinning tops at points where the price is extended. Jim, it's probably even greater than that. The 3 EMA just works in conjunction with the T-line, the 8 EMA. The further away you move from the T-line, the more effective the 3 T-line becomes. A doji on the weekly, on the NASDAQ, I don't have the charts up, or the index is up. It's to the 21 EMA. Again, Raj, put whatever you want on your chart. If it benefits the confirmation of candlestick signals, keep it there. If it doesn't, take it off. And again, the most important factor on any chart is the signals themselves. Again, everything else is just a confirming indicator. The McMuffin. The McMuffin is a combination of 2 signals. If you see a morning star signal, which is a big down day, a doji day, and then the third candle closes more than halfway up this candle, that's one of the 12 major signals, your morning star signal. It is a reversal signal. Then if it's followed by a doji sandwich, which we know that doji sandwich implies more upside. So now we have a reversal signal that implies more upside, a doji sandwich that has more upside. So we call that a morning star signal followed by a doji sandwich, or your morning sandwich is the McMuffin. You combine that with a combination that is closing above the T line, the probabilities are you're in an uptrend after that. Anytime we see that morning star signal, doji sandwich combination, that's just a double whammy that that you're now in an uptrend. You use the slow stochastics, I think. Oh, I can scroll up. This is why I'm missing the. Okay, now scroll back down. If I've missed your questions, only because my system is screwed up today, and do you monitor your trades throughout the day, or do you just put in the orders and ahead of time? Daniel, because I'm sitting at my desk all day long, we've got the Candlestick Forum chat room. We've got usually a couple hundred people in there, and it has people that have been there for years that are very good at identifying the good signals and patterns, number one. And number two, if you're just learning candlesticks, it's an excellent place to be asking questions or asking questions about specific stocks to see if they're doing patterns. We also have an option trading room that utilizes the reversal signals for specific option trades. So I sit here. I'm here all day long because I monitor the chat rooms. I'm putting out recommendations. So I'm watching my trades. Now, if you're somebody that can't be there at the open, that you're driving to work, or you can't be at the screen, you can look to see where you might put your stop or buy stop. That if I saw this and then saw this, if I'm heading for work, I might say, if it trades through this level, I want to be a buyer because that's confirming my signal. So obviously your trading strategy has to be acclimated to what your schedule is. What are the red and blue stochastic settings? Oh boy, I don't know what the red and blue are. One of them's yeah, I don't know. I just put in 12, 3, 3, and that's where they come out. Yeah, these slides will be available. Can we use RSI? Yes, use whatever you want, or even put both of them on down here. Use whatever helps you identify when the trade is working. Oops. Hold on, I'm still sliding down. May have already asked you, but what's the main time frame that when you're trading? Jason, if I'm a swing trader when it comes to stocks, that means I'm looking at the daily chart. So very simple logic. If I see a candlestick buy signal on a daily chart, I stay long until I see a candlestick sell signal on the daily chart. If I'm trading intraday soybeans off the 10-minute chart, same scenario. I'm buying when I see a candlestick buy signal on the 10-minute chart and sell when I see a candlestick sell signal. How do you use options to wait for the breakouts? And how do you mitigate time decay? Francis, that's a completely different question as far as time decay. However, if I saw, let's see if I can, if I saw this setup and I saw this doji, I will probably, that's not even a good chart. If I know what the next day should be based upon, let's say, a doji sandwich setup or a bullish flutter kicker setup, I might buy half a option position at the close of the doji with the anticipation that it's going to open positive the next day. If it does, then I'll add the other half a position. Then, as far as I don't know what the other ones, how do you use options to wait for breakouts? Francis, we're just looking at the doji today. We've got other patterns that the Japanese rice traders have identified for us, like fry pan bottoms or J-hook patterns. These are all high probability movements of human nature that we can utilize. So let's say, for example, this was a stock chart that on this day, I might add half a position with the anticipation I'm looking for the doji sandwich McMuffin move of the next day. Do you trade? Oh, I trade all of the, Jason, all of them. I was just using soybeans as an example. I trade wheat, corn. I trade lean hogs, live cattle, the dollar, the British pound. Now remember, there's only about 30 different things you can trade in the futures. I can go through all 30 of those charts at about 2 seconds a slide to see which ones I might be trading that day. Very simple scans. And Thomas, that's what Jeff will probably be demonstrating here when I'm done. We've been working on putting all our information onto MetaStock platform for years now. So you can do all your scanning right off the MetaStock scanning process. Whoops, I guess I was at the end of the slideshow. So this allows you to be prepared that anytime you see that best friend signal, you can start buying. Anytime you can see this, this is called a dumpling top. This is the opposite of a fry pan bottom. And what do we expect from a dumpling top? A slam to the downside. A fry pan bottom would look something like this, where it's a rounding bottom. We're expecting that big slam to the upside. So anytime I see a best friend in the oversold area breaking the resistance level of the T line after a series of dojis, where's my next likely target? Probably back up to the 50 or basically fill in this gap. Now, will it get there? Don't know, but that's my probabilities. And what tells me to sell? When it moves up and I see a sell signal, whether it got there or not. So there's your left-right combo and a gap up the next day. Now, I've heard many people say, oh, my investment advisor said, stay away from gaps. You don't know what's going on. Candlestick signals and gaps are your best friend because you know what's going on. If we see a candlestick reversal signal and they gap it up the next day, what's that telling you? Not only have they reversed, but they want to get back into that trade with great enthusiasm. So there's your left-right combo right off the 50-day moving average. Why is that relevant? Because you can see exactly what investor sentiment was doing once it hit a major moving average. Does candlesticks help with options? Definitely. It tells you when you should be buying options because of the stock price movement. What about unusual options? I don't know. Eric, this is your 200-day moving average, the red line. This is your 50-day moving average. Is that for me, Jeff?
Feel good?
No, I think we need to just mute a few people here. Let me get on top of it.
Okay.
Should be good now.
All right. The 50-day moving average. Again, these are the moving averages that every major money manager uses around the world. We're seeing exactly what everybody's decisions are at those levels. The 34 works relatively effectively, this gray line. And then the T line. I could take everything off this chart, use stochastics and the T line and the candlestick signals, and trade very effectively. Anything else that we add is trying to improve the probabilities. If somebody says put the 100 on, it seems to work. Well, if I put it on and it doesn't work very well, I take it back off. But this is where you can see exactly what's going on in human nature, where they're buying at levels, or you can see what breakout levels. There's your bear or your bullish best friend, a doji gap up through this. What's that telling you? More than likely your upside still in progress. Left-right combo. This is what we call a double doji setup. This is a fry pan bottom. And how does a fry pan bottom break out? In this case, with one of your strongest signals. Your best friend signal off the T line through the 50. That tells you there's now a new major change of investor sentiment in that price trend. Fry pan bottom, there's your McMuffin. There's your expectation, more upside. There's your left-right combo right here at the 50, breakout through this level. What can we anticipate? Wave 1, wave 2, going into wave 3. So again, this is not rocket science. There's your left-right combo gap up. What do we do with this one? We start buying if it opens positive after this. Morningstar signal. So anytime we see a doji in the oversold area, we can get ready to start buying with great enthusiasm, because we know the probabilities are, if we see bullish confirmation, they've hit bottom and starting to trade higher. Or if we see doji at a resistance level and they gap down, that tells us we're probably heading down. All right, I was hoping that I had put the market indexes on here, but as you can see, whoops, that was it. Okay, let's see, previous. Anytime we see dojis in the oversold area, again, this is just one signal of the 12 major signals. Now, the indicators, or the confirming indicators, work just as well on with the same confirming indicators. Anytime we see a kicker signal, look how this opened here, closed here, and gapped up and went the opposite direction. There's your kicker signal. So again, this is all coming from the person that was the worst investor in the world. And when candlesticks came along, I started turning, it was just simple logic. Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. That was me. I was even a stockbroker. So I would often ask myself, how come every time I start buying, it immediately turns around and goes the other way? Or how come when this news is so crappy, I sold my position, and as soon as I did, it turned around and started back up? Well, what you've got to kind of realize is, who is buying when you're selling? It's the smart money. So I wanted to start getting on the side of the smart money. Are you using a scanner every day to? You can, yes, and that's the same process that Jeff will kind of illustrate. So I will stop here, and Jeff, I'll let you explain the MetaStock's scanning process, or our alerts.
Okay. Yeah, absolutely. Steve, just one quick question and a couple of comments. One question that we had that I just wanted to be sure is, you can tell this as a YouTube handle, Dog Agility and Dog Training Psychology wants to know if, with a doji best friend, if you have to gap up above the wick high of the previous day or just above the close.
It doesn't matter. It becomes a best friend when it gaps up above the high of the wick. But it's still the same analysis. Even if the wick is, let's say, substantial, and then after the doji, they gap it up, but it's still within the wick, it's still telling you the same thing. The bulls have stepped in with aggressiveness. If they gap it up above the wick, I mean, it's just telling you that's that much more strength to that signal.
And I'm sorry, one more question. We have a lot of questions about what time frames you like to look at.
Again, if I'm day trading, or I'm saying, if I'm swing trading, I'm using the daily charts. So if I was buying on this day because of the kicker signal, I'm getting ready to sell when I start seeing sell signals. Again, using the same criteria that if you're starting to move too far away from the T line and you start to see sell signals, where do you think your next target's going to be? Back to the T line. You can always then see what type of pattern setting up. If I'm trading soybeans or live cattle, or I'm usually trading the dollar, crude oil, whatever, I'm using the 10-minute chart. But my first analysis is, which direction do I think this trade is going? If we're in an uptrend, I can see that the crude oil is in an uptrend. I'm probably going to be day trading it to the upside, or my orientation using the 10-minute chart, trading the bullish chart setups during the day.
Perfect.
Thank you. Any good trading books, Thomas? I've written 3 books on candlestick analysis. I should get you a batch of those books, Jeff.
Oh, cool. Yeah. I do have the one that you wrote about Santa Claus.
Okay. I've written 3 books over the years. And again, I'm not a prolific writer. I just wrote it in very simple terms that people would understand, because everything with candlestick analysis is just common sense put into a graphic depiction.
Okay.
Okay, I'll let you go ahead, Jeff.
Perfect. Couple of feedback, or a couple of comments. Let's see how long it takes Kelly to hit the lights. 1, 2, 3. There you go. All right. I think I need to adjust the exposure just a little bit down. Anyway, just a couple of feedback. Rajesh earlier said Steve is fabulous. Cassie says that I think it's a her, or it also might be Casey, I don't know. But she said her process has improved immensely with your process. So, and then I think Eric Kelly said it best, where he said Stephen is a meta rock star. So I appreciate all the work you've done with us over the years. I have to say that just what I've learned from you traveling around has been extremely helpful for me too. So I appreciate everything you've done. Let's show this add-on real quick. Steve, thank you for coming today. Very, very much appreciated. I also really appreciate everything you've done for MetaStock over the years. A great partner. Really appreciate all the work. So with that being said, thanks for coming, Steve.
All right. Thank you. Thank you, everybody.
We will see you again soon.
All right. Thanks.
Cool. All right. Let's go ahead and get switched over here. Make presenter. Show my screen. All right. And then I just want to show, we don't have a lot of time. In fact, we're almost out of time, but I want to show how this looks on a chart. You guys know that Costco is a stock I really liked a lot last year. It's kind of not had the same good fortunes this year. But I wanted to show you what the patterns that we developed with Steve Bigelow look like on a chart. And I'm going to kind of switch a little bit back and forth between PowerPoint and what we're showing here. So right here, basically, here's a picture of the box. We developed the box, or the box. We did develop the box. We developed the patterns with Steve. I think it was like almost a decade ago. We improved them and kind of put in some more patterns of some more of the things that Steve was talking about just a few years ago. That's where we're on the second version. This has been one of the most prolific add-ons that we have for MetaStock. It's great. I'm really proud of like the work we did. And I remember a lot of sessions where we were in kind of like a dimly lit conference room with a projector on, and we had Steve on the equivalent of what was Zoom that day, and just kind of going through patterns and getting everything perfect. And I'm really, really proud of the product that we created. We had it reviewed positively in Stocks and Commodities magazine a couple times now, and both by Dennis Peterson and Barbara Starr. They both really, really liked it. It's also, and I think I mentioned this already, one of the most best-selling add-ons that we've had. And certainly because Steve does a really good job about talking about it. And as a lot of people have said, it's something that's been helpful for them. So in the add-on, basically we identify on the chart and we can scan for all the patterns you see on the screen, like the Doji best friend, the Doji at the top, and you can read the rest of them. The way that actually appears in the chart, I've just got that chart of Costco here. You can see all of those patterns. Whenever one of them actually forms on the chart, you'll see that it says bullish engulfing, the hanging man, the bullish engulfing. All of them are labeled. All 20 or 30 of them are labeled. Right here, we've got a left-right pattern. Here we had a bearish engulfing, signifying that we might start kind of going into a bearish territory. Here we had a bit of more of a left-right bullish combo. You'll notice over here we've got a commentary window right here. It's basically designed to kind of help you understand and know what the patterns are doing. So by default, it's on the very end of the day. I'm going to move that back to this bullish engulfing pattern. And you'll notice, I'm not going to read this whole thing just because of time, but you notice it's actually going to tell you exactly what that pattern is. It's going to give you some enhancements. Also on this pattern, there's a bullish engulfing. It's going to explain in English what that means and potentially what you should be looking for with it. So I love the commentary. It kind of identifies everything. What we call the expert advisor also displays all of the symbols on the chart for it as well. And if I want to scan, a lot of people asked about scanning. If I want to scan for any of these patterns, I can come into like what we call our MetaStock Power Console. We call scanning explorations. Somebody asked me why the other day. I think it was because maybe Steve Akalis was a fan of maybe Indiana Jones. I don't know. But that's just what we call our explorations. What I can say, though, is if we come down here to the CPS ones, you're going to have all these different patterns. So if I'm looking for like Doji at the top or Doji best friend, you can see that this is one of the patterns it's going to scan for. I can actually just select it right here. And I can come down here and we'll just do a list real quick. Let's just do the index constituents. We'll do the S&P 500. I'm going to start an exploration. MetaStock is running through this on a daily basis, which is an option that's set right here. What it's going to do is it's going to go through all 500 S&P 500 stocks. And if there's any of those 8 or 9 patterns, it's just going to list them on the chart for us. So this is a great add-on. You'll notice right here, it's rejecting about 98% of the stocks. That means for every 100 stocks that you're looking at, about 1 or 2 is how many, or actually 2 or 3, is how many you're going to actually look at. So MetaStock does a really good job of kind of just cutting out all the noise. What we want to focus on as traders is we want to be able to focus on those stocks that have an opportunity. The scan's already done. It's already through 500 stocks. And right here, you can see all of these. If you just look at this column, it says LR Bull, and every single one of them is a 1. That means every single one of these stocks have a left-right bullish pattern today. Coca-Cola, Dominion. Of course, we could look at them, we could read the commentary, we could kind of learn a little bit more about why that is. But it's a great integration to MetaStock. And, you know, I have 8 stocks instead of 500 that I want to look at. And again, I can pick my favorites. I can decide if I want to trade. Scanning is one thing that I use every single day, just the way I trade. It's very, very helpful for that. So let's go ahead and we're 5 minutes over. Again, here's a list of the patterns that are identified. These are the multiple day patterns. Here are the single day patterns that you can identify. And all in total, the candle profit system, it's going to include 6 explorations, your expert advisor, 36 patterns. It's 36 patterns. I did add that up and put it in the PowerPoint because I wouldn't remember it otherwise. All of this is actually just a one-time cost. You pay for it one time. It's normally $4.99. We do give you a money-back guarantee on it for 30 days. If you don't like it, you can return it. Here at the Summit, we're going to do it for $3.99. If you don't have MetaStock, I'll just say this: MetaStock's been rated the #1 software program. in its price category for like 28 years, like straight. It's an amazing program. We just keep making it better. So we'll give you a free copy of that to evaluate as you do your free trial or your money back guarantee with Candle Profit Systems. You can give us a call at 800-882-3040. If you have questions, if you want to get more information, you can visit us at metastock.com/sales-chat as well. So we're off to a little bit of a late start, and we are running a little bit late, but we do also offer this as part of a complete package. Today, we're going to talk about CPS. We're going to talk about the GoNoGo charts next. We're also going to talk about our AI, the Fulgent Artificial Intelligence platform. We're going to offer all three of those add-ons, a subscription to learnmetastock.com, which has hundreds of really cool videos up there. We're going to give you Unleash the Power of MetaStock, which is a training course that you can go through, and 2 years of stocks and commodities. Normally, the cost for everything, $2,839. Here at the show, it's going to be $1,346. And again, most of that comes with a money back guarantee, so you can evaluate it. The Learn MetaStock subscription is a subscription, so you just can cancel it. The Fulgent AI is a subscription, so you can just cancel it. But for the most part, it's going to include a money back guarantee. So you can call us 800-882-3040. We're going to have people here all day to help answer questions and get you going. You can visit us online and sign up for this at metastock.com/summit deal, and you can do metastock.com/sales-chat as well. So there you go. In any case, there are a couple of slides that I have in here that I don't have. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. I really appreciate kind of the work that they've done over the years with us. We're also now sponsored by CMT, the CMT Market Association, a very, very well-reputed organization. They are sponsoring the event, and we appreciate that as well. Since we're running a little bit low, I'll make sure I have my slides ready for next time. But let's go ahead and kind of get to the next presenters. The next presenters are a duo, a dynamic duo, you might say. We've got Alex Cole and Tyler Wood. We just finished up with creating their GoNoGo charts for MetaStock. They've been received extremely well. We absolutely, I really like them. The customers that have tried it so far have really liked them. I really like the approach that they've got and kind of the way that they look at charts. I think they're actually pretty fun to listen to as well. So there you go. Andre says, does it scan on additional markets? We have about 200 exchanges. It'll scan on anything you want to, Andre. Well, just about. I think Reuters covers or Refinitiv covers like 95% of the global market cap. So if you're, if you're like in London and want London stocks, or India and want Indian stocks, or Saudi, just about anywhere you want, we're going to have the data for you. Or we're going to include that with like either the trial or the extended trial. Sanjay says, I use 8 EMA and 10 EMA for intraday, and both give me really good results. That's great. So, okay, let's go ahead and get Tyler Wood and Alex Cole on here. How are you guys doing?
Doing very well, Jeff. How are you today?
Good morning, sir.
Yeah, it's good to see you guys. We're running a little bit late. I'm sorry we're starting you a little bit late. We ran into a technical hiccup, but the good news is it's out of the way. So in any case, which screen do I need to, who do I need to make the presenter here? Is it Alex?
For me, sir, if that's okay.
Yeah, no problem. I just need to know who to right click on, that's all.
Perfect. And let me know when those charts are up.
Perfect. They look good. I'll get out of the way. I'll let you guys run right away since we're.
Thank you so much, Jeff, and to the whole MetaStock team. It's really exciting for Alex and I to be with you on this Saturday morning, Saturday afternoon, Saturday evening, depending on where you are in the world. But I really appreciate that everyone who is here is investing in themselves to develop a more sophisticated trading plan, to step back from maybe the emotional turmoil of choppy and volatile markets, and just sit back, grab your cup of coffee. Alex, I've got mine. How about you?
Always.
Always. And we're gonna take you through quite a few slides. First, I want you to bear with us. If you've seen some GoNoGo charts presentations before, give us about 4 or 5 slides. We're just gonna make sure we all have a shared common understanding about what we're talking about when we say trend following investment strategies. And then we're gonna get into some current examples from the markets and show you exactly how these tools work. And if that sounds good, let's dive right into it. Many of you might be familiar with this name, John Henry. He was actually born in the South to a soybean farmer, and in 1981 developed some really sophisticated, systematic trend-following investment strategies. The reason you might know about him is if you've read the book or seen the movie Moneyball. This is a gentleman who really understands statistics and evidence-based investment strategies, evidence-based player selection, as they did with the Boston Red Sox, and also now billionaire investor who owns half the Liverpool Football Club and a few other pieces. But what John says is that if you could take the emotion, the would be, the could be, or the should be out of your investment process and look instead at what actually is, and then be able to quantify that, you'd have a huge advantage in the marketplace. That is what GoNoGo charts are trying to do. Remove the emotional elements from your trading decisions and keep you on the right side of the trend. All right, let's talk a little bit about expectancy. Hopefully this is not new news to everybody. Hopefully it's a pleasant reminder that you don't always have to be right in order to be profitable over time. I'll say that again. All of us will have losing trades, and that's okay. And Alex and I have spent the last 15 years or so working with institutional fund managers, traders, and research analysts, the best in the business, the largest mutual funds, long short equity hedge funds, commercial hedgers, you name it, folks who are very, very accomplished in their process. And they know that even the best tools, the best analytical devices are going to be right maybe 60 to 65% of the time. So I want you all to raise your hand. Don't worry, it's a webinar, we can't see you. Raise your hand if you've ever had a trade that turned into an investment, right? You put your position on and it started to work against you, a couple of percent, maybe 4 or 5%, maybe 10%, hopefully not as much as 20 or 30%, but it's trading against you. And you've decided, you've got such conviction in this trade that, you know, it's going to come back. And I won't consider this a short-term trade anymore. This has become an investment. We're all guilty of it. And it's not your fault. A lot of cognitive psychologists like Amos Tversky and Daniel Kahneman have written about this idea of prospect theory, the fact that humans are much more eager to lock in a gain rather than to recognize a loss. The pain of loss is much harder to deal with than the joy that we get from profitability. So our trades become investments because we cannot cut those losers short. We cannot quickly get out of positions and recognize that, hey, we were wrong. No problem. It's no problem to be wrong. Because in the 4 outcomes, right, we can have a small win, that's great. A large win, that's what we're all looking for. A small loss, no problem. Or a large loss. And it's that 4th option that we're trying to eliminate in our investment account, because that's the risk of ruin. So the expectancy formula, what we're looking at on screen right now, shows us the curve of profitability. All trading strategies along this curve are going to break even. And what this means, if you look at the percentage of winning trades, that's our x-axis. All the way out here, we could have 80% winning trades, but really not be that profitable on each of those trades. We would still break even, but down here, we could be wrong 80% of the time, meaning that only 1 out of every 5 trades that we put on works in our advantage. As long as the profitability of those winning trades is 4 times larger, outsized of our losses, we will break even. So the goal then for our profitable systems is to be out there in the bleeding edge of more winning trades and larger profitability size for those that work. That is a simple but not easy process to deliver, okay? We understand that saying cut your losers short and let your winners run, right? How poetic. Really difficult to execute in real time, and that's what GoNoGo charts are going to help you do. So let's talk a little bit, Alex. I know for both you and I, we've had some great mentors in the business. Yourself working with Bloomberg for all of those years and working with institutional investors. I've spent the last decade at the CMT Association. Both of us, in different capacities, got to know a gentleman named David Keller, who at the time when I first met him a decade ago was the head of research, technical research at Fidelity Investments in Boston. He was also learning to fly a plane. And Dave, at many CMT Association conferences and events, just like this one that you're all attending today, talked to us about the importance of routine and checklists. So as he's learning to fly a plane, they spent all sorts of time on the tarmac going through what could possibly go wrong and making sure that you had a plan to approach that. As Dave declares, one you're 10,000 feet above the earth in a little tin can and the flight instructor just kills the engine. You really need that checklist, because it is an emotional moment that knows that the plane lurches forward and you panic. You revert to your lizard brain, to those instincts, and you often make really poor judgment calls. When it could be something as simple as, your knee kicked the fuel gauge and your mixture is too rich, that killed the engine. That's a simple fix. But if you are panicking, you will not understand how to quickly solve that. Now, the same thing happens for investment decisions. And in a technical analysis perspective, you might have a checklist that includes a number of really important indicators. You might look at RSI and momentum. You might look at trend following indicators like Donchian channels and moving averages, and maybe even Bollinger Bands. You want to understand volatility. All of those are really responsible uses of the technical toolkit. Unfortunately, when you put together a great process and you have that checklist to identify trends and participate in those moves, and then to identify when they have ended or bent and you need to get out, the problem is you end up with a chart that is so crowded, so full of lines that you can't see price anymore. And we all know that the redundancy or even contradictory nature of some technical indicators can create analysis paralysis. That's what we want to avoid. We want to simplify our charts. We don't want conflicting information. In fact, we want all of the information of those indicators, but without all of the distraction and the noise on our chart. We just want the signal. And so, Alex, why don't you talk us through a little bit about what you created with the GoNoGo trend system?
Yeah, so that's exactly where we were coming into issues across the early, middle, late part of my career working with Bloomberg, like you said, with all of these sophisticated analysts. And the example that I always give is that I was working with somebody who would be on the sell side, let's say in research, and they would be coming up with a really good system. And like you said, there's nothing wrong at all with having a really strong checklist, but it's what it does to your chart, and it leaves you almost paralyzed to make decisions. And she would be working through her checklist, and we'd be talking about Keltner bands, and we'd be talking about all of these incredibly useful indicators. But then she would say that the problem she then had was trying to explain these decisions to the buy side. And so it can be from somebody who's really new to technicals, getting overwhelmed just in the learning process, all the way up to the most sophisticated analysts trying to either understand their own charts without getting distracted, or trying to explain what they're seeing on the charts. And I think we're going to run through just a really quick example of how somebody might build a solid technical process, just so you can see how that would be done and then what that does to your chart. And the first thing anybody's going to look at is just visually, can you see price moving in any kind of discernible direction, right? Is it moving from bottom left to top right? Yes, there's a trend there. So you're looking for higher highs and higher lows. Now, this is the most important part of technical analysis in our view, working with sort of really institutional trend following investors. If you can find the trend, then you can profit on the majority of that move. And it, like you said earlier, simple but not easy. So what we're trying to do then is automate that process to take the emotions out of it, to give us a systematic approach that identifies trends. So we can try to find highs and lows using an indicator such as Donchian channels. And if you're familiar with the turtle traders, I just blew my mind. That story was one of my most amazing introductions to technical analysis way back when I read about Richard Dennis and the turtle traders. If you haven't, look it up. It's fantastic. His idea to teach people how to trade or grow traders, just like he'd seen in these turtle farms on his travels around the world. And this was what they used as their main entry. They used Donchian channels, which is really just identifying higher highs and higher lows, or lower highs and lower lows over a look back period. So it's automating that process of finding higher highs and higher lows. And if you look towards the left of the chart, you see higher highs being made and that red line moving higher. And if you move on from that, you're going to put something else on your chart. Maybe you put Bollinger Bands on there. You look to see if the bands are narrow when that new high is made, right? We are under the impression, or we learned from John Bollinger, that if the bands are narrow, we would like to trade in the direction of the break. And that's that idea of breaking out of reduced volatility that we'll get to in a little bit. You might then throw on a simple moving average, just from the very nature of an average. So simple, but so beautiful. If price is trading above an average, then price in its most recent bar is more bullish than it has been, because people are prepared to pay more for this security or asset than they were over the last number of days. So now you're looking towards that bottom left of the chart, and you're seeing that you've got a new high being made by Bollinger. You've got price above its moving average. You've got it breaking out of a tight Bollinger Bands. Now you look to volume maybe, and you see that volume is relatively high in the area where you have that breakout happening. And then you can move on from there. You can keep adding things to your chart. You've got the moving average. You've got MACD, moving average convergence divergence, which sort of blends momentum and trend following information. And now you're really starting to get bullish towards that left quarter of the chart, because you've got this confluence of events all adding up to say that perhaps we've identified a new trend.
Now, when Alex spent years and years perfecting these tools at the right elbow of great traders, portfolio managers, and research analysts, what they were all after was the simplest concept, which was, if I'm in a trend, I want to own it. I want to be patient enough to stick with those larger time frame moves, make sure that my winners are outsized, and that I have the wherewithal, the emotional discipline to stay with the trade long after it reached a profit target. After it's made a 20% move up, it might double from there, right? And that's the part that is so difficult about being a patient investor. So GoNoGo charts borrows that name from NASA or military exercises, where you have a simple pass-fail system. And in the case of space exploration, you don't launch a multi-billion-dollar space shuttle unless the conditions are favorable. And with GoNoGo charts, that complete solution, much more information than what we were just seeing on that complicated chart, packed into a blend, a representation of all of that trend information with a simple color-coded bar chart that removes all the analysis paralysis, keeps your eye focused on price action itself. And we're going to talk about how important that is in just a minute. But from these better charts come better decisions, right? We're going to be able to participate in the majority or the meat of that move as trend following investors without any fear of being able to cut our losses short when it switches into that no-go. So quick review, we've got aqua and blue colors, the weaker and stronger form of a go trend or a bullish environment, that whole technical environment coming together in a composite indicator. And then we've got pink and purple suggesting the no-go or the bearish conditions. Again, pink being the weaker form of bearish, purple being the strong form. And then right in here, typically at trend reversals, color change, we'll see a few amber bars. Alex and I are big fans of the work of Jesse Livermore, and what a fascinating life and trading career he had. He has a famous quote that there's a time in the markets to go long, time to go short, and then there's a time to go fishing. And what he means by that is that when markets are chopping around and range bound and trying to find directionality, you don't want to be over trading. You don't even want to be near the markets. So those are our go fish bars. And so with that understanding of just the concept of trend, you could stay with profitable bullish trades, and you could cut short bearish or trades that have worked against you. Now, Alex and I are really proud of this work and this new company. We've been doing this with institutional investors for a very long time. But thanks to Jeff and the team at MetaStock, we're able to bring these same concepts and tools right to the self-directed individual investor. We really appreciate all of you being with us today at this conference, taking time out of your Saturday. And so there is a free template within MetaStock to just understand the GoNoGo trend. We want to give that away for free, but do us a favor. When you're using it, give us some feedback. Let us know how that's worked for you, what asset class you're trading, what time period you're trading. We really want to get to know how folks are using this tool to their advantage. And then let's keep going, right? We talked about why price is so important and the narrative and the storytelling that happens. It's really been on full throttle this last couple of weeks. But we know that can be a distraction for all of us. And so Mark Abraham, another fantastic and very successful trend following investor, said that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. that consensus is revealed by analyzing price. And so, Alex, I know you've spent a lot of time with the old classics, the Edwards and McGee of technical analysis. And so for you on a go-no-go chart, how easy is it to identify support and resistance or some classical patterns?
Yeah, and I absolutely love this quote. It may be my favorite quote. I mean, it's truth to the technician, right? The consensus is revealed by analyzing price. And that's really all, like you say all the time, it's never restated, it's never an estimate, right? You have price, and that is telling you what the market is prepared to pay at that time for whatever it is that you're looking at. And so it's so important. And I wrapped myself up in complicated charts for years, and then would sort of have to have, a separate process where I did my Edwards and McGee traditional technical analysis. But the point, or one of the goals of creating GoNoGo charts, was to be able to get the value out of these innovations in our industry, these technical indicators, get the value out of all of that, but still be able to look at price and understand the dynamics of supply and demand that all plays out on the chart. Key levels, support and resistance. Is price making a new swing high? Any of that kind of understanding of what's happening in the markets. You want to be able to see, no matter what other technical information you're trying to get.
I think in the last couple of weeks, we've had some stellar examples, and I know we're going to look at some charts here in just a second, but just yesterday, Tesla down 10% after beating fourth quarter earnings estimates. And I'm not here to bash fundamental analysis or the folks that do all of that really important work. Understanding the company whose shares you want to own is very important work. And I agree with a lot of what that discipline is trying to assess. However, you only get paid on price. And so Alex and I have a lot of clients who have a really robust fundamental discipline that they are relying on for their investment decisions. But they do not pull the trigger. They do not take an investment until there's confirmation from a trend perspective. And I just think this Mark Abraham quote really sums that up. So let's do a few together. Quick reminder, the colors that we're looking at in a go-no-go trend chart are really, really simple and straightforward. So let's dive into a chart of Apple.
Yeah, so
and
this
Alex, what a week it has been.
Yeah, certainly has. These are just a couple of examples to get you thinking in the way that we hope to do it. With very, very quickly right now, I know that the market's undecided. We've had Apple's been a great start technically for us over the last year or so. We saw nice go trends. We saw, what you could suggest there. You're seeing a double top. It's very, very close. Those two highs towards the right side of the chart. You can see a neckline if you can visualize drawing that neckline on there, and then you can see the no-go dropped. And I'd wager that is just about hit its target of a measured move from the height of that double top. And then now you can see this amber bar. This is a go fish bar, meaning that this no-go trend that it fell into is now uncertain. It's being sort of disputed by price action. And if you also notice, you'll see that amber bar is nudging right up against that neckline, now finding it as resistance where it was once support. So we know right now what's happening from a technical perspective. We can also see what's happening from a supply and demand price action perspective. But we're going to be very curious watching Apple as we go forward in terms of what happens next. Can it get back out of the amber go fish into a go trend, or does the no-go resume and take hold?
Absolutely. And we're going to talk about many ways in which you could optimize your own trading strategy. But we're starting just with the concept of trend, and we're going to get to the other tools that really round out the suite of go-no-go charts. But before we get to that, I think it's important to say that we've got folks on this call who might be trading the Sensex or the FTSE or US indices. You might not be trading equities at all. You might be looking just at commodities and futures trades. You might be a currency trader. Go-no-go charts, like any good technical indicator, is going to work across all asset classes, but it also works across all time frames. So let's take ourselves back to Technical Analysis 101 for just a second. Our old pal Charlie Dow, 130 years ago, was talking about how the market moves in 3 distinct time periods, right? And that the fractal nature of market trends or investor behavior is going to follow these 3 basic time periods. So the primary trend, he was a nautical gentleman, and he talked about this being the tides of the ocean. This is unflappable. the broad bias of the market over long time periods is going to be really strong, and it's going to be sustained. But along that primary trend, you have a secondary trend, reactions to the macroeconomic factors, reactions to the fundamentals that are coming out. And that secondary trend is going to trade above and below the primary, right? We're going to see price action that is counter trend or resurging in the direction of the trend. And then he also talked about the minor trend. And this is what he compared to just the ripples on the surface of the water. So we've got tide, waves, and ripples. And you can pick whatever time frame you want to trade in. And that's the beauty of GoNoGo charts and really technical analysis broadly. We're not here to give you a single trading strategy or to tell you what your risk parameters or time horizon should be. The charts are going to work the exact same way on any time frame. What we would encourage is that responsible investors and the most sophisticated traders that we've worked with are going to look at a multiple time frame perspective. They want to know what that primary trend is doing and then be able to trade at perhaps lower periodicities to trade in the direction of, or a mean reversion strategy against the direction of the primary trend. So let's look at a couple of examples of GoNoGo trend on different time frames. Here, we're looking at that same Apple chart, but on a weekly basis. And Alex, what jumps off the page to you here?
Yeah, I think you and I both always tend to agree that there's always a lot of panic in markets, and we like to step out. I think it's one of maybe the most misused technical sayings: "When in doubt, zoom out." Right? But you know, the idea is that if you pull back on that Apple chart, then the trend is in place on a weekly basis. Now it's weakened. You can see the aqua bars there, but it hasn't broken. So you know, there could well be a lot of money managers with positions in Apple that are looking for positioning up or sizing up into positions if the daily trend comes back, because they know on the larger time frame the trend is still a go. So you know, that might be you, that might be your risk horizon, that might be the way you trade. You might be looking at the daily for your trades, but looking at your larger time frame as your overall market bias and saying, well, right now, you know, Apple is still in a go trend, perhaps there's a buying opportunity. Then when you go to that daily chart we just looked at, well, you wouldn't do it yet, right? Maybe you wait until you see the bullish confirmation, you wait till you see that go back into a go, or maybe you're more aggressive. Maybe you do take the amber go fish. Again, that's your strategy, that's the way you trade. But the daily chart will tell me as somebody with a position in Apple who's looking maybe on a longer term to add, that I'm not going to add when it's a no-go, right? So you can, you know, or you know, you could be on a completely other end of the scale doing something else with Apple, but the larger time frame, still a go, daily, amber, go fish. But if that happened to be your perspective, you could then maybe step down to a 60-minute to look for an entry that is a good entry, you know, get a better entry than waiting for the daily to fully return to that go trend. So if you're long-term bullish, that could be your opinion. You try to stay away from opinions, but if that's your market perspective, and then you see these selling conditions on the daily, then you might say, okay, that's an entry point, that's an opportunity for me. Go down a time frame now to the 60-minute, and you can see that we just entered a new go trend on the 60. So that's how some of the people that we work with will put together these time frames to give them a complete picture that, you know, will benefit them as they do their work.
Absolutely. Now, we've talked about multiple time frames. Let's talk real quickly about multiple asset classes. And both Alex and I have had the great fortune and opportunity to spend some time with John Murphy, who's a CMT charter holder at many CMT Association conferences and events in the past. And what we're looking at here is not necessarily that all of you are going to trade across all asset classes, but even if you don't, think about fishing where the fish are. We want to look at trends across asset classes. And even if you don't take advantage of a move in the commodity space, you would understand that there's a lot of information from the credit markets, from commodities, from currencies, and what that's going to do to the equity space. So if we're looking at GoNoGo trend across all asset classes, we can get a complete perspective from a technical analysis standpoint across all asset classes on a global basis. So let's run through these 6 real quick, Alex.
Yeah, so simple as just pulling up a multi-chart layout and sort of saying, okay, equities are in a strong no-go. There's a ton of volatility, huge rally Friday, but trend still a strong no-go. Treasury prices, these are treasury prices, obviously not yields, are in a no-go trend as well, but slightly weakening at the end of the week. You see the pink bars. oil's been that's where the money's been for the last couple of weeks. And so we see oil in a strong go. If you move to the bottom left, Bitcoin continues to struggle in a strong no-go as well. As a new low was made just about a week ago. Gold keeps trying. You can't fault it for trying. But obviously it's been shopping around and nobody's friend for a couple of years, but tried to become a flight asset type of safe haven and fell back now into amber go fish bars. So an interesting moment here. And then the dollar was an amber go fish, but I think the most recent bar there is peeking into a go territory. So we might have to just update that one. But the dollar's strengthening in the short term, but we'll see what happens with inflationary pressures as the year takes its course.
And again, this is where narrative gets us into trouble. And I'm not here to offend anybody who is particularly permabull on gold or a gold bug, but we know that the narrative is in an inflationary environment, gold is a store of value. Even when the governments are running the money presses over time, they're devaluing the currencies. We've got higher inflation. Let's all go stockpile into gold because that's going to retain its value even in a high inflation environment. What we know about the narrative is that it really doesn't matter. It's the collective opinion of all investors that establishes price. And what Alex was talking about, if we look at a year-long chart throughout 2021, you could have held just about anything else and outperformed gold. And here we are, as it was trying to peek back into that go trend and maybe make a push at prior highs, rolled over again, and we're in neutral. So again, it's about objectifying these trends, making sure that we are catching the meat of the moves, and we can use these charts for an analytical basis across all asset classes and across multiple timeframes to really improve our trades. All right, congratulations, everybody. You've made it to the 50-yard line. We're halfway through the presentation. Hopefully, we all have the same shared common vocabulary about trend following investing. We all understand what our objectives are, and we can see how a simplified chart is going to just help us make better informed investment decisions without all of that analysis paralysis. We do not want to second guess ourselves when it's time to place the trade. In the next half of the presentation, we're going to talk about current markets. We're going to dive into many more examples about how you could use GoNoGo charts. But first, we got to talk about the complete solution, right? It's not just trend. We got to talk about the companion pieces. And so, Alex, why don't you walk us through all four of the indicators within GoNoGo charts?
Yeah, and we'll try to do this relatively quickly, but we've got the GoNoGo trend, which, as we now know, blends the foundational concepts of trend following into a color-coded indicator so that you can keep your focus on price, but get all that information as well. And then the very next place you turn as a technician is momentum. What's the enthusiasm of the market, how strong a price moves. And so the GoNoGo oscillator took the same approach, blending the objective, most tried and true, most sort of tested and robust momentum ideas, momentum indicators, momentum inputs, shorter term, longer term, sensitive, less sensitive, into one oscillator that would give me the same information that I would get from using multiple, which would allow me to do traditional momentum analysis, as well as something I think we'll hopefully show it has some real value, which is unique to the GoNoGo solution. And then we big time believers in data visualization. We want to talk about the GoNoGo icons that appear on the price chart that help sort of direct your eyes to important moments. And then we will also talk about the GoNoGo squeeze, which is rounds out the sort of the puzzle with a volatility indicator that tells us what's happening from a volatility perspective and when moves might be a bit more powerful than otherwise they would be. And I think if we move on from this, I'm gonna roll through this quickly, Tyler, if you don't mind, because I want to get to the charts and MetaStock features, because there's a lot that is so powerful in MetaStock. But really quickly, momentum, after you've identified trend, momentum measures the rate of change of price. That helps us understand the velocity of price movements, right? The strength of a price move. What you're seeing in trend, it gives you some information, helps you understand it. And I always talk about it in terms of cars. I'm British, so cars are a culture, and those are not British cars, Tyler. I've said this before, but we'll work with them. But if you think about driving and pulling onto a highway, around here the speed limit is 50 on some of our highways, which seems frightfully slow. But if you accelerate pulling onto a highway, you might accelerate quickly at the same rate 10 to 20 to 30 to 40. But as you get closer to that highway speed, your rate of acceleration might slow down. You're still going to get faster. You might go from 40 to 45 to 48 to 50. But your rate of acceleration is going to slow down as you get ready to pull onto the highway. And that's momentum, really. We can see how even though price, or in this case, speed is rising, it's rising more slowly. And we can say that momentum is slowing down. So the car is still getting faster, price is still getting higher, but doing it at a slower pace. And that suggests, in our example, that you've hit the speed limit. And what's going to happen next? Well, you're either going to stay at that speed limit unless you want to get yourself pulled over and arrested, or eventually you're going to take a turn. Maybe you'll get off the highway, and so you'll start to slow down. And so that's how we sort of think about it with price. Momentum will, if momentum sort of peaks and stays there, maybe you'll keep getting price keep going higher slowly, but eventually you'll see that divergence between price and momentum, and that will indicate that there's a chance that price will pull back and correct. So that's sort of a very, very quick. That's sort of how I try to go through momentum in classes. And then when you look at the same problem that we presented at the beginning, you can wrap yourself up in a chart that's only got momentum indicators on it and still make it very, very complicated. But remember, you've got maybe 5 or 6 trend concepts on a chart. You've got these momentum concepts on a chart, and they're all giving us very valuable information, but complicates things, right? So wanted to be able to distill that down as well into something that we could understand. So we ended up with the GoNoGo oscillator, which you see in that lower panel. And what we want to just hit on is that you can, of course, do the same traditional momentum analysis that you would with any good oscillator. You can look for extremes of overbought and oversold. Those are the peaks. On our oscillator, we range from -6 to +6. And you'll see that the peaks of price line up with the highs in the oscillator. The troughs in price will line up with the lows in the oscillator. But we can also, of course, identify divergence, a hugely important concept across all of technical analysis. And so when price is making a higher high, like it is here on the left side of the chart, and the oscillator is making a lower high, then we are seeing momentum divergence. The oscillator is not confirming what we see in price. So we, of course, wanted to have that information on our chart as well. And then the other thing to point out here is that we include volume as well in this lower panel. So we know when volume is heavier than it has been on average. When you see the blue coming into the ribbon along the bottom, that's going to tell you that volume is heavy. So you can use that as you would with traditional price analysis. If you see price breaking a particular resistance level on heavy volume, that might add weight to your opinion as well. So that's the traditional form of using the GoNoGo blended oscillator. But if we move on from that, we know that there's been so much research done over the last, you tell me, 30 years, I don't know.
70 years.
Yeah. There's been so much research done on the value of using momentum in trends. And that really, really fascinated me when I was doing my studies a long time ago. And they're so well used, these momentum indicators, that it would almost be a shame not to try to take value from them when we're in a trend. We know that oscillators are typically going to be used identifying mean reversion, swings in price as price moves sideways. They're designed to pull out those highs and lows, and we use them traditionally in a more mean reversion sort of way. But the research done by people like Connie Brown indicated that these oscillators tend to range when in a trend. So instead of swinging from overbought to oversold in an uptrend, they most likely will go overbought because that's just enthusiastic, excessive buying, which is quite likely in a strong uptrend. But they aren't going to fall to oversold conditions. They're more likely to fall into their neutral territory because oversold would say excessive selling, which isn't very healthy or doesn't really make sense in a strong uptrend. So what we wanted to do is capture that information. But oscillators are very choppy. You end up having to be very subjective with that range. A lot of people will look at 40. Let's say we use RSI. They'll look at 40 as support in a trend, and then 80 as the range that you trade up to in that overbought territory. But do you count 41 or 42 as a test of support? What if it breaks to 38, 39? Do you count that as a break? It's very, very difficult to be sure how to position those trading ranges for something like the RSI. So the oscillator for GoNoGo was calculated in a way that causes the indicator to fall to the zero line when all of the inputs are in neutral territory. So that gives us an objective level of support when in a go trend and resistance when in a no-go trend that allows us to understand when momentum, yes, it's cooled, which it will. People will take profit, investors will digest gains, but it hasn't gone into oversold territory, which would be unhealthy for that trend.
When I first started at the CFT Association over a decade ago, Ralph Acampora, who founded the organization in the late 1960s with some colleagues, tried to explain momentum to us newbies. And he said, think of throwing a baseball in the air. And when it leaves your hand, that's going to be the fastest that ball is moving. And as it reaches the apex, as high as you're going to throw it, the speed slows down, and then it comes back to your baseball glove. So if you keep that analogy going for a minute, when a trend is in place, price is rising on strong momentum, GoNoGo oscillator is rising to overbought, extreme levels of overbought. When it leaves overbought, it's coming back down, and we assume that the player is just going to catch that in their hand and throw it up again, right? In a go trend, we will see momentum stay positive. If he fumbles the ball, drops it on the floor, we lose it, it's going to crash through that zero line, and then we know we have excessive selling. The trend is then threatened from a momentum perspective, but where we see it find support at the zero line, we know that trend is going to continue. And when we're going to get to the icons here in a second, but our institutional trend following investors, what they are trying to do in order to get those very large outsized moves is find those by the dip moments, right? The trend surges and then it corrects a bit. There's a counter trend digestion either through price or time. And when it resurges in the direction of the trend, that momentum signal is going to tell them that they can size up the position or enter a trend that they weren't already participating in, so that you can build your position throughout the trend to capture those very oversized gains. So Alex, let's talk about the icons for a second, which correspond to the GoNoGo oscillator.
Yeah. So again, being a data visualization was sort of my life for a while, and you want to make things as easy to understand from a visual perspective. So that all that information is in there, and understanding the interpretation of the oscillator and the way it interacts with the zero line and the trend is incredibly valuable. So we wanted to throw situations onto the chart that would allow us to take advantage of that without, again, having to get sort of dragged away even to that lower panel. So the first kind of icon we have here are the trend continuation icons. And these icons are highlighting returning momentum in the direction of the trend. So in this case, a go trend is in place. Momentum has fallen to the zero line, and then it rallies. So we're going to throw that on the chart for you and say that the trend is likely to continue in this case because momentum has come back in the direction of the trend. Now, the second kind of icon that you'll see on a GoNoGo chart are called counter trend correction arrows. And that's just because, I love technical analysis, and the traditional use of momentum is very, very important and very valuable. So these icons will display on the chart when momentum has gone overbought, in this case, in an uptrend, and then has come back into neutral, just like RSI going from, say, 70 back below 70, going from above 70 to below 70. And that'll tell us that in the short term, we may see a correction against the trend as momentum is cooling off and returning to its neutral territory. And again, this would all be flipped. If we were in a no-go purple move, then the trend continuation icons would be red circles, and the counter trend correction arrows would be green arrows.
Excellent. Now, thank you for sticking with us, right? We've talked about trend, we've talked about momentum, we've talked about volume. It's all there on a very simple and elegant chart. The last piece of all of this, the thing that really helps you understand a high conviction trade, will be to also understand what's happening with volatility. So Alex, why don't you talk to us about the grid of the GoNoGo squeeze?
Yeah, so it seemed to be the last piece that to get a complete technical overview of any security, the last piece that I wanted to understand if I went out to talk to an oil trader or a PM or whoever it might be, was the concept of volatility. And we were always taught, and the way I remember a reduction in volatility leading to a significant movement is of squeezing a toothpaste. If you squeeze a tube of toothpaste for long enough, eventually the top will blow off. And this is things like Keltner band squeezes, Bollinger band squeezes, that idea of searching for that compressed volatility as there's that struggle between buyers and sellers. And then when somebody wins out, then often that move is quite significant, quite large in one direction. So the go-no-go squeeze is the climbing grid in that lower panel that's attached to the oscillator. And what that is doing is it's going to climb for every bar that the oscillator stays at the zero line. We know now the importance or the value of that zero line when looking at the oscillator. We know that in a trend, it should bounce off it. If it's in a go trend, it should find support. If it stays at that zero line for an extended period of time, it's showing us that there's not a lot of directional momentum in either direction. So we can wait to see in which direction the squeeze is broken. Now, this is an interesting chart because typically, all else being equal, we would expect the squeeze to break in the direction of the trend, because we know in this no-go here, the zero line should act as resistance, and then we might expect a new leg down in price. And that doesn't happen here. So that's incredibly important information for us. Positive momentum has come. There's been some overbought conditions creeping into our oscillator, which indicates that the no-go trend is in trouble. Then we eventually see, a couple of bars later, the go trend take place and the move up following it.
The great Steve Bigelow in the session just ahead of ours was talking about Japanese candlesticks. And so Monahisa Homa, who invented Japanese candle charting, was trying to understand investor behavior in the rice pits of Osaka, Japan. He did understand it, and he made millions off of it. What we're doing here is seeing investor behavior in real time. This is that tug of war, the knife fight between buyers and sellers. You can see we've got heavy volume right here. As the range tightens on price, we're in a no-go trend, but this looks like a bottoming formation as the go-no-go squeeze builds to its max grid, and then we have a momentum break to the upside, a reversal in trend. These signals are going to say that a highly volatile move in the direction of the break is more probable. And indeed, we shift into a go trend and price takes off to the races. But what we're doing here is visualizing investor behavior and then being able to quantify that and take action. So we know the importance of the zero line. We know the importance of trend, momentum, and volume. We've seen this volatility squeeze. Now, to use go-no-go charts in practice, think about how simple your trade decisions can be. You want to know what the trend is doing. You want to know where the oscillator is at, and if there's anything important happening at the zero line or with volume. 3 things are all you have to answer. And as Alex was saying, in his time at Bloomberg, he might be sent to a client who's a commercial hedger on the oil desk. He might be sent to a mutual fund portfolio manager that's thinking about things in months and quarters, equity long only. It didn't matter. You have to have a complete technical perspective on any asset class over any time frame, and that's what these go-no-go charts provide. So let's do a few together. Alex, and for everybody who's on the line, feel free to throw this in the chat. We want you to do this with us. So right now we're looking at the S&P technology sector, the XLK. What do we see on the chart? 3 things.
As simple as it could be for me, that was exactly why I needed something like this to give me that complete picture. What's the trend? And if you have a chat feature in here, you type it in. The trend is a no-go. It's in that pink color. It's not the strongest no-go. We rallied a little bit this week, but the trend is a no-go. Where's the oscillator? Well, the oscillator's at 0. I love it when the oscillator's at 0 because it's just, it's exciting and we know something is happening. Yep. So that third question, is there anything important happening around the zero line? Well, yes. Momentum is testing the zero line from below. We're in a no-go trend, so we know that should act as resistance, that zero line. And there's heavy volume because we see the blue in the ribbon below. So we're in a no-go trend, which is weakening. Momentum is the oscillator is testing the zero line from below on heavy volume. What we would be looking for now is for that to become resistance. If the oscillator rolls over, we will get a trend continuation red circle like we got at the top and a new leg down potentially in price. next?
There are just two questions in the chat that I want to answer really quickly. So for everybody on the line, the common understanding we have about trend following, what the trend following investors are trying to do is capture the majority of the move. That means they do not get in, they don't catch falling knives, so to speak. They're not trying to catch the absolute bottom, and they're not selling out of the absolute top. They want to be patient and capture the majority of the move. So by definition, trend following is a lagging indicator. So what we're seeing in the top panel, this go trend, right, the overall conditions, the blend of technical indicators suggests we are in a new go after there's been some rally up in price in order to establish that this is a go trend. However, if you wanted to get in earlier, you see this max grid of the go-no-go squeeze happening. We were in a no-go, momentum was negative, and when that breaks out of the squeeze to the upside, you could get in on this weak no-go bar. If you're an investor with a little more appetite for risk, absolutely, you can time your entries and exits using the composite of the tools. You know there was heavy volume. We broke out of this max squeeze to the upside. You've got high probability, and you've got a really clearly defined risk level. You can stop that out very quickly if you get in and it begins to work against you. So yes, lagging indicator. We've got some other questions about relative strength, and Jeff, we're going to have to do another webinar because there's another presentation to be made about relative strength trends. But let's keep going through a few examples, Alex.
Yep. So we were looking at the rotation away from the growth sectors into cyclicals over the last couple of months in our research that we put out. And so this is just an example of, you might be coming to that conclusion that technology is underperforming the markets and rolling over quicker. And then you might look for an individual security. So now we're looking at Netflix also, just because it was amazingly took a 20% drop in one day, opened 20% lower. So Netflix right now, guys, do it along. What's the trend? The trend is a strong no-go. Even having gap down, we haven't rallied very far. Where's the oscillator? The oscillator looks like it's at -5, which is right at our oversold level. If it crosses above that, then we might expect a counter trend correction, like a short-term correction against the no-go trend. And we can say that the oscillator is also, well, not the oscillator, but we are seeing heavy volume on this price movement and this gap down. Like from a purely traditional technical perspective, we can expect resistance at that lower end of the gap as well. Gaps are very important. Steve mentioned that as well about the importance of gaps. So that's Netflix. It's not something that you'd want to go near just yet.
And I think we saw all of the talking heads on financial news media wake up to this massive gap down after beating fourth quarter earnings, right? But just think about what the trend was telling us since November of last year. Netflix has been in a no-go trend. We had momentum continuation to the downside. We were in a max squeeze trying to decide if this was still going to maintain its no-go. It certainly did. Rejected at the zero line. We were in a strong no-go trend before it gapped down 20%. So for those of you who like to play to the short side, you can use these trend continuation icons to manage your short positions as well. Alex, let's talk about some of the unique features in MetaStock as we're wrapping up these last couple of minutes of our presentation.
Yeah, I've been so excited working with Jeff and the team. I love the commentary feature of MetaStock. We put out, we're not going to get into this today, but we put out research, we put out daily research. We try to be with our clients and explain what we're seeing on the charts. But we built that right into MetaStock. So it's very, very exciting for me. I think there's a lot of value here. So you can open any chart on MetaStock with the GoNoGo template, and you can click on any bar. Jeff sort of highlighted how you could do this with the presentation before, but you get a walkthrough from our perspective of how we interpret what you're seeing on this current chart. You'll basically answering the three questions that we just talked about for you, as well as a lot of explanation about the indicators themselves and how they function. But you will be sitting there getting commentary on, what's the trend, what's happening with the oscillator, is there any icons on the current bar, is there a squeeze, and you can go through the commentary and really learn and understand what the technical picture is. And then moving on from here, step two, explorations. You can go through, like Jeff said, 98% of the global coverage, scan for securities meeting these go-no-go criteria. So you could scan for trend continuation icons, situations where a trend is in place and momentum has come back in that direction. You could scan for new goes, you could scan for new no-goes, and we're going to continue to build explorations with MetaStock. But very, very exciting. Like Jeff says, he's part of his daily process. Me too. You don't have time to go through thousands and thousands of securities. Let's find some that I want to look at in more detail, and you can very quickly do that with MetaStock's explorations.
Absolutely. And for Alex and I, working with the MetaStock team has been fantastic. Understanding, what we want to do with capturing trends and timing our trades. We don't have time to look through thousands and thousands of charts every morning. Those screening and scanning tools are so important. But then Alex and I want to be with you every step of the way. And we work with some of the best technical research analysts on the street, institutional investor ranked #1 analysts for decades. And what they do is they take a top-down perspective. So responsible technical analysis is going to start from the big picture, looking across asset classes, and then dive deeper and deeper and deeper into the sectors, to the industry groups, and then into individual trades. So we publish research for our institutional subscribers twice a week. Saturdays, launch conditions go out. In fact, we just finished writing a piece this morning. And then on Mondays, so Saturday being a chart-packed review, global asset classes, lots of charts. On Monday, we're gonna talk through what we're seeing from a macroeconomic perspective and drill down to those individual securities. And so for those of you who are interested, you can subscribe to research as well. It's $1.99 a week right on our site. But to help guide you through using these tools, we're going to show lots of examples and explain what we're seeing and what institutional investors are playing towards. So I know we've got a lot of other examples, a lot of research that we've covered. We can go through all of these perhaps at another webinar, another session with you, Jeff. But I think where we want to wrap up with today is just thanking you and the team for everything that you've built with us. Just to remind everybody, we're trying to eliminate analysis paralysis. Keep your focus on price action. It's only price that pays, but without losing sight of that complete technical picture. So hopefully from better charts will come better investment decisions. And we're looking forward to working with all of you in the future. So thank you very much, Jeff, for having us. I'll hand it back to you to wrap things up.
And I think if I'm right, I think maybe everybody on the call can get a free trial of research too. I think if that's right, Jeff.
Absolutely.
Yes, I believe
it was one of the opt-ins when folks registered.
Yeah. And so if you're watching on YouTube, all of the presenters offered a free bonus. Like for example, Stocks and Commodities offered a free issue. Alex and GoNoGo and Tyler offered their research service. And was that a free month or a free year? A free month or a free week? Not a free year. A free month of that. You can get their recommendations. They need to send me a copy. I'd love to look at it.
Absolutely.
Okay. Kenneth says, I have a GoNoGo on MetaStock. It's great. It saves a lot of time. The explorations are fantastic. So thank you for getting it already, Kenneth.
Thank you.
Let's see. Regis says, please answer my question, but I don't see his question. He wanted to know if the, the momentum oscillator, is it a momentum-based oscillator? Is it based on price or volume?
It is separate from the inputs to the trend indicator, and it is based on several of the most used momentum oscillators that sort of I worked with and come across and built my momentum analysis off. So it is all based on momentum, the momentum oscillator, yes.
So Rajesh,
you've got derivative of price. Volume is included as a sort of a, as you see the ribbon there, it's not, volume is not in the oscillator itself.
All right. Very good. All right, let me go ahead and kind of just kind of wrap everything up for you. We'll definitely have you guys back. You guys do such a great job. I kind of love it. And I hope you guys don't mind, but I think the dynamic duo is just how I'm going to refer to you from here out.
That's fine.
Batman and Robin. We'll fight over who gets to be Robin.
Yeah. Great job, guys. I appreciate it. We're also getting together for those of you, Kenneth, that got MetaStock or got GoNoGo with MetaStock. We're going to do a little bit of a boot camp. I'm going to talk about that in just a second. Tyler, Alex, great job. Good to have you. Thanks for coming today. Thanks for spending a little bit of time with us.
Thanks so much, Jeff. And thanks everybody for sticking with us on a Saturday. We'll see you again soon.
All right, cool. Let me go ahead and just dismiss them real quick, and then we'll kind of talk a little bit about that boot camp and kind of the offer for those of you that don't have it as well. So as they had discussed, with this, let me go ahead and turn this on, and I'll grab the lights too. All right, as they had kind of discussed, you get the GoNoGo trend with it, the oscillator, the icons, the squeeze, the ability to run explorations, the scanning. It does have the expert advisor, which will give you crystal clear English explanations of what's going on all of the bars. You'll get the trend identification, the scanning. Did I mention the scanning? Yeah, I think I did. In any case, the GoNoGo Complete is available. It's a one-time cost of $1,495. Here at the summit today, we're going to do a special. It's going to be $995. And since it's a brand new product, what we usually do in new products is I like to sit down with the developers and just create a training class. This will be a special training class that we're going to run next Thursday, February 3rd. If you've already got the GoNoGo, don't worry, I'm going to invite you. I'll make sure that you're on the list of people that can come. If you sign up for GoNoGo between now and Thursday, I'll make sure you're invited as well. What we're going to do is it's going to be 2 parts. Alex and Tyler are going to sit down and they're going to talk a lot about the kind of the methodologies. And I'm just going to run probably a 20 or 30-minute session on how MetaStock works, how to run explorations, how to set up watch lists, how to utilize and use the actual tool. So if you've been using MetaStock for a while, my part probably won't be that useful, but certainly Alex's and Tyler's will be. This special class is going to be a customer-only class. Really, the design of it is going to be to help you get up and running with both MetaStock if you're new to MetaStock, as well as GoNoGo. So we'll plan on doing that Thursday, February 3rd, noon Eastern, and it'll be included as part of your purchase. And again, if you've already purchased, we'll have you on there, Ken, and in everybody else. So Jim says, Jeff, upon signing up for today's session, I checked yes for Steve's 1-week session. Will I receive a specific link directing me forward? Okay, Jim, that is a really good question. For anybody that signed up for any of the bonus offers today, whether it was the stocks and commodities or Steve or whatever, what's going to happen is on Monday, I'm going to go ahead and put together all the lists for everybody. So if you put your name down for stocks and commodities, I'll send your information over to stocks and commodities. And within a couple of days of Monday, they will send you information on getting that. So that'll come to you. Give us until like Tuesday, Wednesday to get that out to you, Jim. So there you go. Rajesh says, you have a training video you can send us. You will not stop talking and focus on our questions. We will be creating a training video, Rajesh. There are a lot of people here, so we're doing our best to answer questions as well as keeping things on topic. I know that you're upset because we haven't gotten to a couple of your questions, but there are literally hundreds and hundreds and hundreds of people that are asking questions. So we're doing your best. I'm sorry personally if we missed your question. So there are hundreds and hundreds and hundreds of questions coming in. So it's difficult to kind of keep track of them all and see which ones we've answered. I've been trying to chat in answers to the questions that I know. We're sorry if we missed it. So there you go. Okay, so for the special, $1,495 is the cost that you pay for one-time cost. Here at the summit, it's going to be basically $995. So we're going to take $500 off. We'll give you the special boot camp training class today on Thursday, February 3rd. We'll do that at noon Eastern time. We are going to record that, so if you can't make it, we'll also include it on your downloads page within a couple of days of that. To take advantage of that, you can give us a call. The phone number is 800-882-3040. You can also visit us online at metastock.com/saleschat. The other thing, Rajesh, if we do miss questions, that you do have questions that you want to answer and we miss them for whatever reason, again, we're doing our best. We do have also a full team of people that are available here to answer any questions you have regarding MetaStock. And you can also chat online with them at metastock.com/saleschat. So there you go. The GoNoGo is part of the Summit Action Pack that we're doing today. You can get Candle Profit Systems #2. You can get the GoNoGo Charts Complete, which by itself is normally $1,500. You'll get Fulgent AI 3-for-1. You get, that means 3 months of the Fulgent Artificial Intelligence program that Ed Downs is going to talk about. You'll get 3 months of LearnMetaStock.com, which is a great subscription. I actually, every time I start a brand new sales rep on MetaStock, I actually sign them up for Learn MetaStock so they can actually learn about MetaStock and learn about the program. You also get Unleash the Power of MetaStock, and Stocks and Commodities, our sponsor for today's event, will give you 2 years of Stocks and Commodities for free. So normally the cost on this would be $2,839. Here at the event today, it's going to be $1,346. You go to metastock.com/summit deal. You can also give us a call at 800-882-3040. And you can also visit us online and ask any questions that you have, Rajesh, at metastock.com/sales chat. So there you go. Let's see. Before we get into Ed Downs, I know we were running just a little bit late, but I do want to say thank you for Stocks and Commodities for sponsoring the event today. As we had mentioned just a second ago, if you want to get a free month, and you can go up to tradersummit.com, traders-summit.com. You can fill out the registration form, and they will subscribe you to a free month of MetaStock. You can also go to metastock.com/traders-summit. That will also work. We do appreciate Stocks and Commodities. It's a great magazine. They've been sponsoring the Online Trader Summit for a decade now. So thank you for the work there. And then we also want to thank our other sponsor, CMT Association. You can find out more about them at cmtassociation.org. They're a very, very well-reputed organization, and we're happy to be associated with them. So with all that being said, I know we're running still about 11 minutes late, but it's okay. Ed Downs is up next. Ed, we appreciate you coming in. I hope you're doing well today. And Ed, just to kind of give you some history about Ed, Ed has been working with MetaStock. I've been here at MetaStock in March. It'll be 25 years. One of the things that we were actually selling when I started at MetaStock was a bundle of indicators and tools that Ed had designed for MetaStock way back 25 years ago. About, I think it's been maybe like half a decade now, 5 or 6 years ago, Ed called up and he wanted to put the AI engine that he's going to show you today into MetaStock. I said, I love it. Let's do it. And he did it. And the rest is just history from there. So Ed, how are you?
Hey, I'm doing great, Jeffrey.
Good. It's good to have you here. Thank you for coming. Let's go ahead and get the controls over to you. Sorry, we're running a little bit late. We've been running 11 minutes late all day. So if you need to go long, don't worry about it. I'll save 11 minutes in my presentation in a little bit. So.
Well, thank you. I think I can catch you up. I think.
Okay. Well, don't worry about it. We got it if we need to. So with that being said, I think I just turned the presentation over to you. Did you get the little? Yeah. All right.
Are we good?
I'm going to do my best to get out of your way.
Okay. Is the video coming through?
It is. Yeah.
Good. Good. Not that important, but hey, I'm here. So there you go.
Yeah. You look good.
Well, Jeffrey, it's always a pleasure to be on your summits and your webinars. I just look so forward to this all week. I was thinking about, man, I got to really be ready for this thing because I love doing these and with you. And of course, working with you, the last, like you said, 25 years. It's hard to believe it's been that long. Of course, I got to keep my high school picture on the website. That's important. But it has really been fun working with you, and just the 1-minute version of our history. Back in, I started Nirvana Systems, the main company that I have, to focus on automation for traders of all kinds, signals and trading and all these things. And that sprang from being an engineer and trading. At the end of the day, and I was thinking, I'm not very consistent with this, and I need the computer to just do it for me. And so, that just sort of led to one thing after the other, and software and all these things. So that was back in '87, believe it or not. In fact, I remember the crash of '87 very well. But so since then, I've been focused on lots of different kinds of automation, and we did these utilities back in '90 that could run MetaStock and other software kind of like a user. And so we wrote these utilities that would drive it to run reports and pull the best systems out of it. And of course, that was the DOS version, long time ago. And went to Salt Lake City, met Steve Akalis, who started Equus International, was the name of the company at that time. And he loved the utilities. We promoted them to customer base, and they went great. And then Jeffrey and I started working together to sell each other's software and had that kind of a deal going. So it's just been a really fun time with MetaStock all these years. And I can tell you, in making these products, I got to do a plug here, Jeffrey, because your staff, technical staff, support staff, everyone is just like family. And that was from the first day. And I know they treat everybody that way. We try to do the same here. And it's just been so comfortable working with you. So thank you. And thanks for having me on. I love doing this. It's great. Okay, so today is kind of a heady topic. We're going to cover two different things. One is, of course, options and the power of options. We're going to talk about finding options in MetaStock that are really good with OptionScope. But also, I'm going to show you the artificial intelligence module that we have integrated in MetaStock. And as Jeffrey said, actually, he didn't mention this, but it was first built about 20 whatever years ago. 1996 was the first version, and we've continued to improve it over time. And so I'm going to show you what that does and all that and the option thing. But my goal in doing these webinars with MetaStock is always to educate the customers about things that are just useful. So how do you find options in MetaStock? What do good trades really look like? And of course, I'm going to show the AI because you need good signals, to do this. And I think our signals are like among the best in the world. So because the artificial intelligence we've developed. So that's a big component of this, but it's really the two different things. So let's go ahead and just dive in here. And like I said, I have so much fun with this stuff. It's great. Okay, finding winning option trades with AI. And it's a very broad topic, as you shall see. So let's talk first about the power of call options. I don't know how many of you are trading call options out there, but they really are amazing instruments for trading. And there's some really good reasons for that I'm going to cover next. This is an example that I did a while ago of REGN. And so if you look at this kind of complicated looking chart here, there's the underlying REGN down here. And on top of it is the option chart. And I got to do some plugs in here because I'm telling you, this Reuters data, the fact that you can get an option chart like this is very unusual. And it's super powerful that you can do that. So this is an option chart for the December 372 call. I think it was like a year ago, maybe somewhere around there. So I pulled this up and it was like trading at $2.90 when I started, right? The stock was at 343. And so this, and you can see what happened. Of course, the option went up as the stock went up. But let me ask everybody out there, and I don't know if Jeffrey can maybe relay an answer on this, not necessary, but rhetorical question, is when you place a trade on a stock, we just saw some great demos just now on the other presentation, that was fantastic. So when you place those trades, what kind of a stop loss do you have? You got to have one.
For me,
For
me personally, I like to use, and everybody has a little bit of a different approach, but for me personally, I like to use a pivot low, the most recent pivot low.
Exactly. But what is the maximum amount you will allow the loss to be to that pivot low?
Well, I think I have to hedge that by explaining that I take very small positions. Okay. So like my risk is kind of built into my position sizing.
Right.
I usually literally go with the last pivot low.
Okay.
And it's usually not too far. If it's, I think you're saying how much.
How many
percentage? I'm not giving you the answer you want. I'm sorry.
It's okay. Percentage. Max.
Oh, geez. Usually I start thinking about it if it's more than 10.
Okay, 10% is kind of a max.
Yeah. Mm-hmm.
Yeah. Okay. And that's really pretty typical. I think I use pivot lows as well. And so for me, it's 4 or 5%, somewhere around there. If you look at this example, this option to control 100 shares of this stock was $290, right? So, because it's 100 times 290. That is 1%, less than 1% of the value of the position. So I'm telling you, you think about it, you can just buy calls and say, if it gets worthless, goes to zero, that's my stop loss. It's fine. I don't care. Because if I trade enough of these and they do like what this one did, see what this one do? It was like 200% gain from the start of this, from 290 to 870. So if you have enough trades that go in your favor, in your direction, the fact that some of them go worthless and stop out at a 1% loss is no big deal. It's fine. So people don't normally think about options this way, but I'm just saying a really good tactic that I've used is that's my stop loss, and I'm just going to let it go, see what it does. If it triples, doubles, triples, I'll go ahead and close it, take the profit off the table. Unless it's really bullish, I'll just let it go to expiration because they can do, 5 to 10 times often. So pretty powerful stuff. High gain potential with limited risk. And so that kind of gets your attention. It gets mine anyway. It's pretty fun stuff. Now let's look at just the probability of this. If you do take these option positions, and let's say you don't let them go worthless, you sell them at half. So you sell it, you buy a $2 call option, you're going to sell it at $1 if it goes against you. That's a 50% loss on the option. And let's say half of them double, like they go from a 1 to a 2. So what would you expect to happen if you ran 60 trades in a row? And so what I did is I just did Excel and I made a random function that would just simulate that. And all the curves are different, of course. Most of them look just about like this. So the answer is 20% to 60% gain over time. So pretty big deal, pretty important, pretty powerful. But it is all about probability. You want the probability in your favor, which has to do with the signals you're trading, the approach you're trading. You want that high directional probability. Very, very important that you have that. So just looking at this, putting the odds in our favor, we can make consistent profits if we only take trades that have a high probability of going up. They've got to have that. You win half the time, and the average profit is twice the average loss. And you can really beat this with options if you take good directional candidates. So that's kind of the important thing. And you got to have those though. It's critical that whatever system you're using is able to, most of the time show those really big profits. So how do you get that? Well, you probably know what I'm going to say, being the title of the webinar, right? So it's with artificial intelligence. So let's look at some examples here of how this kind of builds up. And I'm going to start by looking at a trading rule. And we all use these. Every presenter probably that shows any kind of technical system, it's a trading rule of some kind. For example, we know when Bollinger Bands contract, that's a squeeze play, right? That they're likely to expand and move from there. That's very, very likely. So we could say, okay, we want that. We want the Bollinger Band contracted and then expanding. We also want the price to be above. We want the 20 period above the 30. That's shown to work pretty well also. Just trading charts, you can see right here, it's good. And here's this whole trending move right there with that. So that's great. Momentum, very nice oscillator. It's positive. We've got oomph going into that trade. That's good. And then the final part of the rule is the MACD above its moving average. Right here. This is, of course, all MetaStock. And so that's a rule. All those things are a rule. Okay. Now, I'm out here, Mr. System Designer, and I'm trying to make these rules. There's a problem I have, and that is the fact, oh, by the way, so that's what you want to happen. That's the outcome. Okay. So the thing is, though, is how do you do it? I mean, there's like over 100 indicators in MetaStock, and it's very full featured. But actually, if you just take one of these things, just take relative strength index, which everybody knows about, and Wilder's relative strength. And if you just take that one indicator out of these 100 and you look at it, you have all these different periods you can apply. And so I like the RSI 7, works really well. A lot of people trade with RSI 14 as a default. RSI 30 is a nice longer term RSI. And so there's all of those, infinite number. Then there's all the interpretations. So it goes through 0, it's above or below a level, it's accelerating, it's diverging, it's got a crossover. And I could show examples of all these things, but you know what I'm saying? There's so many interpretations of any individual value of RSI. So you're kind of seeing where this is going. I mean, it's like, wow, just this infinite number of combinations. And so let's see, I think this is actually a slide I had in here that is the same thing, but it shows the same information. You got all these, there's a few more interpretations in this slide. Couldn't decide which one to throw in here, so they were both there. But the slope and other things, here's a formula on RSI. So anyway, that's the point. So, but let's just go back and say, so there's hundreds of thousands of possible indicators you could use to make a trading rule, and you're going to combine them together. It's a big number. So if you just look at 100 of them, not the hundreds of thousands, but just 100, well, with just 100 indicators combined together, if you took every single combination of what that is, you got a MACD, an RSI, whatever, all these things, and let's say they can be true, RSI is above 30, or they can be false, RSI below 30, or I just don't care what RSI is doing. I'm going to use other things in here in this 100. Right, this one and this one and this one and this one. But with 100, there's 3 different possible values. So if you take 3 to the 100th power, which is what that number is, it's It's a pretty big number. It's 2 septillion possible combinations. That's like amazingly huge. You know, like I got the universe back here. It's kind of like the stars in the universe. I mean, there may not be that many. I don't know. It's a huge number. So for a computer to work with that and figure that out, if you put all the indicators in there, you said, okay, find me some rules by trying every single combination, you would be there for years and years and years. Can't do it. So, and this next slide kind of shows that. Here's our rule right there. Trading rule is one little thing inside this huge universe. All right. Not easy. So how can we find these things? How can we find these rules? And you know, I'm going to say it's with AI because it's just very efficient at doing this. And I'm going to show you why. What we use is something called a genetic algorithm. And that's kind of what it looks like. If I take this right here, and it's called genetic because of the way it works. This is a population of what we call chromosomes. As you might imagine, each little chicklet in here is called a gene. Well, what are they actually? A chromosome is just a rule. Like, you know, this could be, I don't know, whatever, RSI 14 less than 30, that's one of these chicklets. So there's like hundreds of these across here, not just the 8 I'm showing, but lots and lots of them. And so what happens is the GA, genetic algorithm, populates this thing with random values, and then it evaluates each one of them across all the data. And we do tests over 10 years of data. You might think that would take a really long time. It doesn't. It's blazing fast because we've optimized the code with multiprocessor support over the years. It is really, really, really fast. But what it's doing is it's evaluating every one of these, and there are thousands of them, thousands of rows of possible combinations. And it can go through all of those in about a half a second. That's how fast it works. And it scores them, and it says, you know, is this rule or potential rule good? Is it profitable? It goes back through all your historical data, looks at every single bar in every chart and says, are those things present? Oh, here's a place where they are present, where MACD is above, you know, it's moving average and RSI is above 30. And so how profitable is it? So it measures the profit in the future. And it does that hundreds and hundreds and hundreds of times. And then it says, okay, I found that particular rule 400 times in the data, and it was average 70% profitable, and it makes 2% per trade. That's good information. I didn't have to go do that. It did it. And so it's finding these rules. And so it actually finds thousands. And at the end of the process, you want to just use the best ones, of course, but it's finding thousands. It's doing what's called evolving. So it evolves this population of potential rules over time to suck out the best ones. And whenever it does that, it comes up with this we call knowledge base. The knowledge base has these rules in it, and they have names. This is called quick move right here. And so let's talk about what happens then in the software next. So that's basically that's what it's doing. Its objective is to create this big repository of profitable rules that have been found over a backtest period, and we use a lot of data for this. Okay, and the typical run to do this, you know, we can get a really good answer in 10 minutes, but we let it cook for hours just to let it keep going and find good stuff. So, so then we have this product that's in MetaStock. It's Fulgent AI, the same AI engine that we developed here in MetaStock, and it runs in the background. So it's just sitting here in the tray of the computer. You don't see it. It's there. You can bring up the interface from MetaStock, but you normally don't see this. It's running, and it's accessing these knowledge bases to provide these signals to MetaStock. So when MetaStock brings up a chart, it's going through, and it takes, you know, a couple seconds. It's not instant because you can imagine what it's doing. It's looking at every single bar in this chart and saying, do I have a rule anywhere in here that matches this, those profitable? And it shows you, and you can see how good these signals are. I mean, they're really amazingly good, like 70 to 80% accurate. But that's, I mean, it's just powerful stuff. That's all I can tell you. If you going a little bit further into the interface here, we have 4 experts included with this product, and I'm not doing the product pitch yet. I'm just telling you. So we'll talk about that later. But the other thing, all things it can do, but it has 4 experts. One's called major reversal, looking for big reversals and big swings, swing trades, breakouts, and quick move, which is little bitty moves like this. So those are the 4 experts, each trained completely separately. All right. So what I want to do is go ahead and go to MetaStock, and we're going to poke around a little bit here on my MetaStock computer. Chart of Apple, first chart I loaded, and love this interface. This thing is so awesome. Let's go ahead and activate the template for this. So right click, apply template, and I want the Fulgent AI template, which is down here somewhere. And I've got multiple Fulgent products on here, but it's that one right there. All right, it's coming up. Okay, and it's got 2 signals, not too many on Apple right now. Let's see, let's go ahead and view the expert commentary that's included with this. Okay, so just gonna go through a couple of these charts so you can see it, but this is, I think I just have a year of data loaded. We just had a volatility breakout signal on Apple. We're gonna come back to that in a minute. But if I just go through some charts here, we'll go, the next one is Amgen. And this right here, it's waiting for the stuff to come back from the application. That's the wrong message. It's not an error. It's just waiting. So that needs to be changed. But you can just see quick move. These are really quick moves in charts. Here's the major reversal, goes all the way up to there. Volatility breakout, woohoo. Quick move down, quick move down. There's one that didn't work out. They don't all work. It's about 70 to 80%. But armed with these signals, we can do some real damage in the option market. Let me tell you. I'm just going to go to the right through a few charts because we've got a lot to cover. And just kind of look, here's American Express. All right. Yeah, it takes a few seconds, but it's worth the wait. Another quick move right there. Quick move right there. Swing trade right there. Volatility breakout on the right. I'll go through a couple more. And you're going to see a lot of other examples because I have option examples I'm going to show you. So, but just to kind of show you what it does. And then at the end, I'll kind of get into the interface because this is the teaser. MetaStock actually showed us how to add our interface into the program. So it's right there. We're coming back to that. We got to move on to options, but this is what the AI is doing. It's finding these trades from rules, and it's just so awesome. Of course, I would say that, but it is. It is. Okay. And I love the MetaStock version of this. I actually like it better than other implementations we've done because MetaStock is so clean and easy to use. It really is the best one. And I'm not just saying that because I'm here with Jeffrey. It really is. It's really easy to use. I love it. Okay. So let's go ahead and, I want to show you one thing on the PowerPoint I captured, just as extra. See, do I have it? Yeah. As an extra thing to say about this is we use the MetaStock system tester to test these experts against all the experts we can find, right? And when we do that, Fulgent is consistently on top. In fact, often it beats these by like 4, 5, 8 times. This test was done a while back. And so that's really important. So you know the accuracy of these signals is really high from MetaStock itself when you run it. And again, this is trading these options. It's all about directional accuracy. You got to have it. You have to. Trading call options. So we got it with this. All right. So that's a preview of the software, kind of what it does. This isn't really a full AI presentation. It's both things. So we have to move on. Let's do that now. Next topic, using option scope. All right. So I am going to demonstrate this in the software right now, but there is a way that I've kind of come to that is very straightforward and very easy to get that option, to find the option symbol you want to trade first in option scope, and then to stick it in the chart in a pane. Because if you've got the option symbol above the stock, it is so easy to trade because you can see how the market is valuing that option. Super critical. I say Reuters MetaStock is the only place I've seen it. So it's just really, really awesome stuff. So we're going to get a chart. We're going to add an indicator window, and then we're going to bring up option scope. And you can do these in opposite order. I kind of mix and match, but let's go ahead and do it. I'm going to go back to Apple. Let's see. We're going to go back a couple here. One, American Express. Let's go back again. And probably can just type Apple and get there quicker, but I think it's just 2 more over here. There we go. All right. Hopefully I didn't click too many times. So again, Apple didn't have a whole lot of signals in it. Oh, there we go. We got there. Amgen. Okay. Why isn't Apple coming? Let me see here. Try again. Left to Apple. There it is. Okay. It is saying no experts attached. I must have detached it somehow. Let me just bring it here. Attach, Fulgent. I did something to it. Don't know what, but it happens in demos. All right. We'll see if we get that. Okay. Awesome. So I've got this signal over here. And what you can do, I'll just show little things along the way, is I can click at any signal And this thing will show me that that rule that's firing that signal is 76% accurate over almost 600 samples in the sample data. The average profit is 2%. So I want to check that when I'm looking at a signal. If we look at this volatility breakout over here, which looks pretty awesome, it's only 66% accurate. I might want to keep going, looking for another one. But and I'll show you about that in a second. We'll use the Explorer. But it did have 473 occurrences, an okay trade. But we're going to go ahead and use this as an example. So the first thing, you can do it either way, but I'm going to go ahead and do the inner window first. So inner window, new, right? Right click, inner window, new. By the way, I have a video. It's going to show you this. If at the end, I'm going to ask you to send an email to me, ed@fulgent.ai, and it'll be on the screen. But I will send you a full training video on how I do this. This is actually, let's see, bring it up here for just a second. It's the same thing. I have it as a backup.
Okay, so I want to show this process.
So it goes, and there's some Fulgent signals on that day that I did this, but I go through several examples, very detailed. I'm going to do a couple here, but if you give me your email, I will send you this video. It's about 10 minutes long, and it'll really help you to understand how to do this in MetaStock. It's really all about using MetaStock option scope from any signal. I'm using Fulgent signals. They're great, but you could use anything you have. Okay, so we're not going to, I have this in just in case. I've noticed that sometimes the feeds go down on the weekends. It's happened a couple times to us. So I had this as a backup, but I will show it to you, or I'll send it to you if you send me your email. Okay, ed@fulgent.ai. That's my freebie today. Okay, so what I want to do, so right click, let's go start again. Okay, we're over here. So right click in here, inner window, new. There it is. Okay, now here I want to go right click, option scope right there. Okay, option scope, bring it up. All right, here it is. Let's bring up the options for Apple. Yay. All right, so we just did these things, and down here it says double click align in the Explorer. We're going to do that to look at some candidates from today, actually. And I'm on Apple right now, so I'll go ahead and do this first. But so we've gone through these, pretty simple. The next thing is you want to set option scope parameters. Now, what I have found doing this is that you don't actually have to limit the options. You can look at all of them. It's a little simpler, but you're thinking about what you're trying to trade as an option that's expiring fairly soon. 14 days is a pretty far away. So that's, in swing trading terms. So that far out, and then near and just out of the money is kind of what you want to have. So if I go back into the software, and by the way, I'll also send you this PowerPoint if you send your email. So we go back here. I've got February 4th. That's really close in. Let's go out about 14 days. Let's say there and there, and strike price filters. Say we want to look at things that are above, I don't know, within 10% of the move, and then let's see, type. We want daily expiration, and here's the in and out of the money that I was just showing. So out of the money just barely. Okay, so that's good. All right. Oh, no data matches. Okay, so this is where I get to. All right, let's just let it show me what it's going to show me. Okay. So I had not practiced with Apple before the thing, so let's just go ahead and show everything. But if you can limit to the ones that are pretty close in and just out of the money, that's kind of what we're looking for. If I go down here and look at this, let's see. Yeah, we may have the old data problem going here. We could have that right now. I don't know. Let me see. 11th. Okay. Yep. Okay, hold on. Let me expand this out so I can find it. What I'm looking for is a liquid option, kind of just out of the money. So we're sitting here at 170 on Apple right now. So if I go and look here, here's an option with a lot of volume, and it's $3.95 bid, $4 ask. Let's just go ahead and go with that one right now. So just out of the money, about 14 days out, and that's pretty close to that. So I'm gonna double click it and say, okay, plot this chart. All right, so it does that. Okay, and there it is. All right, so we've got a couple bars there on the option. So this is that option. Now what I do is I just do a cascade So window, cascade, and I grab that chart. And where's my Apple chart here? Let's see here. I grab that option chart and just drag it into the pane. And this one doesn't have a lot of data. Usually they have a couple weeks, but that's okay. We'll go with it. So now I've got this on the chart, and now I can just close that option chart that I just brought up here and say, window. Okay, we'll go ahead and maximize this. All right. So now I've got the option for Apple, that February, I think it was 18th expiration, just out of the money, and pretty volatile market right now. So it's, you can look at it and you can see, just looking at the chart here, that, the calls really reacted to this move here. But what this is giving me is the ability to track what the option is doing as the stock moves up. So I'm thinking, we're probably going to get back to resistance here. So that's about 180. That's $10. Delta on this is probably around 0.5. So, that's a $5 move. That would double that option easily. In the other examples I'm going to show you, I have charts. They're not as, there's more data, and it hasn't moved this much yet. The options are kind of low and sort of hanging. Those can move 4, 5, 8 times. So we're going to see those in the examples. But that's how you do it. You get it on here. I've got my signal. Now I can go to my brokerage window and place this call option trade. February, yeah, the one that we pulled out there. So pretty easy. And so normally I go through a bunch of examples. Before I do that, I'll tell you what, let's do. Let's go ahead and go to back in here and look at the exploration, because I ran one earlier with Fulgent. Okay, let's see here, reports. I want to say this one. All right, and we're going to go ahead and bring up another chart that we just got. This one's going to be fresh, right? Pull this off the screen. So this is the Explorer output. I'm sure you're familiar with it. Lots of people are using it in this summit, and it ran Fulgent on the entire S&P 500, NASDAQ, Dow, all those stocks, about whatever it was, 500 and something stocks, and came back with all these results. So what I do in Fulgent with MetaStock is I go here and I say, let's look at the long column, and all these ones are new long signals. Okay, they're all new longs. All right, and we can start kind of looking through these. Let's go and look at Abbott Labs is right at the top. But if I look over here, you see this accuracy column. This is telling me what the accuracy of the rule is in the historical data. This particular one right here is a 72. And I got one down here that's a 73. Let's click on the 72, bring him up. All right. Okay, we got that chart. Ooh, hold on a second. Where'd it go? Right there. Ooh. Now, these aren't prognostications, okay, right? This is teaching webinar, but wow, okay. Major reversal right there. And which I like the way the signal looks. But so, and there's just tons of them in that output. If you go through them, it's very easy. Bring up the chart from the Explorer, and then you can bring up another one if you want to, and keep going through them. Very easy. 2 monitors helps with this. So I've got that. Now let's do the same thing. So right click, let's go ahead and make an inner window. And let's go ahead and bring up option scope now, option scope. And this time, rather than limiting it, I'm just going to look down into the options. We're at, about 190 right now. All right. And I guess I have option scope up already. So hang on a second. Find it. There it is. Okay. Option scope, ARE. And am I limiting it because it's not showing me any options? And I'm sure that this is optionable because it's from the Dow. It's got to be. Or it's from the SP 500. But it can happen that it's not. What's that? What's that?
Maybe the clear off filters button at the top left.
Yep.
Just maybe try and reset that.
Thank
see
you.
if it pulls something.
Thank
there
you.
You go.
You always
Tech
say
services ready to help.
I love it. Thanks, Jeffrey. Okay, and if I look down here, I'm looking for enough volume. Now this is kind of a thin stock, so I'm not really seeing a lot of volume on any of these options. Here's the volume column. So I'm going to go ahead and go through the process, but I would not trade this because of that factor. But see if we can just see here, go up to where you've got a reasonable price. And this all the way to March. We want to go pretty close in. February 18th is good. Well, we got 284 contracts traded here, and that's at the 220 strike. A couple dollars up. That's good. I'll take it. Okay, so click that, and we should get an options chart. It comes down. Dynamic. All right, that's good. So now I do my window cascade, and just pulls down a little bit. And I've got that chart right there. Click it, drag it. It's all good. Ooh, okay. Here we go. So I've got this chart loaded. This is just beautiful because this option, it was trading, up here at like 7. Now it's like 25 cents. So if that stock does go up, like up into like the 50% zone, which is very common for, big pullbacks like this, it would gain, let's see, it's at 189 right now. So it gets up to 205. What's that, a $6 delta 50%, which is typical at the money. So that's $3. So this thing goes from, 30 cents to, $3.50 or $3. That's 10 times. So, but this is how easy it is. So you build up these charts with your candidates, you put your trades on with a broker, and then just monitor this option chart and see how the market is behaving around it. If it's turning up, it should if this goes up right here, you should see it take off like right away. And then you can put stops on the option chart. You can put moving averages on it, all these other things to just kind of manage when you're going to exit, or you use the basic rule. If it loses half its value, you get out, or to expiration, or are the two kind of non-chart things you can do. Okay, so that's my my quick live demo of this. And like I said, I have all these notes and the other video, which is very detailed, that I'll send to you at fulgent.ai. Happy to do that. Okay, let's go back here and the PowerPoint. And I think we had one other point here. Oh, here's what Jeffrey told me to do. And I forgot my own slide. Clear all filters. Okay. So we talked about volume being high enough. You want your option to be somewhere in this range is a good range for a call option. And you want the bid and ask spread to be a small number. You don't want to trade something that is bid $3, ask $4 or $3.50. That's too much. 50 cents on that is way too much. You'd want it to be more like 6 cents or like that. So 5% of last is a good rule of thumb. All right. And then you plot it, you double click, which we did. You click window cascade, which we did. Then you'll see that chart you were just on right below the one that the option was plotted into. You drag it in there, and then you can delete that empty chart because it's no longer needed. Okay. So that is really simple. And again, the ability to see those historically and to see the curve of the option chart is really, really important to trading it. Okay. So trading examples, and we're actually getting, I think we'll get pretty much on time here, I think today. It'll be okay. And not that I'm rushing, because I'm not, Jeffrey, don't worry, we're good. Okay, let's just look at some slides I did. So I've got some trading rules here before I show you the examples. Like if you're doing options in an account, I wouldn't do the 100% of the account. I'd take 10% of it, because if you double and triple those, you're adding a very high effective return without taking a whole lot of risk. And so then limit the option to 1% of the account. So for a $30,000 account, I'd do 300, like one contract. But you saw what happened in that example. I mean, that 300 can become 1,000 pretty easily. So that's just a really good risk prudent thing to do. Monitor the chart, watch what this is doing. And this one's all over the place. So see, it's important to see this, even though that's not. So we probably don't want to trade that one. So, but watch, the smooth ones are the good ones that come down, they start turning up. Oh yeah, those are the good ones. And then you want to either hold to expiration or take profits on doubles, or at a 50% or sell at a 50% loss is kind of the basic rule that sort of works. Okay, so here's an exploration I did on this particular day, and just some examples. In FISV, right here, the stock from there was up 4%, the option 71%. And this folks, this can happen all the time. Here's a beautiful option chart on GPN, just absolutely gorgeous. You come down this saucer pattern, you've got the signal, it just makes you want to go do it, doesn't it? Like boom. And just to there, 246% gain on the option. Oh my God. And the stock only moves 6%. And, you know, and my stop loss is like nothing. It's like around $1. So it's $100 for the trade, controlling all that stock, 100 shares of this thing. So, okay, here's MGM. Stock only goes up 5% off the swing trade signal. Bingo, 74%. And this may be the last one, I think. Let me check. XRX. Nope. Here's Xerox and 4% here. Again, look at that beautiful option pattern. It matches the chart. That's really great. It's not all over the place. Boom, takes off. This is really cool. Twitter, everybody loves Twitter most of the time. And so here at this signal, here's a fulgent, actual fulgent signal that happened on this chart, swing trade. You got it right there. You take your option and oh yeah, baby, we're liking that. 216% versus 13. And here's, let's see, Avgo, Broadcom. And so there's our signal, swing trade signal right there. And it's kind of volatile, but it gets up to 122%, more than double on the option. I think we got one more here on Boeing. And this one was, you know, nice gain. It kind of pulled back on me a little bit, but again, you know, I've invested so little for the option. I'm not really that concerned about that. I'm just letting it go. And so, you know, and then it reverts back. The swing trade was a little early, signal reverts back and gets up here for a 38% gain. All right. So that is how this works. Really straightforward. And you get a good signal from anything. I use, you know, Fulgent, of course, but any good system you have that's directional, it has to be directional. Take these option trades. You may spend $100 on a contract where you can make 500, 600, you know, or whatever, a large number, depending on how far it moves. And your stop loss is that $100. That's a tight stop loss, really tight, much tighter than you can do in charts, by the way. You can't do that. You put that little tiny stop loss on your chart and not lose more than $100, and you're going to get stopped out in 2 seconds. So that is the beauty of options, my friends. That's it. Okay. So yeah, here's the sales pitch, sort of. Now I want you to understand what this does, because I know Jeffrey's going to talk about a special on it. So you need to know kind of what Fulgent is and some other things about it. So as I say, there is a Fulgent user interface in here. You just go to Tools, Fulgent AI. And actually, there's another Fulgent product in here, Fulgent Patterns, which Jeffrey also sells at MetaStock. We're not going to look at that, of course. But if I double click the stocks, FT stocks, you see those 4 experts there. And you know, we have long and short signals, and I can turn individual ones off if I want to. That's fine. There's also this strength rating thing down here. And so I've got it showing all signals, but we know the accuracy of these things in the past. So I can say, just show me the 70s, you know, I just want to see those. And if I can get to it here, I need to close, option, a second here, close this thing and close this. So I'll go back in here to it. Sorry, jumped the gun there. All right, Fulgent AI, and it's down here now. Double click stocks. Oh no, don't do that. Down here, 70. That's good. Okay, so go ahead and put that down and refresh the chart, and you'll see some of these signals will go away because they don't have a 70 rating. Okay, I think maybe, well, actually they all do. So I have to go back in there and make it 80 or something. But the more I increase that requirement right here, it's very simple. Let's try 80 and see if we get any back on this chart. So, all right, there's 80. That's going out there saying, give me all the signals that are 80 for this chart. And refresh. And we got 1, 2, and those are great signals. 3 winners right there. Okay, so that's that. And let me see what else do I have to show you. All right, we looked at the expert. Hold on. PowerPoint time. Strategies we have in Fulgent. We just looked at this, which is you can turn long shorts. And last thing is the expert advisor commentary, which, as I showed you, shows accuracy, the number of times that was found in the historical data, and the average profit, which that's pretty good right there. So you have all that shown to you. Very simple advisor. This tells you what the signal is looking for each one of these experts, and it's really simple, easy to use. Okay, so the last thing I want to show you is the flexibility of this, because we've just been using it. Bring up the charts, get a signal, go trade the option. Awesome. But a lot of you guys and gals are power users. You know MetaStock, you've been using it for years, and you have your own formulas, right? So what you can do, there's an indicator in Fulgent called the user input indicator, and it actually has, if I can get to it quickly, let me just see if I can. Fulgent, because it's really pretty cool. If I can get to it, Fulgent user. Okay, hold on 1 second. Oh, I don't see it in the list there. All right, I haven't access, so I can't get to it right now. But the manual shows you how to find it. How to actually get it. It's a very simple file. It's an indicator, code. But there's a place where it has this little condition commented out, and you can make it anything you want. You can say volume increasing. You can say any formula in MetaStock that you can call, you could put right there in that indicator. And it will actually train the entire system to that condition. So you can make your own expert very easily with what you have. This is the example on RSI less than 30. And you can see, there's a lot of places where you go less than 30 or greater than 70. The other condition for short. And what I did is I just trained Fulgent on that one condition with all the other things it has in there. It's got all these indicators, thousands of them, and it finds these signals when RSI is below 30. So a lot of you are going to really like that, because you can really make it your own and do, probably come up with better stuff than we have, frankly. This test, I compared it to a basic RSI system without the AI, and that's what it did. So the AI is better, which you, of course, would expect. So anything you have, you can use and make it more profitable. 1 second. Austin, allergies are bad. Great place to live, but allergies not good. So here's my summary for this, and I think we made it, Jeffrey. So Fulgent AI is integrated seamlessly for powerful experts to help you find these amazing trades, and you can retrain it on anything, your symbols, your indicators, your time frame. You can do real time, you can do monthly. It doesn't care. It's looking at RSI, MACD, volume, Chaikin, all these things, and trying to find rules that are profitable in the past over hundreds and hundreds and hundreds of samples. And you can watch it do it. When you say retrain on my thing, you watch it. And you'll see it going boop, 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 boop. As it finds rules, it'll show them, well, we found 100 so far. We found 500. We found 1,000. And then you make your cutoff. I only want the ones above 70. I only want the ones above 80. Nothing can be simpler. And that's how it's designed.
It's fun to watch it draw.
Yeah, you've done it, right?
Yeah.
So this is where you pitch in. I do want to show the option training materials that I have, the video and all that. So Ed at Fulgent AI, if you'll email me, I will be happy to send those things to you. And so you can go through that MetaStock and do it yourself with the options with whatever system you're using. So happy to do that. All right, Jeffrey, we made it.
All right. 2 questions that I promised I'd ask. So
okay.
Eugene wants to know, is it okay? He wants to know if Fulgent can be used for selling options for time decay in particular.
Absolutely. In fact, I've been doing this many years, over like 34 years, and I can tell you the customers that call me that are the most consistent and doing the best are selling naked puts. I mean, if you've got, you think about it, people are afraid of them, but if you sell a naked put, you keep all the money. If the stock chart goes up, just, sell one like a strike price below where you are. If it goes against you, it's like you shorted the stock or you bought the stock, and you're going to take the loss that would happen if you had bought the stock. So, I mean, we all have bought stock and then had it pull back on us. So that's the risk. But if you get highly directional signals and sell those puts, your odds of success are very high. Good
Sanjay
question.
wants to know. Yeah, I actually, that was great. I found the answer more interesting. That was really interesting. Sanjay wants to know if you like to trade in the money or out of the money options.
Out of the money.
I prefer
Now,
that too.
in the money is more stable, but out of the money is where you get the 5 times, the 10 times. So, over time, those really big gains just make it. I mean, those are the ones that wipe out all the little, expiration to zero things. So yeah, out of the money, just out.
Kenneth wants to know if you're going to combine your AI capabilities with your crypto research.
Uh-oh. You found about crypto. Yeah, we'll probably making a crypto product for MetaStock here pretty quick. That's very new for us, getting into that, and we had to. It's a lot to it, but yes. So the AI is applicable to anything, and crypto is a great thing to trade. because it's very directional. I mean, it moves a lot. I'm sorry. I mean, it's lost half its value recently, so it's moving a lot. So yeah. And I know Reuters has crypto, right, Jeffrey? Pretty sure.
Yeah, we're working right now. I think we have about 6 coins, and that's something we're working on.
Good. Yeah, it's very popular. So yeah, awesome.
Brian wants to know if it works on intraday.
Absolutely. Now, the knowledge bases were trained on end of day. So if you really want to do real-time trading, I would take what we have and just tell it to retrain it. It'll make a copy. It won't destroy the original. So in that interface I showed you, you'll see another line there for the one you made when you train. And so, yeah, just bring up I'd suggest doing like a 15-minute chart. And, technical analysis is what it is. It finds psychology in charts. So yeah, it works.
Very cool. Thanks, Ed. I really appreciate it. I love the fact that you're always working on something smart. It's always great to have you. Thanks for coming in.
My pleasure. Loved it.
Right.
Thank you. And thanks, everybody.
Right. Thank you. All right. Another great presenter. We love Ed. He just does such a good job. He's so solid. Let me go ahead and kind of share my screen real quick here. Let's see. Yeah, this is me. Okay. And let's go ahead and do that. And we'll just talk a little bit about, Ed does such a good job of showing it. Just to reiterate, though, it does include the all of the functionalities of MetaStock. You can test trading ideas with it. You can do scanning. It's got the commentary that I like so much. It's really a full integration to MetaStock, and Ed showed how good those systems perform over time. He compared them to some of the built-in systems. Just a full integration with MetaStock. He always does such a thorough job when he puts it together, and I love the fact that it provides some artificial intelligence into MetaStock. I think it's great. I've always been a fan of Ed's work and everything he does, and it's a good package. So we are, even though it's been out for a little bit now, Ed hasn't made me change it from the introductory price, so I didn't. Normally the Fulgent AI is $149. We are offering it on an introductory price, or let's call it a summit price today, since it's been out for a few years, I think, of $99 per month. You can go ahead and give us a call at 800-882-3040. You can chat online with us at metastock.com/saleschat. And we do include it as part of the big Summit Action Pack that we're doing today, where you can get the candle profit system that Steve showed at the top of the session today, the GoNoGo charts complete, the Fulgent AI, a 3-month subscription to learnmetastock.com, 2 years of Stocks and Commodities magazine, and our own home training course called Unleash the Power of MetaStock. All of that could be with it. It doesn't include MetaStock. If you want to include MetaStock as part of that offer, if you're not using MetaStock and want to see why it's been rated so highly for 28 years straight, you can add that. Prices for that just start at $69. MetaStock is extremely cheap, which I'll cover when I have a little bit of a chance to talk after HEMA here. But you can get that. You can add it to your package for as low as $69 per month. The price for all of this, though, that you can see on your screen would normally be $2,839. Here today, you can get it at $1,346. Most of it, everything but the subscription aspects of it, are available with our money-back guarantee, so you're able to try it. You can take advantage of that by giving us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. You can also get it at metastock.com/summit deal. So there you go. Before we get to HEMA, I do want to say real quick thank you to our sponsors today, Stocks and Commodities Magazine, as well as the CMT Association. They've been supporting our events for a number of years now, and we really appreciate it. Well, past for years and years and years. CMT is a new sponsor for us, and we're very, very happy to be associated with the Charter Market Technicians Association. So with that being said, we are getting closer and closer to being back on time. So we have another one of my favorite presenters coming on. HEMA is been in the webinar room with MetaStock for many, many, many times now, and we love to have her. I like her take on the oscillator that she's going to talk about. And I did get a little bit bashful because I always I think it's the RSI. Last time I said stochastic and it was the RSI, and I was embarrassed. So if I get that wrong again, I'm going to be embarrassed again. but she does a really good job. We love having her. Hema, how are you doing today?
Hi, I'm good, Jeff. How are you doing? Can you hear me all right?
I'm doing great, as long as RSI was the correct indicator.
You are right. Yes, yes. You got it.
All right, I'm done. That's it. It's not going to get any better. I'll see you the next time. Hema,
Okay.
we love having you. I'm going to turn your time over to you. Let's go ahead and make you the presenter. I was really embarrassed that day too, because I knew it was the power zones. In fact, I helped you code them.
Yes, you did. You helped me code it for MetaStock. So, well, now you got it. So I think now we're good. All right, awesome.
We can see your screen. You're coming through. You sound good. I'm going to go ahead and I'll get out of the way.
All right, terrific. Thanks, Jeff. Appreciate it. Good seeing you as well. And I'm excited to be here. It's like I'm like the halftime, midday marker in terms of this awesome lineup today. So I want to just check in with everyone here. Please type a Y for me in your question or chat box so I can just kind of get a sense of who's in the room here. You know, come in on a Saturday to work to transform their trading, right? That's what we're all trying to do here. Because it's awesome for me to be here with you. And I'm very excited to dive into, as Jeff said, my take on the RSI called Not Your Mama's Momentum, How to Profit in Any Market on Any Time Frame. Okay, awesome. I see some yeses coming in the question chat here. Hello, Stephen. Hello, Marie. Awesome. Good to see you guys. And I believe in this setting, there's also a YouTube audience out there. Hello, YouTube audience. And I'll be happy to take your questions towards the end of my presentation. Awesome. We got Mohammed, Jim, Raj. Fantastic. I mean, isn't trading awesome? You can do it from anywhere. You can do it in any condition, as we've all learned in the past couple weeks here. And what I'm about to show you can work in, like I said, any market and any time frame. So let's dive in. So you're here for how to trade momentum. Get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? How many of you want to get as much as possible out of our time here together? Yeah, I want that for you too. Okay, for most of you here with me today, this is going to be a long-term relationship once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow. You'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. Now, I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends, because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. Right? I'm going to show you current case studies and figures today. As you all know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. All right, your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you, all right? I don't know your trading plan, your account size, or your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? If you haven't been following me for a while, here's a mercifully short introduction. I'm Hema Reddy, and I'm originally from New York, the hotbed of the markets. Now, I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT, chartered market technician, working as an analyst at Piper Jaffray before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I have helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders, and I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Oh, it's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been this way. Years ago, life seemed great, right? I was in the center of the action with Piper Jaffray, making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Is anyone else here a corporate cog making someone else rich? I know, right? I thought there must be more to life. You know, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world when my beloved dad and mentor died suddenly. At first, I felt like my whole world was crashing in. I had to leave my job to tend to financial and legal family matters too. But then I realized that this was my ray of light, my hope to get out of that corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a little futures report that I called my Skinny on the Mini. Now, it started out as just another exercise that I started to do after the market closed, but soon my dad started making money with my little report and relying on it. Then I shared it with other traders too, and they were benefiting. But all that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized it was time to bring back the Skinny on the Mini and reclaim my life. And I sent out the call to my former subscribers, and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father, and in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what? Yeah, type it for me in the chat there, guys. That's right, freedom. I mean, there's only so much time in each day. And when I got my time back and my family back, that's freedom. Clearly, that's what we all want, right? It's freedom. I mean, wouldn't that be awesome? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? They made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading futures, stocks, and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. Right? Trading momentum can be easy, but first you need to understand how it works. A Formula One car racing track will have you understanding momentum in no time. All right, so let's go to the racetrack and you'll see what I mean. Let's put ourselves in the driver's seat here. Okay, you're at the starting line of the track. You rev up your engine, you're in that hot little red car there, and you go. You pick up speed really quickly or accelerate on those straight runs. Then you see a turn coming up, and you have to ease off the gas to slow down, right? You want to prepare accordingly. And you do that even if it's just a little bit so you can have more control over the car as it whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. So are you getting the idea of how you'd accelerate and decelerate on this track? Type a Y for me in the chat if you guys see that. Even if you've never studied momentum before, this is the grounding you need to be able to use it. Okay, awesome, because again, then that way you know how price momentum works. So let's jump into the helicopter that was looking down at the racetrack and get a bird's eye view of it. You see, the racetrack becomes priced as you see it on your stock charts, and momentum is generally plotted on the bottom as a subchart. Making sense? All right, so when price is trending higher, you've got upward momentum that's improving. Now that upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Are you guys getting this? All right, let's look at the other side. During falling prices, there's falling momentum that's becoming a more powerful force. But when price is approaching a bottom, you usually see momentum bottom first. Therefore, momentum indicators can warn of hidden strength or weakness and give you a heads up, especially when it comes to potential market turns. So that's the value in having momentum applications in your trading. Awesome. And now we're going to dive into the indicator. But first, let me share with you results from our trading family. Hema, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. All right, now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, do you want that Jedi secret, that Jedi twist? Okay, great, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. And that indicator is called the RSI power zones. And you can use it on any market in any time frame. So take a look at the left column here, guys. You've got a variety of asset classes. Do you see a market that you trade? It could be one of the indices, maybe the S&P E-mini, like my baby, NASDAQ, Dow. Maybe you trade stocks, tech ones, or others. How about ETFs? Anybody here trade the SPY? I have lots of coaching students that trade that. FX is your currencies, commodities is wheat, gold, oil, and more. So let me know, what market and time frame combination do you trade? Because it's important for me to see that you are trading these active, engaged markets and can translate the RSI power zones over. I'm going to show you how to do that here. I want you to know I'm speaking your language. So for example, every day in the skinny and the mini, I cover the E-mini S&P 500 futures and I analyze them on intraday markets. My trading time frame is 3 minutes. How about you guys? All right, awesome. So we've got to look at the RSI power zones on a variety of markets and timeframes for you to get to know it and get comfortable with it, all right? So I'm going to go through a variety of markets and timeframes, starting with a commodity that we all know, whether you trade it or you just pay attention to it at the gas tank. And we're going to look at this on a monthly chart and then drill down from there. All right, awesome. Now we're going to look at oil, because like I said, whether you trade it directly or you just check it out at the gas station, it's important to monitor. So we have these 4 zones on the RSI that I need you to be aware of. So follow my little purple cursor here, okay? The red and green lines are these distinct zones that are part of the RSI power zones, and the black line is the RSI itself. So I'm really laying that out clear for anyone who's never used the RSI before. Now these zones have distinct names and we're going to go through them. But the important thing is we're going to look at all of these zones and we're going to look at them versus the history of price action and what happened in oil. So the 2 lower red lines make up the bear support power zone. The 2 lower green lines make up the bull support power zone. The 2 upper red lines make up the bear resistance power zone. And the 2 upper green lines make up the bull resistance power zone. All right. So let's take a look at this price action again over several years, and we'll flash forward to today as well, and see how the monthly action on oil tied in with the RSI power zones. So you can see that there was this huge run up in price that took us to these crazy new highs above $200 a barrel. Do you guys remember that? And that strong advance higher was accompanied by the RSI power zones on oil rising from the bull support to the bull resistance, the 2 lower lines to the upper 2 green lines. This is what was evident in the monthly time frame. So this would help you stay trading with the trend. Okay, not a lot of people know that the original RSI was mostly developed to be helpful in trading ranges. And that's great when the market's kind of just going nowhere, going sideways. But I want you to be able to use the RSI in any trending environment. And this is the first step to doing that, is deploying the zones. Now, after that run up higher, there was this massive sharp fall, right? It took out the previous lows in price. And when it did this, the RSI power zones fell way lower to the bear support power zone. Now, I was an analyst on Wall Street watching and analyzing oil and many other markets for my institutional clients. And I told them, hey, I don't think this is a one and done here. all right? I think this weakness, this trouble in oil is going to stick around for a while. And it sure ended up that way. We went into this giant sideways range for years. And the thing is that every single price high that formed coincided with a peak in the RSI. That's what all those vertical yellow lines are. This gave me another clue as to the future direction of the breakout. So from a general news perspective, right, the world thought, hey, after falling to $100 a barrel, there's no way oil is going to fall lower, right? It'll climb back to 150, 180 and go up from there. Yeah, not so much. We had another drop, still quite substantial. And both lows that formed in price saw the RSI power zones push down into the bear support power zone. Do you see that? That pressure even lower and lower? And it continued to pressure there. So if you have the zones in place, it would be easy to have this selling mentality stay put instead of getting excited every time the RSI got to some random level called oversold. Are you guys getting this? Okay, awesome. Now what happened from there? Was there a recovery? Absolutely. But even that recovery on its first attempt higher capped at the bear resistance power zone. So this is the action that you can see on a monthly time frame of a very highly traded and followed market. So you might be wondering, well, that's great, Hemo, but what about right now, today? What's going on with oil in the RSI power zones? Well, let me show you. Now, today's a Saturday, so this price action is through the end of day yesterday. I took it after the market closed, January 29th, 2022. This is what the monthly oil chart looks like. So you can see that this gray vertical line is where my last chart left off. And look at everything that happened after that. Again, follow my purple arrow, okay? So you can see that after peaking the bear resistance power zone, and there was also a pattern for the RSI, which I'll talk more about in a moment, there was weakness, right? We fell on oil, then consolidated for almost a year, then fell again. Notice that the fall into early 2020 pushed down into the bear support power zone. After that, climbing higher. And again, this is on a monthly time frame. When you look at this on a weekly or a daily time frame, you could use the same RSI power zones and actually pull out trade opportunities in the same direction as this monthly trend. So can you see how looking at the RSI power zones on oil might have better helped you navigate trades in oil or markets related to it? Type a Y if you guys see that. I mean, this is huge, right? It's like opening up and seeing it with glasses on for the first time. Awesome. Now let's take a look at another popular market and time frame. I'm seeing here in the chat a lot of you trade S&P related markets and stocks. So let's look at an ETF on a weekly chart. And that ETF is going to be the SPY. So again, we've got the same four zones, okay? And again, the black squiggly line is the RSI itself. This time we're on a weekly bar chart. Every single candlestick is representing just 1 week of price action. Now notice there was this sideways action on the weekly chart for like 2 years. Then price broke out above the dash line and then it pulled back to where it's highlighted in yellow. Now here's a really important point, guys. That pullback, that drop down in price, it provided an opportunity to be ready to go long if you were using the RSI power zones, but not if you were just looking at the traditional approach. You would have totally missed this. Who would have liked to be buying SPY in late 2016? Pretty awesome opportunity, right? Because if you've been paying attention to the markets for any time, you know what happened after that. This happened. Huge advance higher. And that whole advance saw the RSI continue to improve, ultimately reaching and extending beyond the bull resistance power zone. So this movement from one green zone to the other, it helped you stay looking at the long side, right? Looking at buying moves in the strong advance. Now, from here, something really interesting happened. There was this very sharp drop lower. And in 2 weeks, you can see that about 10 weeks of price action was taken out. Now, this was a couple years ago, but this is all feeling very familiar right now, isn't it? January 2022. Now, looking back at what happened at the start of 2018, look at how the RSI power zones, all it did was go from the bull resistance to the bull support, and then it held there, just hung out. It basically relieved itself of overbought conditions. It's like a marathon runner just stopping to get that cup of water from the sidelines for a second, okay? Marathon's not over. They're just pausing for just a moment to refuel. So when I was writing the skinny and the mini at this time, right, on the E-mini S&P 500 futures, which was directly related to the SPY, and when everyone was kind of freaked out by this price decline in the market, I said, listen, I think this is just a sign that we're going to go sideways for a few months before the uptrend will resume. And that is exactly what happened. We had a sideways range on the weekly chart, but this presented in tradable moves on the daily or intraday charts. Again, all hinted by the weekly charts simply unwinding those overbought conditions. Okay, so you guys know the toy, the Slinky, all right? I grew up playing with those. So it's this metal coil, and you usually threw it down the stairs and watch it keep tumbling, right? So when the markets are moving up or down really fast, that's the Slinky in motion, okay? It's just doing its thing. Momentum is building up in those coils. But it has to compress in between before it can expand again, right? It doesn't just expand infinitely. That's what market consolidations are. That's what these sideways ranges are. And the RSI power zones helps you be ready for them. Now, from there, the market did resume higher, and this coincided with the RSI power zones resuming higher once again. So again, you might be wondering, that's awesome. What about today? What about right now in this crazy volatile world we're in? Well, again, here's the SPY chart now captured in the weekly time frame as recent as it can be. Today, Saturday, January 29, 2022. So let's follow along because here I have a lot more data from where the last chart left off, okay? So follow my purple cursor. The gray vertical line is where the last chart left off. So what happened from there? Well, we had an advance, then a fall into the end of 2018. Moved up from there, and this was a series of moves that were very volatile. So this is an important lesson, guys, that it's not just trading between the green or trading between the red zones, okay? There are other factors involved, and I'm going to show you those in a moment. But I want you to notice something ever since the pandemic low in April 2020. Notice that the pandemic low formed with the RSI way down in the bear support power zone. Then it lifted up. And look how it really never got that oversold after that. And the two times that it did get oversold, July of 2020, and then mid-October into November of 2020 were excellent buying opportunities because it came back to the bull support power zone. You see, you would not have been prepared for that if you're using the regular RSI. Again, this is a weekly chart. So when you study it on a daily or an intraday time frame, we can break down the moves even further. I just want you guys to be understanding how the RSI power zones works, getting to know it. So can you see how looking at the RSI power zones on the SPY in the past few years might have better helped you navigate trades in the SPY or in markets related to it? Hey, type a line in the chat if you guys see that. All right, awesome. Now we're going to dive into the trade setups. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it. So we're going to dive into my proprietary three-step approach to using RSI power zones to finding great trade setups. I'm going to show you actual setups that I use and share with my trading family. All right, so here we go. You're going to want to take notes on this slide. We're going to have steps 1, 2, and 3 laid out. Ready? All right, so here it is, using RSI power zones to identify trade setups. Step 1, review the chart and assess the price trend. Now you might be like, wait a minute, Hema. This whole time you're talking about momentum in RSI, why are you starting with price in step 1? Because price is king, guys. Price rules. Price is the source of data from which the momentum RSI is even calculated, right? And we'll benefit more from trading momentum if we are very clear on what the price trend is. So when you make this assessment, I'm going to show you how in a moment, you'll have 3 choices you end up with: uptrend, downtrend, or sideways. And yes, sideways is a type of trend. And you can be prepared for the next directional move to profit from if you know how to monitor the momentum of the sideways action. Step number 2, evaluate the RSI power zones reading. So this is specifically looking at the RSI value relative to the 4 power zones. Right? Each zone, as you saw, has a distinctive upper and lower boundary or border. And there was 4 total zones, right? So this means there's some white space, some gaps in the RSI power zones. And it's important to know if the RSI is in a zone or moving in and out of a zone, or if it's just hanging out in that dead space in between that I call no man's land. And we're going to see all of this in my examples coming up. Step 3, determine the presence of an entry signal between price and momentum. And usually the best signal comes from when momentum and price are not connecting, when they're not like jiving together. that's usually an opportunity that we could take advantage of for profit. All right, so you've got your 3 steps for using RSI power zones to identify trade setups. And I'm going to repeat these steps. You're going to have them down pat by the end of our training. And the best way for you to learn is by using actual examples. And you know, something I really pride myself on is that I practice what I preach in the analysis that I share with you. Traders in the HEMA Ready tribe, they get updates from me. My members get even more detailed updates. And every single example we're about to walk through here, I called out to my members as it was happening. All right, guys, I didn't have it tucked away in my back pocket as a textbook example to show one day. Anybody can do that. I'm going to show you actual calls I made when they were happening. So I want you to type a Y in the chat so I know that you see the value of what you're about to implement here. Awesome. All right, so let's dive in. So we're going to go back to our combinations of asset classes and timeframes. And these are just a sampling. I know there's plenty more. So now let's look at a stock on a daily time frame. Any stock traders here who look at daily charts? I'm sure there are plenty of you. So let's take a look at Netflix, because this is the FANG complex, and I get asked about those stocks a lot in my monthly group coaching. So again, the steps I'm going to show you here in the chart, and we're going to do them together. Step 1, review the chart and assess the price trend. So I was taught to review price trend based on the bars that form and the relationships of groups of bars, okay? Some of you might use moving averages. And in the 4-zone system, I do give you a moving average way to calculate trend. It's sort of a extra helping hand. But the real way I want you to get comfortable with figuring out the trend is knowing how much price data to look at and looking for key swing highs and lows. So here we have a swing high, a swing low, a swing high that's higher, a higher low, a higher high, and what looks to be potentially another higher low forming. Too soon to tell. So on this chart, this is an uptrend with a corrective pullback in motion, meaning we are not on the up and away side of the uptrend, right? We're on the corrective, taking a breather, marathon runner getting his water part of the trend, okay? So that's a great place to be, because then you can find trades that are lower risk because you're not buying breakouts to new highs, you're buying on that pullback. Step 2, evaluate the RSI power zones reading. So in the same chart, we don't need to go anywhere else. We now bring our eyes down to what the RSI power zones are doing. And again, remember I talked about whether they're in a zone or outside a zone or moving between certain zones. You just want to assess what that action is. And here it's clear that it's holding the bull support power zone, right? It's living between the 2 lower green lines. Are you guys seeing that? All right, awesome. Step 3, determine the presence of an entry signal between price and momentum. Now there is a setup here where price and momentum are not jiving together. And I identified that opportunity for my tribe as it was happening. And this is the price action that followed. Shares traded off that low at 271.22 all the way up to 423.21, creating a 56% move higher. And I have a whole training that dives into RSI power zones for true mastery, and I will show you what that signal was in module number 2, because I can't teach you everything you need to know within an hour, all right? It would do you a disservice, and it would shoot you in the retirement. Yeah, I said shoot you in the retirement. Money isn't just money, guys. It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 20 plus years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can take a look at how I can teach you more in depth. Making sense, guys? Are you getting this? Type a word for me in the chat if you understand, because we're going to dive into another one of your favorites. But first, I have to know you're still with me here. All right, awesome. So here we have yet another stock on a daily time frame. And this was particularly cool because I was actually looking at this live with students as an opportunity present itself. So is this an uptrend, downtrend, or sideways, right? Review the chart and assess the price trend. Well, I'm going to highlight some highs and lows for you here. That should clue you in. Yeah, this is a lot like the Netflix chart, right? Uptrend in price with a corrective pullback in motion. Nice job. Step 2, evaluate the RSI power zones reading. What's it doing here? That's right, it's holding the bull support. Now, it dipped below slightly prior, but because of the patterns that are presenting themselves, that is a action that is unfolded, and now it is coming back up through the bull support. So the combination of knowing the zones and knowing the patterns is what makes this tradable and repeatable and easy to identify, right? Remember, it's not like a game of Frogger. You're not just hitting the ball back and forth between two zones. You've got to make sure that you are deploying all parts of my three-step method. So after we know the price trend and the RSI power zones reading, then we have to determine if there's an entry signal between price and momentum. Now, I was looking at this chart with students live on this day marked by this black arrow, okay? And using price and momentum, I was able to actually calculate a precise upside target for Twitter of $39.13. You can see that's about 30% away from where the price was. So we did that on April 10th, and here's what unfolded. Off of the low that formed on April 4th and with the upward momentum that continued on April 10th, price did meet the calculated target on June 5th at 39.13, and it actually continued higher from there. So again, I have a whole training that dives into all four of the RSI power zones, and I'll give you that signal and how to do the calculation even in the system. I'm just showing you here what you didn't know that you didn't know. That trading can be simple when you follow the expert. Making sense? Are you getting this? All right, awesome. Let's leave stocks and look at another asset class that I know a lot of you guys trade. How about a currency? Let's look at it on a daily time frame. So here we have the Swiss franc, and this is a daily chart. Same questions again. Number one, review the chart and assess the price trend. Now here you can see that there was a high in price, a low, a lower high, a lower low, a lower high, a lower low. I sound like a broken record. That's okay. A lower high, a lower low. What is the trend of this chart? Yes, it's a downtrend, and it's a full-on downtrend. There is no corrective bounce going on here, right? Okay, awesome. You guys are getting this now. So identifying this trend, step number 2 becomes evaluate the RSI power zones reading. Now here's where we're going to take it a little step further. So not only do we see that the RSI power zones is in between the two lower zones, if you take your eyeballs back with the RSI power zones, along with the downtrend in price, you can see that it essentially moved from the bear resistance zone to the bear support power zone, okay? So again, in the 4-zone system, I explain what's behind this and how you can interpret even more from it. But being able to recognize that is the first step. Step 3, determine the presence of an entry signal between price and momentum. Now, what was occurring here on this chart was very interesting because it was not an offensive move, okay? It wasn't a pattern setup to go and put a new trade on necessarily. It was a defensive move such that if you had any short positions, you should protect yourself. It then evolved to become an opportunity to go long. So we're talking about a trend change pattern here, not a trend continuation one. And this is the move that unfolded. Now, this went from a low at 0.9186 up to a high 1.0050. And if you know your FX math, okay, it's a little different than stocks or futures. You know that just one contract on this move, that's an $8,600 move. Now, here's the thing, guys. I'm not saying you would have gotten into the exact precise low and exited at the exact precise high. I'm talking about getting that meat in the middle, right? Who would have liked to capture 50% of this move? 60%, 75%, right? That's what the RSI power zones can help you do. And I have it all laid out with the exact steps of what to look for, how to put the trades on, how to manage them, and everything. So I'm really excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the markets so you can take control of your financial freedom and live the life you and your family deserve. By now, you know that power zones on the RSI can really boost your trading because whether you're new to studying momentum or you've been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Making sense, guys? Are you getting this? Type a yes for me in the chat if you want consistent profits. Yeah, we all do. And that's the result our trading family loves seeing too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Here's what more of my students have to say. I was very impressed with the education HEMA provided that came with my indicator. HEMA's RSI Power Zones indicator has become the standard in all my charts, said Rob. Norman shared, a day after learning one of HEMA's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning when the market opened, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. This system that can give you all that is the 4 Zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using this system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You can pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who is this not for? This is not for those who are trying to get rich quick. Okay, like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this is not for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 Zones RSI coverage system, I give you my 20 years experience on a silver platter, and it's 100% focused on step-by-step systems, instantly accessible, starting with video tutorials, where I take you by the hand and I move you through the 8 phases of a trade. So you have a complete system to your approach so you minimize mistakes. I give you my top RSI Power Zones trading signals from years of study and observation with various real-world examples across multiple markets and timeframes. And I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. Now, to make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. Okay? This is one of my favorite things to do for my students because it really boosts your learning. I remember back to middle school or high school where maybe you had a math or a science test, right? And you learned something on a Monday and they try to quiz you on Thursday. Well, the teachers who are really invested in you actually learning usually let you have a little cheat sheet that first time around with formulas, with pictures, with whatever you needed to really help you ace the test and learn faster. So these are going to be easy to read grids and illustrations like this, all filled out along with the step-by-step strategies, moving you faster on your path to boosting your trading account, right? Like a helping hand so you can grab it, physically grab it off your desk or open up the PDF when you are trading if you need extra help. Awesome. Now you're going to love this one, okay? This is the very thing everyone is always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock, our host here today. So you can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever, no limit. Now, I've had many traders email in and offer me hundreds of dollars just for the indicators alone, but I'm giving them to you here as part of the complete system. So I've included everything to set you up for success, right? Video tutorial education, a cheat sheet to keep by your trading desk, the indicator itself. The only thing you could possibly still need is for me to take you by the hand personally and help you. Actually, would you like that? Would that help if I hopped on the computer with you and showed you live how it's done and answered your questions right there on the spot? Really? Are you sure? Okay, then. I'm going to give you everything, including me. You'll have access and invitations to monthly group coaching for life. Once a month, you'll get together with me personally, and we'll spend an hour together, and I'll personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. Right? This is a group setting where you can come in and ask whatever questions you'd like, and we're going to do this once a month, and you're going to continue to have that resource to work through and boost your understanding of the RSI power zones. Now you can see that I've built in everything you need to boost your trading with the RSI power zones. The 4 zones RSI coverage system, with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI power zones, is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live. Now, this is priceless, but if I had to put a price on it, this is easily $797 for just the first couple months, because I easily charge $500 an hour for my one-on-one coaching. But you get me here for life. And the RSI Power Zones indicator, available for the most popular trading platforms with free updates for life, including MetaStock, is valued at $497. The total value is $3,488, and it's worth every penny. Now let me ask you, if all the system did for you is help you trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you could quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of this system is $3,488. Because I want to make an investment in your future, because I want you to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. You can get started now by heading to hemaready.com/metastock. And I'll make it even easier for you. When you visit hemaready.com/metastock and invest in the system today, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy it back guarantee. Okay, take action now. Use the complete package for 90 days and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. I want you to be 150% satisfied with 4 zones RSI coverage system, because after all, my clients tend to stick around a long time and become my friends too. So follow the whole system. Okay, I want you to get out there and treat it like a rental car. Put it through its paces, drive it all over the place, wear the tires off the thing. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you, personally work with you. And what I really want is for you to be totally satisfied. And that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488. And I am bringing in all of these aspects you see here to boost your trading and make it move along even faster. And for a limited time, I'm giving it to you for the simple, easy investment of $297. So go ahead and take action now. You can go ahead and visit the page to sign up. And let me show you exactly what will happen when you join us. So you'll immediately get login access with emails, login access email with details. So this is what the HEMA Ready portal looks like right now. And you head over there, you're going to see the RSI Power Zone system in the third column, second row down, okay? So you log in there, and then you're going to come in here, and you're going to see the 4 zones RSI coverage system at the top. All the training you need is right here under 4 zones RSI in the menus, where you can easily get to it, and you can get started. It literally says start here, okay? We really make it easy for you to get your education going right away. Now, what's all this other cool content? Well, some of it's undisclosed bonuses. You're going to see those tabs are going to be available and open to you, and you can check those out. You're going to love it. We love to over deliver. So take action now, because this offer is only available for a limited time and only for this MetaStock Online Trader Summit. So go ahead and visit hemaready.com/MetaStock to take advantage of this limited time offer and get my entire system for just $297. Now, I know we've been in a really wild time in the markets lately. I mean, wild start to the year, right? So you might want to look at your tickers or your markets right now and see what the RSI Power Zones looks like. So I'm going to do that for you. Would you like that? A little taste test, a little sample of monthly group coaching live? Okay, great. So I'll continue to move through the markets and show you what I'm seeing. If you have any questions coming in, or if Jeff is seeing any questions, please let me know, and I'm happy to answer them.
I'm not seeing a ton of questions over here, Hema.
Okay. So if there are any markets that anybody wants to look at, because that's usually the part where folks get excited here. And if not, I have some that I'm going to highlight for you. So I'm going to go ahead and do that here. So right now I have the panel that I normally use for my group coaching, and I'm going to look at a couple markets that have been really interesting lately. So we were talking about the SPY. I think everybody is aware that the market kind of took a deep dive, okay? But I want you to look at how the RSI power zones were helpful. Back here, they were actually starting to make some bearish patterns and indications at the beginning of the year that were actually really, really small and definable. So I kind of warned my tribe. I said, hey, I think we're going to come into consolidation. And this entire time here into the beginning of January, actually through the middle of the month, I warned. And even the day after NLK, I said, hey, we are in a consolidation. Stay out of the way. This is not the time to be buying stocks. I didn't even do my weekly stock picks that week because I knew something was brewing. And then boom, we felt lower. And part of the reason was because of what I saw in the RSI power zones. You can see that they had been capping in the bull resistance power zone for some time. That was not jiving with what the market should do if it was meant to continue higher. Look at how previously in November, it got so close to the bull resistance power zone, right? So that's just a sample of how you can pull more information out of one of the most popular markets in the world and be able to understand it better. Okay, awesome. I'm seeing some questions in the chat room here. So all the platforms for which we have the indicator are listed on the sign up page. So who's asking that? Steven, you can go check that out on the sign up page. I don't think we have VectorVest at this time, but we're also like, kind of like a DJ, take requests. And if enough people request the song, we go make the indicator. I mean, Jeff knows we had enough people coming to us saying, hey, I need this for MetaStock. And so Jeff made it for us for MetaStock last year, which is great. Okay, so we have some questions. Yes, you can absolutely use this, Jim, on intraday. So we're gonna look at the RTY and intraday. Okay, great.
Okay.
I'm just gonna bring up the continuous content. Yeah, Jeff?
Oh, I'm sorry. I didn't realize my mic was live.
Yeah, okay. No problem. Okay, so here
Frank,
we go, Jim. Let's take a look at the daily chart. So I'm just going to stick to daily, make it easy. In a full monthly group coaching session, I would work down multiple time frames and look at other factors too. But just taking a quick look at the daily chart, can you see how we kept coming down to the bear support power zone? And the thing is, by having an entire zone, not just one line of overbought or oversold, it helps you stay in the framework of staying with the trend. How many times, because I know it's happened to everybody listening right now, how many times have you been in a trade, it's going with whatever the trend is, up or down, and you're like, cool, I'm good. And you know what? I'm going to get out of my trade now because the market's about to bottom or it's about to top. You get out of the trade, you leave money on the table, and then the thing still keeps going. Believe it or not, the way I learned from my dad, that actually can be a little more psychologically damaging than simply being stopped out of a trade. Okay, being stopped out of a trade is you're just paying for a lesson in the market. As long as you learn the lesson and you don't make that same mistake again, you won't get stopped out for the same reason. But leaving profits on the table, guys, we can't afford to do that because when big moves happen, they are big moves these days, right? So this is another way to help you stay with the moves. So what I'm seeing right now, Jim, on the RTY is a lot like I'm seeing on the other indexes. We are in a little bit of a wait and see mode. There's potential for a bottoming pattern and seeing a defensive pattern set up between RSI and price. And you'll see that again in the session number 2 lessons in the system. So I would not go shorting anymore in RTY right now, but it's a little early to tell if it's time to go long. Definitely watch for potential trend change higher, okay? Awesome. So I see a question about gold as well. So Sanjay, I don't know what gold you want, so I'm just going to go to futures. So I started my education with futures, guys. So I'm a little bit more like tilted towards futures. That's just my comfort, my happy place. But all of these techniques work, like I said, on stocks, ETFs, currencies, even crypto. I mean, as long as it's active and traded, people use it all the time. And with options, a lot of my traders come and they use the RSI to study the underlying. So let's say you're trading options on like tech stocks. They apply the RSI power zones to the underlying stock, use that to help navigate their position, whether it's an outright buying or calling, buying or selling of puts or calls, or they're doing some more complex spread. Okay, so you should use it to really understand the underlying for sure. All right, so let's look at the GC here. So actually, this is really interesting with how sideways it's been going. But if we take this one down to intraday time frame, so I'm just going to go down to 60-minute to see. Very interesting how there was a bearish pattern here. Okay, Sanjay, at about 11 a.m. on the 25th, that was kind of an early warning sign. And then look at how we have lived between the red zones on the 60-minute GC chart. Now it's starting to turn. This is starting to look a little bit like that Swiss franc chart I showed you. So it's, again, too early to stick your hand out and buy. You're technically against the trend. But if you have any short positions on, I would start lowering your stops and protecting your profit. I'm a big believer of using protective trailing stop orders to exit trends and exit trades, not get out because it hit your target. The market may keep going. So I really like to tighten up the stop when it gets to that area where it looks like it might turn. Okay. BAC, which I believe is Bank of America. So let's just come back here to the daily chart for Chuck looking at BAC. Okay, so knowing already that it's a financial stock, my head is going to XLF sector. Okay, where is that within the context of the market? So an important thing to consider when you're looking at stocks is what sector they're in and how the sector is doing. Okay, so 99% sure, just off memory, that we are an XLF with the BAC sector, BAC stock. So the financial sector, just like the broad market, took a tumble, tested really important recent lows, and is hanging out. And for me, hanging out is a very technical term for consolidation, okay? Pausing, I would not stick your hand out and do anything. However, what it's hinting at, if we go back to BAC, this is hinting for further recovery. And check it out, guys. Look at how, even with that action, look at how the bar from Monday fell right to the bull support power zone. Do you see that? Do you see that, Chuck? The lower of the two lower green lines. So it's really helpful, again, to be prepared for when corrective down moves will be over, when you know you're in a bigger picture uptrend. Same thing happened back here. Even here, look at all this consolidation. We just tested the bull support power zone. All right, awesome. Sure, I'll do one more here, and then, oh, sorry, Jeff. Yeah, go ahead.
I've actually promised two in YouTube, and so I'm going to give you a couple symbols, and we'll give you a couple minutes to look at them, if it's okay.
Yeah, well, I'm good. It's Saturday afternoon. I don't have too many other places to go, but go ahead.
Frank wants to look at Amazon, and Silvery Sire says that IMW is strongly bearish on his charts and wants to know if the power zones agree.
IMW or do you mean IW? Well, okay, let's start with the Tesla and the Amazon that are being asked about. So I'll go with Tesla since I have it up here already for John. All right, so on a daily chart, again, not doing my full throttle analysis that I normally would, I see a bullish candlestick pattern here that I actually study candlesticks with a twist where I look at Gann levels on candlesticks. So that's something I teach separately because I actually just started sharing it recently. Knowing that and seeing where the RSI power zones are, I think there's room for a bounce on Tesla. However, I think it's limited to this January 26th range. So I don't think we'd get much higher than like 905 before starting to see it consolidate a little bit. Again, across markets, most stocks are not ready to just buy and be fully confident and put a safe stop. Because see on this pattern here, with the RSI power zones, yes, near the bear support power zone, they're not really doing any pattern though that's turning higher. I have a candlestick pattern and I have RSI near bear support, but I don't have further evidence. So probably gonna go higher, but I would want further confirmation. Like the minimum I would want today's Saturday, so I was gonna say tomorrow, but I want Monday's trading session to close above Friday's range to then be confident in the action. All right, so let's take that YouTube audience request. Thank you guys for chiming in. So here's Amazon. So Amazon, just like everybody else, had a nasty couple weeks here. And it is true, as I said earlier, that my dad got a chunk of Amazon stocks at the beginning. So that is part of what I manage for my mom's portfolio. And what I have seen is that that position is a very mature position, been held for a long time. So to me, these were not times to exit that position. The consolidation we have going here is a nice little triangle or a little bit of a sideways range that has parallel upper line. Sorry, I should just draw, but trying to make sure I stay on time here. So what I'm talking about is a flat upper, and then it has a little bit of a rising lower line. And so if you watch that range, I would look for a closing break above the upper line to then say, okay, we have room for further recovery in line with the RSI power zones lifting from the bear support zone. Okay. All right, awesome. So I already answered a question that was about futures and options. So just wanted to acknowledge that because somebody said it wasn't addressed earlier. I mostly focus my research on futures and stocks, but lots of traders use that to then go and trade options from there. All right, great. So do we have any other questions or tickers coming in from the YouTube side?
Yes, I don't want to miss IWM, the Russell ETF.
Yes, IWM. Okay, got it. All right, so again, I'm going to just take away some leftover analysis here and start fresh. So again, looking just at the daily chart, actually here on this last one, I'll do my full course of analysis, okay? So normally I'd be across 3 charts and I would work from a monthly for something like an index down to a weekly, down to a daily. So this is a great way to see how the RSI power zones change with the time frame, okay? Does everybody see here? I mean, look how beautiful this is. Look how back in December of 2013, back in September of 2018, look how we came right up to and basically like kissed the bull resistance power zone, the 2 upper green lines. Amazing, right? Now here, we did not get all the way up to those levels. So there's no guarantee that a bull market is going to have the RSI go all the way up. It depends what other forces are coming in. But with the correction we have, look at what happened on the weekly chart. All we have done is return to the bull support power zone. Now that alone isn't a sign to buy, but it does create the likelihood that we might be having a churn higher. So look at back here, right? We had a big fall, held the bull support power zone, and then it had a choppy recovery higher. That is what I think is more likely to happen just on the monthly chart. Let's take that monthly and let's go weekly. So here you can see the RSI power zones actually did give a bearish pattern between these November highs and then looking back to the March highs. So it was a little bit of an extended pattern. It took a long time, but there were warning signs, which is why I started warning my tribe the day after MLK, like something's up, be careful. And we started tumbling. So with the latest action, we're still not in a beautiful place for a buy on IWM. And last week's candle is what's called a spinning top. It's not actually a top or bottom. It's just the shape of the candle. And it doesn't really have a distinct meaning. So it's a little bit of a wait and see. But maybe the daily will give us more information. So let's finish out with the daily chart. We're here, beautiful. I see a bullish candlestick pattern that is in the bear support power zone, which would at least offer chance for recovery towards about 205. That's where I'm seeing room on all the indexes to continue to bounce. However, you got to watch what they come and run into and see if that's actually a move to a new high or if it's just getting ready for another turn to the downside. There's lots of other factors in the world that come in and affect this, right? What the Fed does, what the Fed says. I mean, there's powers beyond us as the traders that are dealing with things, and you have to know that, okay? This isn't just a, I mean, this isn't a totally fair system, I'll be honest. But I say this to my traders all the time, just because there are other factors that influence things doesn't mean you can't come in and get your share of the profits that are there. It is doable, it has been done, and you can do it too. So with that, I want to also be respectful of the time here. I appreciate you guys staying and learning. I look forward to seeing you in the full zones RSI coverage system and seeing you especially in the monthly group coaching live that comes with it. So again, be sure to visit hemaready.com/metastock and take action now while the offer is still available. And I've given you guys everything you need, including access to me with that group coaching and the best guarantee in the industry for only $297. So remember, every moment you delay can cost you money in the markets. It's time to take action now, and I'll see you on the inside. And I thank you, Jeff and MetaStock, for hosting me. Always a pleasure to be here, and I look forward to being back again soon.
Okay, and Hema, I'm sorry to do this, but I promised one more. I promised SBND and YouTube that we'd look at NVDA and NVIDIA, and you can do it real quick. Sorry about that. The link, yeah, the link again is hemaready.com/metastock. $297. We'll get you set up. Jim says thank you. Interesting session. Go ahead.
Yeah, sure. So NVIDIA. So here again, let me do super speed, because with these tech stocks, they're so volatile, I really do need to look at the larger time frame. So see how interesting it is that when volatile stocks that have a lot of movement to them get up into the power zone, they like keep pushing in that zone. Look how many times we pushed up into the bull resistance power zone, but price kept going higher. That's an important tip, so that when you have the indicator and you deploy it, you don't just get all excited that the market's gonna top. No, it just means the market's really strong. So then what happened after that? Well, obviously we see what's gone on with the week, but I'm seeing an opportunity to draw a trend line here that could be helpful for monitoring. And it looks like we are just confirming it with the last price action. So there's a little bit of a trend line supporting the action that I want to now look at on the weekly. So if I rejig it on the weekly and dial it back in, yeah, that's a nice sign. This is also coming into a specific type of support that I actually teach in the 4-zone system. It's probably my favorite way to determine support and resistance. So that being said, keep a close eye on the October 8th range. That entire bar is important support. And look at the RSI power zones in the weekly back in the bull support power zone. So that's looking good for NVIDIA. Let's do one last look at the daily time frame. So I'm going to take that trend line. I'm going to nudge it one more time just to make sure it's exact. And this looks really good. So I think if you can get above 240, so I'd want to see a daily closing break above $240 to give scope for getting back to 300 over time, like over a couple of weeks. But again, we are in a wait and see in a lot of markets, so be very careful with how you treat any strength. Strength here could simply be returning to the highs for a couple of days ago, and the pause being over, and then another dumping of shares again, because we don't know whether the forces might come and do it. But big picture, I actually think this is a buying opportunity that's presented itself in the market. The question is, when do you buy it so that you can put safe protective stops and then ride a new trend? So we'll have to see, and I'll be keeping my members up to date with details about that. I post YouTube videos as well, so you can follow my channel. I post free videos as well if you want to see what those updates are. And yeah, I'm happy to take more. I was just kind of giving everybody the goodbyes to respect if they needed to run off somewhere. But Jeff, if there's more, I'm here. Let me know.
No, I think we need to move
We're good now?
on. Yeah. And I promised one more, so we were good. Hema,
okay.
A couple comments though for you. Jim says that was a very interesting session. Thanks for coming. Rash says thank you very much. I love the way that you look at charts when you're done, and I think it's great. So it's only $297. You can sign up for it at hemaready.com/metastock. Thank you, Hema.
Oh, awesome. Well, thanks for sharing those comments, and good to hear from you, Jeff, and hope the rest of the day goes well for everyone, and I'll see you on the inside.
All right. Thanks, Hema. All right. Let me go ahead and kind of do this. We'll go ahead and do this, and we'll do this. Oh, I think, let me go ahead and make me the presenter, not Kelly. That'll help. All right. How are we doing? everybody enjoying the session today? Let me know. Who's your favorite speaker so far? I like to ask that before I go, just, reasons. Anyway, I hope you're enjoying everything. It's going to be my turn to kind of talk to you for a minute. And I just love this event. I think we've done a really good job of kind of bringing together some really good speakers. I love Steve and Ed and everybody that speak, Tyler, Alex, Hema. I hope you're enjoying the sessions. And if you have any feedback, let us know. You can drop me an email anytime you want to. In terms of us, obviously we're MetaStock. I'm going to talk a little bit more about MetaStock and why it's been rated #1 28 years straight. But let's go ahead and kind of just move on a little bit. I do want to say thank you. If you are interested in doing an extended trial of MetaStock, you can do that at metastock.com/tradersummit. Traders-Summit 3 for 1, and it'll allow you to buy a month of MetaStock and get the second and third month for free. I like to talk a lot about kind of the capabilities of MetaStock and really how it can kind of help you with your own trading program. We talk all day about indicators and methods and system, and I'm not going to buck that trend. We're going to talk about MACD in just a second here, but it is a great toolbox. It's something that I've been using since I started, and I think you should try it. There's a reason that it's been rated by #1 by the readers of Stocks and Commodities. Before we get to me, though, I do want to say thank you to Stocks and Commodities for sponsoring today's event. Stocks and Commodities has been publishing magazines since 1982. They've done 1.3, or actually they've done 17,000 trading articles and have 1.3 million subscribers. All of the presenters that we have today actually did provide a gift. If you're watching on YouTube, or even if you're watching in GoToWebinar and you want to take advantage of some of the freebies that are offered, you can register for today's Trader Summit at the metastock.com/traders-summit link and sign up for whatever you might be interested in. Steve, for example, gives a free month of his chat room. So you can go in and kind of chat with Steve for a full month. And if you've never done that, I'd recommend you do that. As I said when I was introducing Steve, Steve's a good friend of mine. We've been working for him for a number of years. And if I wanted to kind of talk about people that have been there at kind of the right moment to have an impact on the trading that I do, Steve has been just one of our best partners, I'd call him a mentor. And anyway, all of the speakers have really good information. You can find it all at metastock.com/tradersummit. So Jim says, I don't know anything about the MACD indicator. I know it. I know very little. Looking forward to seeing the session. Okay, well, let's go to it. We will talk more about this Trader Summit action pack at the end. And I'm just going to take a mental note of the time. There's me. That's a few years ago. I probably need to get a new photo. I've gotten a little grayer. But in any case, I'm going to reread our legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Today, I'm going to talk a lot about simulated trading and system testing and that kind of stuff and how you can evaluate different trading methodologies. So you should read the CFTC rule that talks about there's certain limitations when it comes to backtesting trading ideas. And that's right there. You can read it in any case. My name is Jeff Gibby. I've been working here at MetaStock. In March, it'll be 25 years in a row that I've worked at MetaStock. I love working here at MetaStock. I'll put it that way. And even though my boss is listening, I'd say that anyway, just to put it out there. I remember back when I started, we had been owned by Reuters. I started in '97. Reuters owned us basically when I got the job here. I started in inside sales. So a lot of the initial, like if you called the 800 number back in the 90s, there's a good chance you would have got me on the phone. I would have talked to you a little bit about how you're trading, like what you wanted to improve, what you think we're maybe missing, and mainly how the MetaStock tool could help you in terms of finding better stocks or finding better trading strategies. And one of the things that I'll say I'm going to say a couple of things about MetaStock. I'm not going to read this, but it's been a great job. I very much enjoy it. It's got a great culture here. A lot of us work really, really hard, And but we're all friends. We've grown up together. I mean, at this point, all of us have grown up together. The general tenure at the company is like 13, 14 years. And I think that comes through. I think it comes through for you as a user when you call the support team and you get really well helped and they help you set up your program or help you with any issues that they have. I think that comes through in the support that you get from them. And I think that's why there's many weeks where they get actually a 100% ranking from the service that they do after the service calls. So it's been a great job. I've absolutely loved it here. It's a great place to work. And one of the things I like to talk about MetaStock is the fact that it has been rated #1 for so many years in a row. And so that's about what I'm going to say about MetaStock. Some of the questions that we get a lot of is, we were owned initially by Reuters, and then that Reuters then became Thomson Reuters. It became Refinitiv. We still have a really good relationship with Refinitiv. They're an awesome data feed, and it's been advantageous for us because we have really literally the same news that you might subscribe to at a much higher cost if you're like an institution or a hedge fund. The other thing that's been extremely valuable for us and for our customers is the fact that we have such a global market coverage. We cover almost 300 global market exchanges, hundreds of thousands of instruments that are available. So if you're watching me from India, thank you for joining. I hope you enjoy today's summit, but we can actually help you with India stocks or India futures or National Stock Exchange, Bombay Stock Exchange, whatever you might be interested in. In fact, a huge amount of our customers come from India, Australia, London. These are all big markets for us, and that's only possible because of the relationship we have with our data provider. So in any case, let's get on with kind of what I want to talk about today. And we're going to teach you, Jim, about MACDs with me. Okay, and let's see. I do have the questions open. Again, my apologies. We do have hundreds of people here right now. There's been thousands of questions. I do my best to answer any questions that I have. If I miss your question, feel free to email me or chat with our sales team or give us a call. I'll do my best not to miss any questions because I like to try and get them all. Today here you can see the agenda, what we're going to talk about. We're going to talk about the importance of trading with a plan. MetaStock is all about trading plans. We're going to test trading ideas. I'm going to teach you MACD, and then we're going to test it. We're going to compare it to other things, and then I'm going to give you a special offer. So there you go. Let's go in. Let's get started. Time. We got about 40 minutes. I can do this in 40 minutes. It's not too big of a deal. So if you're not familiar with this guy, his name is Richard Dennis. As you can see, it says it right there on the PowerPoint. But Richard Dennis is everything okay?
Yeah, keep going.
Oh, okay. Yeah, apparently you can see the light. Okay. So while he works, if you're not familiar with Richard Dennis, I thought that like maybe I wasn't sharing my screen or something. Richard Dennis is a guy that started the Turtle Traders. He had a business partner who was a guy by the name of Bill Eckhart. And you can read the full story on Investopedia if you look for Turtle Traders or Richard Dennis. It's where I pulled a lot of the information that we had. But they had a little bit of a gentleman's disagreement. Richard said, well, you can bring anybody in, and as long as they have a certain amount of intelligence and a little bit of discipline, we can teach them how to trade the method that we're trading. And his business partner at the time, Bill Eckhart, said, nah, it requires a certain amount of genetics, a certain amount of sentiment, a certain style of personality. It's not something that you can teach. And basically what that started was the most famous trading experiment in history. What they did, Richard Dennis and Bill Eckhart, they decided to settle the agreement the argument once and for all. And so they recruited, they put ads in the newspaper, come work with Richard Dennis and Bill Eckhart with training how to trade. And they called it the Turtle Traders. It was an experiment that, as you can guess, it wasn't successful. It was like insanely successful. And I can't remember the numbers exactly. That's why I should go look at the Wikipedia article. But it was a very, very successful. I think they were in the hundreds of millions after a few years in terms of profit return. And one of the things Richard said, there's a couple of really cool things that came out of that. But one of the things Richard said is, I always say you can publish my rules in a newspaper, but nobody would follow them. The key to trading is consistency and discipline. And we're not going to talk a lot about discipline in here. Sometimes I think maybe I should even just take this part of my presentation out. But I think it is important because we will talk about trading plans. And there are a lot of, as you know, we've had Hima in here, we've had Steve, we've had all of these other people talking about different sets of rules. There's all kinds of different rules that are available that are in the market. But one of the things that we want to do is we want to trade with consistency and discipline. One of the questions that I ask when we go out and we do these presentations in person, I say, what's the best profession for trading? And a lot of people will put in guesses, and they might guess psychologist, which I think is a really good guess. Jake Bernstein is somebody that we work with who is a psychologist, and he's a great trader. Alexander Elder, one of my I think one of the greats, was a psychologist as well. But the actual answer to that question is a pilot, an airline pilot. And actually, airline pilots that I know that I've worked with, I've had the privilege of working with, Craig Morris, I had to think for a second, Chuck Hughes, and maybe a few others, but those are the ones I can think of offhand. And I've often thought, why is it an airline pilot? And I think discipline is the answer there. You know, when they go to take off, they have an exact, very specific trading strategy an exact formula for taking off, right? They know exactly where to adjust the rudders, and they follow a plan, and they follow it every single time. And that's that discipline, I think, that helps in a trading environment. That discipline. When things get dangerous, they have discipline. So anyway, I spent too much time on that, but it's a great quote. It's a great story. What we're going to talk today mostly about is trading rules, because trading rules, I think, are very important in trading. And even though I'm going to talk about the MACD, and the reason, I'll actually kind of share with you the reason that I talk about MACD. When I wanted to MACD is fairly easy to understand, so it's pretty easy to explain, but also it's one of the most popular videos that I have on our YouTube channel is understanding the MACD. And so one of the things that I've learned over the years is a lot of people use MACD, but they don't really know kind of what they're looking at or what they're choosing. And this may be a little bit of like a basic presentation. If this is, if you're familiar with MACD, this might be a little bit of a basic presentation. But I think it's important for people that are new to the market to understand, or everybody, why they're trading, or what really goes into the indicators that they use. So that's why we're going to talk about MACD, because it's easy, it's objective, and it fits all the really good definitions of what a good trading system that's based on technical analysis should do. So this is a picture of Gerald Appel. He created the MACD, and the MACD is a trend and a momentum indicator. So the design of the MACD is such that it's designed to look at the trend of the stock that you're looking at, as well as the momentum of the stock. And what you'll hear a lot is like, you know, the trend is a friend until the end, rising tide lifts all boats. It's a cliche in the market, but the MACD is actually a pretty good indicator to look at trend. And as we get into kind of the explanation and how to look at it, you'll understand that a little bit more, okay? It also does a very good job of showing you momentum and movement as well, all at the same time. So I think that's about what I've got for PowerPoint. Let's go into MetaStock. And the very first symbol is, the very first symbol that you guys give me is the one we're going to look at today, because I don't cherry pick ideas. It might work with MACD, it might not. I'm not trying to teach you that MACD is the best indicator. Just want you to understand what it's working with. So give me a symbol, hurry. And we'll go ahead and open it up with MetaStock. So let me go ahead and kind of just clean up what we've got here. And I'm not seeing a symbol here. SE. Okay, so no, SE works. As long as that's a symbol. Sunil in YouTube asked for SE, and Phil, Apple, RTX. Okay, I'll use all of these when we go to do testing. But for now, I'm going to go with the first one, as I promised, which I believe was SE. I just want to make sure I get the right symbol when I pull it up. So I'm going to use my little indicator switch list here. And we'll go starts with SE is C ads. I'm going to assume that it is the correct symbol. Let's go ahead and open it up and make sure it looks okay. So I'm just going to open it up. What I'm going to do is I'm going to open up with kind of a clean chart. So right here, I've got the Power Console open. I'm going to go ahead. I've got it on chart. I'm just going to type in the symbol SE right here, and we'll go ahead and open up a chart with no indicators. Okay. And since we're going to go with no indicators, that looks like a pretty decent chart. We'll use this one. There we go. I'm going to shut down the expert advisor for just a second as well. Okay. By default, this is the clean template. It doesn't apply anything but the price chart. One of the things that I'll say about MetaStock is from the very beginning, when I started, I remember Steve talking about how they wanted to keep the design as easy as possible to use. And it's certainly a mantra that we've always kept in our head, even since those early days. The company was pretty established when I started 27 years ago. I think it started in the 80s. But if I want to change something on a chart, all I had to do is double click. So if I double click on a chart, for example, right here, I can look at the different chart styles. I prefer to look at candlesticks, but there's also candle volume, equivolume, and a bunch of other styles in here. I'm going to go ahead and change that to candlesticks, and we'll just go ahead and click on OK, and we'll have a fairly good view of candlesticks. Okay, and that's all. Anytime you want to change something in MetaStock, the only reason I go through that is all you have to do is double click on it, whether it's a line, moving average, MACD, et cetera, et cetera, et cetera. Now, I'm going to also apply a few indicators here. Obviously, this is a lesson on MACD. So let's go ahead and start with MACD. We'll go ahead and grab it. This is what we call right here an indicator quick list. There's a couple hundred indicators in MetaStock. You can create your own indicators if there's a lot of them available as well. What I'm going to do is I'm actually going to drag this MACD, and I'm going to put it on the chart. And it's a drag and drop operation. Again, we've tried to make it easy to use. And so I can drag it. If I drop it up here, it's going to go where I want it. It's going to open up a new window for me automatically. I'm going to go ahead and click on OK. And we'll have our kind of a classic MACD look here. I do like to look at MACD as a histogram and not as a line when I'm looking at it this way. And so I'm just going to double click on the MACD and just change it to histogram. And you see, it's pretty easy to kind of change. The other thing that I'm going to do real quick is just show you kind of how you can learn a little bit about the indicators you might be using using the help file. So if I click on this MACD and I go to help, I can't remember the actual numbers that the moving average uses. That's why I did this. I can say, okay, well, the moving average, the MACD is calculated from subtracting the 26-period exponential moving average from the 12th period. So those are the moving averages that are used. I'll go ahead and apply those to the chart as well. You'll also notice there's about an interpretation, parameters, tips. There's all kinds of built-in help. And when we used to print the manuals, it was like a 600-page manual. All that help is available. Anytime you have a question, you can go to the help. It's a really good resource. In fact, I keep one of the printed manuals on my desk so that if I ever am wondering how MACD is calculated, I can just look at it. If you're ever wondering how one of the built-in indicators is calculated, just right-click and go to help. It's going to be available for you. So 26 and 12. So let me show you what that means. We're going to add a couple of moving averages here. What I'm going to do is, here's my moving average. Again, I'm just going to drag and drop it. Now, with most of the indicators that are in MetaStock, I can either apply them to price, I can apply them to volume, or I can apply them to another indicator. So when I drag this moving average over here, if I wanted to apply it to the MACD, I'd just point to the MACD. And I want you to notice that the MACD is now pink, right? That just indicates that if I drop it here, it's going to do a moving average of the MACD. That's not what I want, but I just wanted you to know that you could do that. I'm going to go ahead and drop it here. The price is pink. That means the moving average is going to apply to price. And what I'm going to do is we're going to do 26 exponential. So this is the time period. I'm going to go ahead and make that exponential. I'm going to go ahead, we'll leave the 26 as red, and I'm just going to make it a little bit thicker so you can read it, okay? And then what I'm going to do also is we'll do another one, but we'll make a 12-period exponential moving average. So 12 exponential. There are a number of different ways you can calculate this, but the way Gerald calculates the MACD, he uses exponential, okay? I'm going to make this one a little bit different color just so you can kind of see it. I'm going to make it a little bit thicker, again, so you can see it. So now if I wanted to calculate this MACD, and I'm just kind of glancing at my time, we're doing okay. If I want to calculate the MACD is simply a shorter term moving average subtracted from a longer term moving average. In this case, it's the 26 minus the 12, okay? And so if we were to take the blue line, the 12 period, and subtract it from the 26, we're going to get a number that's about equal to the line up here, the MACD histogram line of minus 24.18. Okay. And just by looking at that, basically, this is how you can kind of look at momentum. If we're in a pretty big downward movement on MACD, the distance between the shorter term moving average and the longer term moving average is going to be bigger, right? Because it's moving faster. So you'll have a bigger dip in your MACD. That's all. That's how you can kind of look at momentum with it. If you're in more of a sideways period, like right here, it's going to be basically closer to zero. It's going to be a flatter MACD, or even more. It was pretty flat here, but you can kind of use it to see, okay, is this going up or down? And you can see exactly how much, well, not exactly, but you can get a good idea if the trend is up or down, or the momentum is up or down. Now, that's it. That's all the MACD is. You're just looking at the difference between this moving average and this moving average. It's very, very simple. The other line that's on a MACD is this red dotted line, and I'm going to change that just so you can see it a little bit better. And the only thing that this is another moving average. Gerald calls it the signal line, okay? And it's a 9-period exponential moving average of that difference, okay? So right here, I made it a little bit darker so you can see it. The way that we would use this as a signal line is as a signal. If we are trading above the signal line like we are, actually, wrong tool. Let's grab the horizontal tool. You'll notice that it's above the signal line right here. The MACD is poking up above its signal line. It starts doing that right here. And then it goes down below its signal line right about here, okay? When it's up above its signal line, the MACD will be in a bullish phase. And that's how a bullish trend, okay? When it's down below the MACD, like it was from about here, right here, again, wrong tool, to right about here, it's been below the MACD. During this time period, the MACD would be in a bearish phase, okay? And that's how, so if we're bearish, if the MACD is bearish, we're trading based on the MACD, we could use that as a reason to get in and out of the market. If we're bearish, if we're in a bearish phase on, what are we looking at against C limited? We anticipate that the market is going to fall, okay? If it's going to fall, then we would want to take a short position to take advantage of that, okay? It goes up above its signal line here for a little bit, okay? You can see right here, it's up above its signal line. I'm going to say to right about maybe in here, actually. Then it goes back down and kind of just continues to fall down, okay? So I can draw that on the chart. Since it's all automatic, I can also, we have a functionality in MetaStock that I like that's called the Expert Advisor. I've shown it to you a couple times today. But with the Expert Advisor, what I can do is there's a bunch of different methodologies that are built into here. There's candlesticks, which I like to show that one too. We probably won't today just for time. There's a bunch on, there's the GoNoGo one. Here's the point and figure one. That's really cool. We've got a bunch of power performance systems. All in all, I think I added them up and there's about 50 or so different methodologies that are in MetaStock. What I'm going to do is actually going to find that the one called MACD by MetaStock. So they're all alphabetically. So as long as I know which one I'm looking for, I can attach it to the chart. And immediately you're going to be able to see here at the bottom of the chart when the MACD is in a bullish phase or when it's in a bearish phase. So right here, you see where it's bullish. Looks like I missed the lines a little bit. We went bullish here and we went bearish here. But I was very close. I was close enough. Okay. But you see right here, I'm going to go ahead and remove these to the charts. Every time that goes from a bullish phase, you'll get a MACD buy signal. You'll also get the indication that it's in a bullish phase because it's going to tell you bullish or bearish or bullish right here on the bottom of the chart, okay? So right here, what we can see is right here, we got a MACD sell signal. Here we got a MACD buy signal, okay? Method one, in terms of using the MACD, I'm going to talk about 3 different methods you can use for the MACD. Method one is just using the signal line. If you get a sell signal, take a short position. If you get a buy signal, take a long position. Trade with the trend of the stock, okay? And that's the first method. The second method that Gerald talks about is using it as a momentum indicator, okay? And with a momentum indicator, maybe if we get a little bit extended in a market, we would maybe get into like an overbought or an oversold territory, okay? And you'll notice right here, starting right about here, I'm going to point it out so you're going to notice it, but you'll notice that we start to get green bars, and we get them all the way here, right? You'll notice right here, there's red bars. Like here's a bunch of red bars. Here's a couple red bars. Here's a couple red bars. Now you'll notice this was green for a really long time, but what that's indicating that is that the MACD has entered, in the case of green, an oversold area. Okay, and one of the things I've talked about is the commentary that can kind of help explain everything to you. But if I open up the commentary for MACD, you'll notice that it's currently green. So I don't even have to go back here to show you what it's going to say. Right now, we're seeing that C is currently oversold. And it's been oversold off and on since right about here, so for a long time. And that's one of the warnings that we give to you. Okay, so right here, it's going to say, okay, well, the MACD is currently bearish because it's trading below a signal line. The MACD crossed below its signal line 8 days ago. Since it's gone down about 20%. So since this signal, it's dropped to 20%. Okay, the MACD is in an oversold range. However, and this is where it kind of warns you, because things can go over, generally things can go overbought and they can stay overbought. And just because they're overbought doesn't mean that they're necessarily going to correct, right? Just because they're oversold. This thing has been oversold since November. And in that time frame, we've dropped quite dramatically. Like it's not even close. So the warning that they give you about that is prices in an oversold range may continue to move lower. Wait for prices to move higher before considering making any changes. And I've been in markets where it just keeps going up and you're like, this is insane. At some point, it's going to have to correct. Don't do that. Get that out of your mind. Prices, what was the saying? Oh, somebody said like, prices can continue to go down for longer than you can remain to be solvent or something like that. You don't want to necessarily trade because this is overbought and this isn't, or oversold. And this is a text-backed example of why you wouldn't want to do that. You might consider tightening a stop because you expect a reversion to the mean, but just because something isn't oversold doesn't mean it's not going to stay oversold forever. And I like how they put a little warning in the expert advisor. This is oversold, but. So that's the second way. Momentum, if it gets too extended, you can look at that as being oversold and you can look for a reversion to the mean. But again, keep in mind, they can be oversold for a long time. The third way you can look at MACD, and I'm only going to talk about this kind of briefly, but we had a really good, actually a fairly good example right here, right? If, it's what Alexander Elder calls the most powerful signal in all of technical analysis. He calls it MACD divergence. But if I was to kind of look at this peak of the histogram, notice that it went up below zero, which Alex actually teaches about. You want it to go below zero, and then it comes up to this point, right? Here, I would say that you've got a kind of a descending line from this peak to this peak. If we look at price during the same time, here's this peak to this peak, okay? This is going up and this is going down. Alex, and usually when we look at stocks, we don't see this on the chart. So this is a very good example of one. This is basically a bearish divergence. Price is going up, but the MACD is not supporting this. And Alex calls that the most powerful signal in all of technical analysis. So that's the third way you can look at the MACD. We can look for divergence. Here you've got a drop in peaks, and that drop is not supported by MACD. You've got a rise in price that's not supported by MACD. Let me say it that way. I think it's clear that way. So that's a divergence. You've broken the back of the bulls. And look at the sell-off we had on that right after that. So that's the third way you can look at MACD. So, and you'll notice right here, right now we're just analyzing this bar. Right now it's not seeing any divergence within the last 5 days. If it sees divergence, it'll say it right there. Hey, we see divergence on the chart. So those are the three ways that you can use MACD. And again, just to quickly recap, because I do need to go a little bit quicker. Trend, is the stock trending up or down? Okay, it's been trending down quite significantly here. Momentum, are we overbought or oversold? And 3, do we have divergence? Now there's a bunch of other ones. Those are the ones that I'm going to teach you. I think those are the most important. And those correspond nicely to what we're telling you here in the expert commentary and how we're automatically identifying this chart for you. Okay. this chart is a good illustration of why I like technical analysis. If I did a decent job of explaining MACD to you, you understand why you're getting the levels, you understand what you're looking for, and most importantly, you're looking at things that are objective. So we're not looking, when we're looking at technical analysis, we're not paying attention to whether they're going to increase the rates or lower the rates. We're not looking about the Omicron variant and what impact it might have on the economy. We're not looking at whether they're printing a ridiculous amount of money or an extremely ridiculous amount of money. We're not looking at like what the Fed is, they're dovish, or, those kind of things are things that we can pay attention to. But when we're studying it, technical analysis, we're looking at what is the chart doing? What are the other traders doing? What is the trend? And the thing that I really like about that is it's 100% objective. Okay, so if I explain that properly, everybody could go in and you can draw your own sell signals based on where the MACD crossovers are. You can look for your own overbought, oversold. You can look for your own divergence. And none of that is subjective. It's all pretty objective. You might make an argument, and you might be right, that this is somewhat objective, but I would say even the divergence, this points up clearly, and this points down clearly. Those are things that are not things that we can argue about. In other words, what we're looking at is what is the price telling us? Are people moving this up or down? Okay, I'm not saying that MACD is the best system that exists out there. It's one that's very, very popular. But what I am saying is it's objective, and the reason we like objective is it's gonna make it very, very clear for us on what we should be doing. Now, there's also, as I said, when we opened up, there's a lot of different ways you can look at the market. Since this is objective, I could actually tell you exactly how this performed. I could look at this MACD sell signal and say, well, we got a sell signal. Let's say we executed it at the open of this day, the next day, and we got in at 347, and we finally got out at whatever price this is, in 224. Yeah, that was a really good trade. The next one, we got in 224, and we got out at whatever price we got out of. That wasn't so good. Not all trades are ever going to be completely good, right? Like, you're going to lose money sometimes, but we can very objectively say, well, okay, we're looking at C limited right now. How well did that work over the last year, 2 years, 5 years, 10 years? In fact, we can do that automatically with a system test. And, I spent 40 minutes talking about MACD. I should hurry. But like the thing is since it's totally objective, I compare that with the other technical systems, the other 40 or so technical systems that are built into MetaStock. I can say, how does it work? Should I spend 40 minutes learning about MACD? Is RSI better? Is this other method better? What are the best methods for me to use if I want to trade C? Or Shoshin, it is just. Yes, thank you. Thanks for answering questions too. Yes, Andre, that was exactly the quote I was looking. Markets can stay irrational longer than you can stay solvent. Yes, that's exactly, yeah. The markets are generally irrational. Let's stay solvent. Let's make it a goal. All right, so if I wanted to compare this methodology, and that's one of the questions I'd get. Remember, I started in inside sales. I did that for a decade. It's a lot of fun. I absolutely loved working in sales. But one of the things that a lot of people would ask me about is, okay, there's 40 methods. How can I compare them? There's 200 indicators in here. How do I know what's going to work well for me? And for that, since everything that we're talking about with technical analysis is objective, I can actually test that, right? So I'm going to go ahead and open the performance, what we call the power console here. And very quickly, I'm just going to show you how this works. So we'll look at SEA. We'll look at a couple of the other charts that came in, like RTX and Apple. And we're just going to run a little bit of a system test. Now, I'm only going to show you a little bit of this just because of time, but I want you to know a few things. Okay, so I'm going to go ahead and type in, was it SEA for this? SE for this symbol, AAPL.O, RTX. And you notice I can type in as many symbols as I want. You can test whatever type of a basket that I want. In fact, one of the things that I can also do is I could test all of the optionable stocks or the whole S&P 500 or whatever I want. With MetaStock, one of the system tester that we've created allows you to test as many ideas as you want against as many stocks as you want. And it's one of the most powerful system tools that I've ever seen because it allows you to get a lot of data. In other words, like, you're not testing one stock and 50 ideas or 50 ideas on one stock. You can do whatever combination you want. I've run tests that test every single stock in the market. And but it takes a little bit of time to go through that much data, certainly more than 20 minutes. So we're going to limit that to SE, Apple, and RTX. What I've also done in here, just to kind of get ready for today's presentation, is I've made a list of the 51 systems in MetaStock that I know that are included, because you can build your own. I want to show you stuff that you have right out of the box. And I've also taken out most of the ones that require optimization, because those take a little bit longer to test as well. And, you know, generally by this time I've spent 40 minutes talking about MACD, and my time management is terrible. So I need to kind of get back on pace. So, but right now what we're going to do is we're going to do 51 stocks. We're going to do all the long trades and short trades. So every time we get a signal, whether it's long or short, we're going to take it. And we're going to go back at 2 years, about 500 daily bars. You can do whatever you want. With daily bars is what I've got selected, and I have 500 records because there's about 252 or so trading days in a year, so that's about 2 years, okay? In trade options, there's all kinds of options that we can set here. What I'm going to set is I'm going to start with an initial equity of 10,000. Every time I get a trade, I'm going to trade 70% of that, okay? And that just means that my first trade is always going to be $7,000, because that's how much 70% of 10,000 is. If, let's not display that error warning, if, that just said the formula references itself and it takes a little bit longer. It's not a big deal. I forgot where I was. So if I grow my account to 20,000, I caught it. 70% of that would be about 14. It would be double that, right? So it's gonna compound in. I'm going to be able to grow my account using compounding if I want to. There's other ways that we can set it. That's the way, just for kind of show it to you, I set it up. Okay, that quickly it's done. Okay, so we did about 51 securities. We did about 3 or 4 stocks. Okay, because we did multiple stocks, I'm just going to make this full screen. I can everything that we're looking at, or most everything that we're looking at, is average net profit. Average percent gain. Best profit is obviously not an average. Worst profit. Average number of trades. Average profit versus average loss. Average profit versus average loss. So we can kind of look at this from the initial screen and say, okay, based on the 3 stocks I tested, or the 500, or the 2,000, or whatever it is in my basket, I can look at this and say our best performing system was the fractal trading system. It averaged about 55%. The best was like 97.71 in profit over 2 years. The worst was 1,200. On average, it traded about 11 times per stock. So that's about 1 trade a month. Our average trades that were profitable was 6.3 to 5.3 losers. And our average dollar gain to dollar loss is 2.23. That looks pretty good for me. And I do call this finding the right strategy for you, because for me, what I'm looking at is, like, I stay pretty busy at work. And I usually devote about 15 minutes a day to trading, and that's it. Sometimes 20, if I get interested. But like, so for me, something that trades once a month on the stocks that I might be interested in is perfect. That's not more frequent than I want it to be. Looking at the average dollar gain versus the average loss, that looks good as well. What I wouldn't want to see is something that was traded 101 times over 2 years. That's 50 trades a month. So you can get a lot of good ideas in terms of how often something is going to trade before you even look at it closer, which is what we're going to do with this fractal trading system number 1. I'm going to go ahead and click on view here, and you can see with C limited, it generated 97% over the last 2 years, traded 13 times, 7 winners, 6 losers. Okay, the next best performing was Apple, 82% of the time. 82% gain, my apologies, 7 winning trades and 0 losing trades. Average profit or loss, well, it didn't lose, so that's not applicable. Okay, it didn't perform well on RTX. We wouldn't want to apply this to RTX. It actually lost money. And that's going to be the case. What I want to be able to see is, I want to see what methods work and what stocks that they work with. And so if I was looking at this, I'd be more interested in the positive trades than the negative trades. Okay, if I click in here a little bit and I look at view, I'm going to get all kinds of numbers. I'm not going to go through many of these numbers with you, mostly because of time. But you can kind of see here, if you do have questions about any of these numbers, you can click on help. And again, our help file is huge. It's going to help you with it. Okay, I do like to look at how we performed. 97% is good. Buy and hold. Actually, we underperformed buy and hold on this particular stock. In fact, we were 28% worse, which happens sometimes. Okay, our profit loss index measures how profitable how our profitable trades ended, compares it to how our losing trades and how they ended. 100 is perfect. Minus 100 is catastrophic. 60 is pretty good. Risk reward 86. Again, 100 is good. The difference between profit loss and risk reward is open position versus closed position. Okay, I do like to take a look at wins versus losses, 7 to 6. Okay, this is a long only system, which means it did incredibly well because we saw how much C actually fell last year. So this is a long only system. I'll tell you how I know that because it always comes up as one of the best performing systems. But I'll show you also how to learn about it. And I think that's what I'll show you. The other thing that I like to look at is equity. Equity just gives us an idea of how that would perform over time. I can see that in a chart. I can see how my trades would have worked. If I like it, I can kind of look at the chart and I can go in and look at, and actually I will. I'm gonna go ahead and plot this on the chart right here. Okay, and let's go ahead and close this out. The chart of C limited is open. I can see exactly where my buy signals would have been, where my sell signals would have been. This is that same equity curve we would have looked at, but with the buy and sell signals at the bottom. If I like this, and this is important, I don't want you to use this as a reason to bypass your education. I think it's important when you're trading to have discipline, as we talked about at the beginning. And I think one of the things that can help you with that discipline is understanding your wins versus your loss and your profit versus your loss and what your drawdowns look like and all that stuff. The system test was also, I think another key role is understanding how your system test performs. So if this is something I like, and I do, this works pretty good. We had a bit of a drawdown over the last 6 months, but this looks really good while C was going up. It took advantage of that moves in a pretty good way. If I want to learn more about it, then what I'm going to do is I'll look at the corresponding expert advisor, which I'm going to show you right now. So we'll go ahead and go to the expert advisor here. What I'm going to do is, this was the fractal trading system number 2. So I'll just find it. It's listed alphabetically. Going to attach that to the chart. We'll go ahead and close. You'll notice it's now giving us buy and sell signals at the same time. That's okay. If I go in here, we can kind of give you an idea of what the commentary would look like. I'm going to make this a little bit bigger for you. And I'm going to try and hit that buy signal right on the nose. Okay, and I did, I think. Okay, so when I get a buy signal, the expert will tell us to enter long on a market on close order with the market price at tomorrow's open. This is a fractal trading system. And so this paragraph right here is going to give us an idea of what a fractal is and how it trades on it. Well, there are many definitions for a fractal in securities trading. If it sounds like I've read this, this is a really good performing system in MetaStock. It's always towards the top. I've memorized this over the years of showing the system tester, but well, there are many definitions for a fractal in securities trading. The definition used in this system is a minor version defined by Bill Williams and his chaos-based. According to Bill Williams, an upfractal is defined as a middle bar with 2 lower highs. So you have a bar here, you have 2 lower highs. That's an upfractal. A downfractal would be the reverse, a middle bar with 2 higher lows. Okay, this system enters a long position when an upfractal is penetrated. So when that upfractal, when the price goes up above that pivot high or that upfractal, that's where it's going to buy. And it would close that position on the crossing of the most recent down fractal. So hopefully that makes sense to you. It's very, very straightforward. Basically, you look for a pivot high. When that pivot high, when that resistance area is penetrated, you go ahead and buy, and you sell when it comes back and penetrates support. Okay. Based on that, you can see how well this worked over time. If you like it, it's been a system that performs well. It is a long-only system. That works particularly well in equities which have an upward bias. Okay. If I like this system, there's one other thing that we can do. I'm going to show you real quick, and that's the ability to do scanning, which we talk about all day long. I can trade for 15 minutes a day because I can scan. So for me, I typically trade S&P 500 stocks. I like Dow stocks, and I like anything on NASDAQ 100. If I like the fractal trading system, if this is the system that I've studied, I like, and I want to find opportunities for it. We haven't had an opportunity in this particular stock since here, and that was a pretty lousy one at that. But if I want to find a stock that has an up fractal penetration, I can come in here. I'll go into our scanning. I can scan whatever I want. So I'm going to go ahead and just run the scan real quick. I'll go ahead and just unselect all of them. I'm looking for that PS fractal system number 2. That's the one that I want to scan against. Okay, PS fractal system number 2. We'll run that scan. I've already got it to scan the whole S&P 500. You can see it remembers what I scanned last time, the S&P 500. We'll just run that scan. And what it's going to do is now it's just going to go through that whole market. It's going to eliminate all of the stocks I don't need to look at if this is my method of choice. And then it's going to give me the, well, it's at 0% now, the 1% of the stocks that might have an up fractal in this market. And then I can take a look at those and decide if I like it. Let's see, Jim says, how does this all work when a trader includes exchange data? I'm not sure what you mean by that, but please restate it, Jim. I appreciate all the questions. There are exchange data fees. And if you want real-time data, you would want to pay for those if you're trading really, really actively. For me, I don't pay exchange fees. I don't pay the NASDAQ $3 a month to get real-time data because I'm looking at the market between 20 minutes and market close. Like for Utah, that's between 1:45 and 2 p.m. I don't need real time for that. So restate that. I'm not sure exactly what it is. Rajesh, thank you for asking about the price. I'm going to show you this. Rajesh, also, to answer your other question about options trading, and hopefully I'll get to most of your questions. If not, I do encourage you to ask our sales team. I do have about 5 minutes, and we'll talk about pricing. For options trading, when we query our database, Rajesh, I want to say about 60% trade stocks, 40% trade options. And MetaStock has some really good options tools. You can go and see what the option pricings are and how they work. But what I would say is the most helpful for MetaStock is to identify what stock you want to place an option on. So for me, if I can go in and scan all of the optionable stocks and realize that I want to go long on any of these ones, Consol Edison or MasterCard or McKesson, not a recommendation to buy, because if I say that, Kelly's going to get on and read the legal disclaimer. But if I was looking at those are where I would start to place an options trade. I'd look at the ones that fit my criteria, because the biggest, well, I'm not going to say it's the biggest question, but a big question when you're trading options is, what should I buy buying an option on? So the idea of system testing, and I love options. I love the idea of options. I don't trade them as much as I do just because I like buying the underlying stock more right now. But if this gives me the list of the stocks I'd want to look at the options for. So hopefully that's helpful. Jim says, how does it perform with live data? So we've done a lot of studies, and there's a lot of competition. Jim, that's a really good question. There's a lot of studies that we've done and compare, we just recently did a huge comparison of the MetaStock platform, which is a PC-based platform, and some of the web-based platforms that are getting more popular. And the performance, we were kind of looking, okay, should we go with an HTML version, like a web-based version of MetaStock? We decided the technology is just not there. We can't support the amount of real-time charts open and keep up with market data. As a result, that's why we have an installed program, and we handle real-time data very, very well. It's important to us. So good question, Jim. Okay, cool. I think that was good. I think I answered your question too. So. If you're looking for unusual options and that kind of stuff, Rajesh, MetaStock's really not going to do that type of scanning just now. You can see the things and that kind of stuff. Really, it's not going to be look for unusual option stuff. We've talked about ways we can do that. That might be something that you can see in the future, but it's a good question. We don't offer anything like that right now. What the core of our product is designed to help you do is figure out what you should be buying options on, though. And most of our traders trade options and it's helped. They use MetaStock because it can help. And I wouldn't say most. 40% is obviously less than most, but a good number of our traders use options, and they use MetaStock to identify I should be doing an option on MasterCard. Not a recommendation. Okay. All right. Cool. So we do have two versions of MetaStock. We have MetaStock Real Time, which is basically $250 a month. It includes that institutional quality news and data that I was talking about. And just getting that, if you're a hedge fund, you pay several times what we charge MetaStock for. Even just getting MetaStock as an institution, you'd pay several times what we charge MetaStock for. So with MetaStock, with that institutional quality data feed, you're going to pay about $250 per month. That's going to include what we call our Zenith real-time feed. It's going to include market data, and it excludes exchanges. Okay. The other version that we have, MetaStock RT, by the way, stands for real time. So that's our real-time version of MetaStock. MetaStock DC is daily chart. It just means that it looks at the market after the market close. You can use it to run meta market scanning. Everything pretty much that I showed today can be done. The only difference is it won't update during the day. It's more built for those people that are trading after hours markets and just want to be able to do a bunch of really nice scanning. It's only $69 a month. That includes MetaStock. It includes Data Link, our data feed for that, and the market data. And it's also the one that's been rated #1 28 years straight. So what I want to do today is, if you're interested in trying MetaStock, if you're interested in trying out these tools, we have a really good package to help you get started. If you buy 1 month of data, we're going to give you the second month for free. We're going to give you the third month for free. So for about $20 a month for end of day, and less than $100 a month for real time, you can try MetaStock and do all the system testing that you want and really evaluate whether MetaStock is going to be helpful for you. So that's going to include MetaStock 17. It's going to include data for the region of your choice. It's going to include what we call our white glove installation, where somebody helps you get set up and gets you started. And it'll include a training package that we call Unleash the Power of MetaStock. So all of that starts at $59 per month. Give us a call, 800-882-3040, metastock.com/sales chat. I use it in my own trading. I love it. I had my best trading year ever last year. It was awesome. So give it a go. 800-882-3040. What's the worst that can happen? You could cancel your subscription. But we don't want you to do that. That's why we're going to have somebody kind of sit down with you, walk you through the software. That's why we're going to give you unlimited support. And if there's anything we can do to help you along that, if you run into questions, unlimited access to that support team. So 800-882-3040, metastock.com/sales chat. 28 years in a row, #1. I have sales reps that are younger than that, way younger than that. Give it a go. There's a reason it's been rated so highly. And I just love it. I won't trade without it. You can get that with the Summit Action Packet, which is going to include the Candle Profit System 2.0. It's going to include your GoNoGo charts complete, the Fulgent AI. We'll also throw in 3 months of the Learning MetaStock subscription, the Unleash the Power of MetaStock, and you'll get 2 years of stocks and commodities for free as part of that purchase. So normally your purchase is $2,839. Here it's $1,346. Most of this package is also on a money-back guarantee, so you can get a refund if it doesn't work out well for you. So metastock.com/summit deal, 800-882-3040, or metastock.com/sales chat. I'm going to put my headphones back on because my time is over. I do realize there's a bunch of questions here, and Kelly, you've done a great job of typing out answers. If I missed any, I'm going to chat in answers, and feel free. Again, I don't want any, there are hundreds of people here that would miss some chats, and I don't feel bad about that. Metastock.com/sales chat. I've got like 2 people that can help us answer your questions. So anyways, all right. 2 people today, I mean. 800-882-3040. Thank you. I hope that was helpful for you. Hope you learned at least a little bit about the MACD. Hope you're enjoying the day today. I do want to say thank you to Stocks and Commodities Magazine for supporting us. They've been supporting us for 9 years. I remember the first time that we ran this event, we decided it was a good idea to start it at 8 a.m. Eastern, which means here in Utah, we showed up at 6 a.m. to get everything running. We've learned a few lessons over the years, but it's been a great event, and I hope you guys enjoy it. We put a lot of work into it. So, and thank you to Stocks and Commodities for supporting it. Thank you for the Chartered Market Technicians Association for sponsoring the event, for supporting the event. We appreciate that as well. So, Sanjay says, can you share Steve Bigelow's slides? Yeah, email me, Sanjay. I'll include my thing. I'm getting his slides so I can share them with you. Glad I was able to stave off that cold. Don't worry, I don't think it's the Rona. Our next presenter is Todd Horowitz. Todd has been a frequent MetaStock guest. I love Todd. I love the way he talks. I think he's awesome. He's always very entertaining to me. Todd, how are you doing today?
What, you put your earphones on so you couldn't hear me, or what?
Oh, were you talking earlier?
No, I'm just kidding. I like what you had to say, though. It was very, very good presentation, and that was.
Oh, shoot. All right, guys. I instead of making Todd the presenter, I booted him from the room. Hold on a second while we get him back.
Hi there,
think you threw
Greg
me
Lewis,
out.
MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock?
Now I can't even hear you. What's going on here? Now there's something. What happened here? I can't hear.
I'm sorry. I'm sorry, Todd. That was my fault.
You threw me out already. I didn't do anything bad yet.
Yeah. Oh, I didn't mean to. There's a make presenter, and instead I dismissed you. So let's try it the other way this time. I'm glad you popped back in so soon as Metro.
All right, so show my screen. What screen are you seeing? Are you seeing my presentation?
I am seeing your presentation, yes.
Okay, good, because I never know. I got so many screens here. I don't know which one it goes to, and I don't have control of it. So anyways, your presentation was great. I enjoyed it. And always, MetaStock is always a great company, and you guys do a great job. So it's always a pleasure to be a part of it. And thanks for having me back. And with that, I know you already cut it on my time, so I will speak fast.
Oh, and feel free to go a little bit long if you need to.
That's right.
Yeah.
I know there's other guys, and everybody wants to get their fair shot. So it's all good. I'm always around anyways, and I do a lot of calls and a lot of webinars that I talk markets, and of course. It's great to be here and part of MetaStock. They are a great company and have great software. So certainly I encourage you to check them out. But this is about our day trader's dream, we call it. And it's basically a setup and a system that you don't have to do anything. Okay, you just have to watch your account. You don't have to make any trades. They're done automatically for you because they are based on day trades and they are very time sensitive when they show up. And they're going to be in the futures market. We use 8 different or 9 different futures that we can use the micros on. So we start everybody out very small so that you can get a feel for it and get comfortable with it. But I'm going to show you everything that we do, and I will also show you the results as of yesterday. Okay, we are always current, and each and every week I send out the results, and you will obviously see them in your own account. But before I get started, like you've seen probably, well, however many presentations you've seen today, everybody's got to show the disclaimer. And of course, options and futures have risk, and the past results are not indicative of future performance. But since I've been trading for 44 years, I will say that my past performance is pretty good. And I expect good things. And it's not that there isn't drawdowns, because remember, okay, anytime you're using risk capital, there is going to be the inevitable drawdown. I don't care who you are, what you are, or how good you think you are. Drawdowns come, and that is as simple as that. So, anyways, we are talking today about algorithmic trading, and we have a proprietary algorithm which is basically built off of the way that I learned how to trade. I started as a floor trader without charts. Okay, floor traders don't have time to read charts. Floor traders are trading what they call paper. So an algorithm is based on many indicators you may look at, you may use or whatever, but everything is combined into one thing, becoming a mathematical model. Okay, and there is no opinion, there is no human emotion put into this. All that we use is all the things that I teach, and of course we take out the key ingredient, which is the emotion and the desire to be right or to try to outguess the market. And of course, we don't want to outguess the market. We want to go with the market. Okay, so that is how the algorithm is designed to work. And if you've ever heard of the turtle traders, Richard Dennis actually is a friend of mine, and him and I traded together in the 80s on the floor of the CBOE, and he made the statement that he could take anybody, if they would follow the rules and trade correctly, he could teach anybody to make money, which he did, from anywhere from a sanitation engineer to a Harvard MBA, and the ones who followed rules made money. And that is what we come down to. As long as you stay the course and follow the rules, you will make money. But at the end of the day, many talk about the manipulation of markets, and I go, that's all fine. Okay, but what do we know about markets for sure? Okay, there are certain things in markets that we know to a 100% certainty. Okay, and number one is that no matter what, manipulation or not, there has to be a buyer or a seller on the other side of the trade. Okay, so it doesn't matter if you're talking about manipulation, because if somebody's trying to manipulate the market lower, the only way it will stop going down is when the buyers step in. So what it really talks about is price discovery. Okay, and the more that we get information, okay, the more that is out there, the more the markets have a tendency to price in information well ahead of, for example, reports like coming up this Friday on the 4th, you've got the jobs number. Okay, and that information is pretty much already priced in because it can be calculated. Now, and I go back when I started in 1980, there was some inside information and some things you could do ahead of numbers. Now you can't. Everything is now priced in, which makes room and makes the algorithm better, because it really is doing what? It is reading the price action of the market. Okay, and that is the key strategy of any trader, whether you become a member with me or not. Remember one thing: markets are going to price in news long before it gets there. Okay, in fact, I can honestly say I have never read the Wall Street Journal. I have never read Barron's, and for the except that the fact that I am on the media or in the media on occasion, like I was on Liz Clayman yesterday at 3:55. I only watch VSiN Sports and Information Network. I don't watch any of the pundits or the news, because if you trade the news, you lose. Okay, and you can only formulate a bad opinion on old data versus letting the price action dictate, which again goes back to what the algorithm does. It is reading the price action, trying to be with the overall trend. The magic of math in the markets. Okay, everything is a mathematical model. Okay, if there isn't a mathematical model involved, there isn't a certainty. Okay, because if you look at the markets, okay, they are a math model, and of course, I heard options being talked about earlier. They are a perfectly round math model that every option relates to everything else. Well, every market that has correlation, the S&P futures are related to the SPY and the SPX. So again, if you understand that and know that the numbers are the numbers and that's how they work, and you understand how to combine that into a major system, then you can create a winning system over time. Okay, and again, I want to remind everybody that that does not preclude there's going to be drawdowns, and you'll see every day, because we've actually, I don't have as much data as usual, because I always personally trade whatever I'm going to put out with my own money, and then after I'm comfortable, I will then share it. But I only show results of what you could have achieved if you were involved. Okay. Now, one of the big things when you're using the futures market, okay, or any market, but certain things you don't have the same advantage in trading. For example, in the equity market, you don't have the same advantage you do in the futures market because you've got the FINRA day trading rules involved. You've got margins involved. Whereas futures allow you to use very, very high leverage. Okay, and again, as long as you understand the leverage that you're using, there's never a problem. The problem with most is they become over leveraged, especially when they're doing well, because the multiples go up much faster, and they go, oh, well, this is like stealing. And of course, the inevitable happens, and the markets change, and of course it goes away faster. So you have to understand what you are actually leveraging and incurring. Now we do get as a day trading model, we get what they call day trading margins to go along with it. So when you're margin trading, okay, you are, for example, okay, the S&P future, okay, the mini ES, which is what everybody basically trades as the S&P, is the normal margins is about $11,000 or $12,000 overnight. Okay, but if you're day trading it, it's normally about $1,000. The contract is worth about $235,000. So for $1,000, you're leveraging approximately $235,000, which is unheard of. But again, in the futures market, because of their liquidity, because of their fluent markets, and because of the way they trade, and of course their governing body, you are not restricted as you are with equities, which is what makes this model work so much bigger. And again, we never have you over leveraged, because again, the dangers in too much leverage are too scary to talk about, because one of the biggest things in trading is the mental game. Okay, there are so many things involved in trading, and interestingly enough, okay, trading and game playing are the exact same thing. Okay, and when I'm talking about game playing, I'm talking about poker, bridge, gin, or backgammon. The better trader, the better player is going to win over time. They're not going to win every time. Okay, we're all going to go through streaks, but if you can gain a mathematical edge, okay, on your opponent, and just remember, the market itself is a competition. Okay, you are competing against others for trades. When you're buying, somebody else is selling. Okay, so when you keep that in mind, remember, it is a game you're playing. So if you're gaming the market and you're using the correct skills, and again, this goes to whether you become a member with me or not. Okay, I want you to be better at trading. Okay, I want you to be, I want you to learn to benefit for yourself. And again, it doesn't matter whether you're with me or not. I like to teach it anyways. In fact, I have a program that I put in 600 high schools that I finance and pay for myself, because I can't stand the financial literacy in our educational system. But anyways, so the mental game of trading, again, it's most of the bad stuff is in your mind. Okay, it happens. We all know it. We've all probably have experienced it at one time or another, and you have to clear that. Well, of course, having everything automatically done for you and using an algorithm to make the decision and letting somebody else execute, you don't have any decision to make. So you take out the emotional side of your trading. Okay, and really, what you want to do is you want to invest in yourself. Okay. And that goes to whether you're a member with me or you do something on your, whatever it is, you want to make sure that you are doing, first of all, what is in your best interest. Okay. And what is in your best interest is to make money. Okay. But more important than making money is defending your money. Okay. You got to make sure that you always understand the risk that you're taking. Okay. Because again, too many get involved in too much stuff that is, I can't use the words here, I don't want to get beeped or about knocked out again, but it's not good. Okay, again, there's no shortcuts in this industry. There is no free lunch. I mean, nobody's on the street corner passing $100 bills. No matter how much you read about that stuff, you have to invest in yourself, and you have to understand all the things, starting with risk first. Okay, any investment should be with a risk capital. Okay, and of course, why are futures the best? Well, again, they're very highly leveraged. Okay, so you get a big cash advantage to create a position. The futures markets are much more liquid, okay, than any other market. The bid offer spreads are much narrower. Commissions and execution costs are much lower. Okay, the future markets are more efficient and they're fair. Short selling, there's never a uptick rule. Okay, day trading margins, and of course the biggest is the FINRA day trading rule. Now remember, FINRA day trading rule is not really for your benefit. The FINRA day trading rule is for the broker's benefit. Okay, so you don't lose, so they can continue to collect their overnight rate interest on what's holding in your account. Because again, where else would they cut you off from trading and letting you pay them their commissions or whatever? So the FINRA day trading rule is not to the advantage of the trader, it's the advantage of the firm. But in the meantime, in futures, there is no such animal. There is no day trading rule. You can trade as much as you want. And of course, by using auto trading, you minimize your emotions. Okay, now everybody's got a little bit of emotion to them. I mean, again, that's part of being a human being. And automated trade systems minimize emotions throughout the trading process. Okay, it preserves your discipline because you're not making the call. And again, one of the hardest things for people to do is to be disciplined, take their losses when they're supposed to, take their profits when they're supposed to, and never turn a trade into an investment. Okay, that does not bode well. And usually when that happens, okay, you are caught and you're holding a loser, and you probably cashed out a big winner to hold the loser. Okay. Diversifying trades. And what about at home? And what if your computer goes down? What if your internet goes down? Okay, you have a backup. Okay, can you get out? Okay, monitoring it. You can monitor it right on your statement, and it updates as the trades get made. Never miss a trade, and no temptation to cherry pick. And I'm sure nobody here has ever done that, but it's very common that because we have an opinion, we tend to think that we know better. So we'll say take some trades, won't take others. Well, that's not it. This model is going to take every signal and every trade as it comes. Okay. Some days are busier than others, but it's strictly built on a signal that is built on 60 minutes. It doesn't make a lot of trades, and it only trades during what used to be what they call the pit hours. Okay. As a professional or a floor trader, which I'm still a member, but as a floor trader, the OEX, which is where I started in 1980. Okay, well, actually the OEX wasn't there yet, but I started at the SIBO. Okay, but the markets opened at 9:30 Eastern. There was no pre-market trade. There wasn't any all-night trading. The equities opened at 9:30 Eastern. They closed at 4 o'clock Eastern, with the index options trading until 4:15 Eastern. Okay, the bond markets opened at 8 a.m. Eastern, closed at 3, and so on. And so that's the only trade time that we trade is during what were known as the pit hours, because those are still the hours where liquidity and the volume sit. Okay, now the two major aspects of the two things you want to make sure is it's like we have a clear and decisive plan. Everything is pre-programmed to exact. Okay, there is never a question of whether I should or I shouldn't. Okay, there is a question of I'm doing this trade because I'm getting the signal that says to do this trade. There is nothing else that I have to think about. Okay, and it is totally automated. And just to dispel one of those nasty rumors that are always out there, and if you watch the pundits, you will hear them talk about, well, it's the high frequency traders that are pushing the markets where they are. Well, that's a bunch of horseshit. Excuse me, but That is, you should, anytime, if you know any high frequency traders, any firms that do so, go shake their hand, give them a hug and a kiss and say, thank you very much. You're the reason that my commissions are much lower than they were 30 years ago. They put me out of a job because they replaced market makers. The true high frequency traders are you, the individual that is panicking or chasing and pushing buttons on their computer. Okay. So it has nothing to do, when the markets go down, it has nothing to do with high frequency trading. Okay. It is all high frequency trading doing is filling the orders and the paper flow from humans. Okay. Now, so I said this most of this already, but I'll say it again. The system trades original pit hours only. Okay. So we trade currencies. We trade the euro currency, we trade the Canadian, and we trade the Australian. Okay. We trade those from 8 Eastern. If there's any signals, we stop trading them, and all positions are closed if we're in any at 3 Eastern. Okay. Gold, we trade. It opens at 8 Eastern. It closes at 1:30 Eastern. We're out. Crude oil, same hours, 8 to 2 actually Eastern, and closed. Indexes, 9:30 to 4 o'clock and closed, which means that the first trade we can make is 10:30 in the equities. Okay. No trade will be entered until 8 a.m. or after 3. Day traders uses micro and mini futures. Trades are done in block order, so everybody gets the same fill. Okay, there is not any difference. We all, and including me, we all get the same fill. Okay, all groups are executed by Capital Trading Group. That is our partner on this venture. Okay, and they trade all of my accounts, which is how highly I think of them. Okay, and you'll hear more about them. We have the ability to do auto trading worldwide. Okay, it doesn't matter where you are. Okay, for all of our methods and programs, we do have now the ability to go to all over the world. If you are in different parts, especially Canada, okay, that's always the problem child for many, but including Canada. Okay, and now this was the beginning. This is the hypothetical model. Okay, we started trading this on August 19th. So in gray, okay, was strictly hypothetical. Okay, then we went to real money in October. Okay, and then we introduced for the first time to the public, okay, in December. Okay, and here is the equity curve since December 5th. Okay, and you can see the exact results, and it's slightly profitable, just about 1%. And you will see this is every day since December 3rd. Okay, the 3rd through the 28th, and you can see yesterday was a disaster. Well, it happens. You know, it's going to happen when you get a rip your face off short covering rally. You're going to get these, but in the meantime, you can see, and this is every single day. We don't ever, and this is including fees and commissions. Okay, this is net of everything. Excuse me. And again, we've got our regular model, and here is the equity curve since it's gone live. Again, remember, this has been since members could participate. Okay, and we also have what we call the day trader's dream aggressive model, which is using the regular one. This one uses the micros. Okay, this uses the minis, so it takes more capital to start with, 30,000, but it is using the minis. Now this started on January the 13th. Okay, and of course this is also profitable. Here is the equity curve, and here are the profits. Up just over 1% since the 13th of January. Okay, and of course we'll figure that the percentages will be much higher over time. Okay, and also we will have the ability by using the equity curves that we create, okay, to figure out when is the best time to add on, or what we call press up our wagers, so to speak, because there are certain times that are very advantageous, especially when you know that your win rate is 66%. Okay. Now, what is letter of direction auto trading? Okay. Well, that is what you're going to be doing if you're going to use this method. Okay. It has to be done through what they call letter of direction, which means that Capital Trading Group, which you'll hear more about in a few minutes, they have the authority to only execute these trades that are issued by our algorithm off of the computer. Okay, there is no, they cannot make any other trades. Okay, they cannot touch your money. They can only execute the trades as directed specifically by the algorithm. Okay, you have complete control of your account. You can add or withdraw funds anytime you want. You can stop trading and close your account at any time. Okay, but of course, again, we go back to the benefits. You don't pay data fees. You remove all your emotions. You maintain control over whatever you want. All clients see the same price. No pattern trading restrictions, and Rule 1256 tax. Okay, which is futures are taxed at a much more favorable rate than options and equities. Okay. Now talk to your accountant. Again, I'm not going to give you tax advice, but I'm going to tell you that Rule 1256 is a much better tax base. And for some of you who might trade the the SPX, which is also taxed under the futures tax laws. Okay. Now, Capital Trading Group has been in business for 30 years. I knew them before. I knew them when they weren't the CTG group, but the two principals, which are the people that you deal with directly, are Nell Sloan and Patrick Lafferty. Okay. And this is the 1256, which is 60/40 capital gains. But again, always consult with your accountant. There is no wash sale in futures. Okay. There's nothing to worry about there. So you've got a lot of direct advantages. Okay, using futures as well, plus using the automated or letter of direction trading. Okay, and you open up your brokerage account. Okay, CTG will execute your trades. All traders, all clients ensure receives the same net. It's all done as bulk. Okay, you can see the trades once they are allocated. Okay, in other words, if we make a trade at 9:01 or 10:01 Eastern, okay, you won't see it that moment, but I will start emailing out trades as they come out. But as soon as the trades, because they're doing them in a block order, as soon as they are allocated to your account, then you will see them live in your account as they are trading. Okay, and I guess, and how do you keep track? Well, of course, you get a 1099. You get your daily statement like you do anywhere else. Okay. And you can review through the portal 24/7. Just like, again, nothing else changes other than the fact that somebody is doing the trading for you based on a signal, and you are not getting your opinion involved and nor your emotion. Okay, and it's being done automatically for you. Now, and when you look at the difference, between futures and options, there's a lot of very significant differences. Okay. And, when I talk about, I am a born options trader. Okay. I started out in options. That's where I learned how to trade. But I have been a member of all three exchanges in Chicago, still currently a member of the Board of Trade, which is really the Mercantile Exchange, but it's still considered a Board of Trade membership. But my first membership was with the Chicago Board of Options Exchange, okay, where I traded for many, many years and was actually trading in the OEX bit. Now, if you've ever noticed, or if you're an options trader, you'll know much of what I'm talking about. If you're not an options trader, I'll give you a quick education. But options trade like stocks with a bid-offer spread, like futures with a bid-offer spread. However, the difference is that options are affected by what is known as implied volatility. Okay, so volatility goes up and down and spikes, and it has a direct effect on price. Futures have no such animal. They don't have implied volatility. They have price. Okay, you're trading purely price, so you're never overpaying for a future. You might lose money by being long, but you did not overpay. Versus on an option, you can buy an option, be right on direction, and still lose money because you overpaid because of the implied volatility. The other side of the equation in futures versus options, okay, is you don't have as wide as a bid offer spread. As the markets get crazier, the bid offer spreads get wider. And why is that? Well, because the market maker on the other side of the trade that is actually creating the market for you can see the overwhelming amount of order flow. So they are going to widen the market, because a true market maker is looking to trade both sides of the market. They are not trying to take a position. They are trying to scalp the middle part. Okay. So they're not going to sit there. So when you see a sudden expansion in volatility, and if you're not sure what I'm talking about, I will share with you right now. Just give me 1 second to pull this up. Okay, I gotta get there. Okay, so I can show it to you. Okay, and I will share with you. Now here is an options chain, and I'm going to put up the spiders just real quick, because that's obviously one of the most liquid products that there are. And you can see that these trade, at the closing price, we're trading in about an 8-cent wide market, but that will change, normally narrower, because they are so liquid. But if you look at the implied volatility, which is 25% right here, 24%, you can see what the price of the at the money option is, which is $5.23. Okay. Now, if we look at something comparable, okay, and I can't think off the top of my head, but I'm going to use the Qs right now, which are a little bit less. They're about 20% less in price, but the Qs, okay, closed at 352. Okay, their volatility is 33%, so their options are going to automatically be about 30% higher based on dollar for dollar. And sure enough, I look at the at the money at 352, it's 620 versus 520. So you can see that the price is 20% higher off the top, and that's only related to this right here, the implied volatility of the market. You have no such animal in the futures market. Okay, the futures market, when you look at futures, okay, and you look at a price ladder, if I can remember how to do this here, I normally have, during the week, I normally have my screen up that I'm trading off of, all my price ladders. But here is this is known as a price ladder. Okay, futures will have, okay, a 1 tick wide market 90% of the time during the trading hours. Okay, so you can see that this market will be 1 tick wide. Okay, 44.19, 75, 49, 44.19, 50. Okay, so you're not paying any VIG, any premium, any extra. The price is the price. And that's all that you, as a trader, that's all you care about, is that the price that you're getting, the best possible price you can get without overpaying for the option. Okay, because at the end of the day, when volatility gets crazy, if you've ever heard me speak before, you will know that I will say the same thing all the time, that options themselves are always fairly priced unless they're expensive. They're never cheap. Okay, they're always fairly priced unless they're expensive. And for those of you options traders, whatever, I assure you that Facebook is way overvalued, not the stock itself, but the option prices coming in, because, of course, it has earnings this week. And I assure you that the volatility here is in the 70s when it should be in the 30s. So if you're buying this week's options, you're paying twice as much. But we have no such issue in the futures markets. Okay, the futures markets are straight price. That's it. Okay, doesn't matter. Gold, crude, currencies, equities, all the same. Okay, the only thing that changes is price and the price action. And if you're trading with an algorithm, that's all you want. You don't want to have any other factor that can take away from your potential profit. Okay. And that is what happens in these things is when you start to move away and you start to use options. Again, I trade options a lot, but I don't trade them, day trade them, because I can't afford to give up the edge of the bid offer spread all day long. Because every time you're doing it, you're giving up too much. You're giving up a much. If you ever thought about it and did it in percentage basis, and I encourage you to do so, okay, you're giving up a much bigger percentage of potential profit. A $2 option with a 10-cent wide spread is $10 on 200. Okay, you're giving up $10 on 200,000 on a future. Think about it. Okay. In the meantime, I'm gonna offer to you what we have today. I'm gonna give you a special offer, and of course, I will obviously take. Were you at the CME? Did you know? Yeah, I know Anthony Crudell. Yes, I did. In fact, I've done an interview with him as well. He's now podcasting. Okay. I've been a member, and they're all very close to each other. Okay, they're all, in recent years they're across the street, but even when they weren't across the street, the Merc was close. Okay, the CBOE and the Board of Trade were in the same building for a while. But anyways, I'm going to offer you what I have, and I will be happy to answer any question you have regarding trading, whether it be this method or anything else you want. I will give you the floor as soon as I offer you what I have to offer you. And of course, we call it Day Trader's Dream because it's easy. You don't have to do anything. It makes money. And it is basically using the same method of trading that I've used my entire life. Okay. Trying to get with and be part of the trend. Okay. So you can get all executions there by CTG, and you saw what all the costs are included in. You saw the profit. Okay. There is no overnight risk, which for many is a big thing. Now, I have models that we trade. I have portfolio models that are as big as 350,000. Okay, that we carry positions for days, weeks, months, never days, always at least weeks. Very rarely do we get a reversal because the algorithm is also designed to not get trapped or caught up in a quick move. Okay, in other words, it measures for the volatility, and if volatility suddenly spikes for whatever reason, the system knows not to overreact. Okay, but we take no overnight risk. Okay, all trades are determined by the algorithm. There is nobody's deciding should we or shouldn't we. The algorithm decides not only the entry, but the stop. Okay, and the exit, and the exit moves in your direction. If the trade is correct and good, the algorithm will pull the stop along with the direction and will never adjust. In other words, if I buy something at $10 and it goes to 11, my original stop was 8. My stop doesn't ever go below 8. It then comes up, and once it moves up, it will never go back down. It isn't self-adjusting. It's not using an opinion. It continues to use just the mathematics that are tied into it. Okay, no emotions. That's the key. Okay, you cannot, again, traders cannot be emotional. It is virtually an impossibility. I've watched thousands of traders blow up on the trading floor. A number of them worked for me when we used to hire traders. Okay, but I have today for the first 50 people at $99 a month. You can try this system out. Okay, you'll have to open an account with the Capital Trading Group, and for those who sign up, I will send you all their information. And Nelson will call you and open you up an account, or you can go for the annual at $1,000. Okay, normally the prices are $199 and $2,000. Okay, and if you want to join me and become a member, let's go to bubbatrading.com/dream. Okay, and with that, you will get our Monday night strategy call every Monday for about, depending on what's going on, from an hour and 45 to 2 hours. Now you don't have to come to the whole thing, but it's basically talking markets with my partner, and who was a VP for Solomon Brothers back in the day. And we talk markets. We talk about the commodity markets. We talk about the equity markets and what's going on and what's driving them from a news or that type of story and why. And then we go into and actually chart and manage and disclose our longer term positions, specifically what they are. But that is something that you get, and everything that we do is recorded. Okay. I give out trades. I just don't give them out. Yeah, he's a very good guy. I just don't give out trades before they happen because I can't. And I cannot, if you cannot do this on your own because you'll never get the trade in time to participate. Okay. The trades are done at like 1 minute past the hour. Okay. I couldn't get you an email fast enough, okay, to get you that information to have you execute. By the time you see it, it's already been executed. Okay. It's all futures. I have stocks and option stuff, okay, which you're welcome to join in and tune in for at any time. But this is about futures, because if you want to be active in the markets, and again, that depends on you. Okay. Some people don't want to day trade. If you want to day trade, it has to be futures. You cannot. And listen, if you're doing it, I hope you're making a fortune. But I'm going to tell you that trying to day trade options, most people, 99.9% will go broke trying to day trade options. Okay. You cannot overcome the edge of the bid offer spread alone, not to mention volatility that goes along with it. Okay. This is for futures only, and it's starting out with the micro futures, which, don't kid yourself, you can see the equity markets are already turning into somewhat like futures markets. Okay. You now have a number of products that have 3 times a week expiration. Okay. When I first started, you only had quarterly expirations. Okay. Now I will bet you by the end of the year, okay, all the big liquid stocks will be 3 times a week, and the indexes will be daily expirations. Okay. Because that is the correct model. If you want to be a trader, you don't have to have a clue. You just have to know that the S&P is directly 100% correlated to the SPY, and the NASDAQ is directly correlated to the QQQ, and except without giving up the edge nor the margin that it takes to trade those. Okay. Remember, you're trading something that you could never do this in the equity market because you don't have enough capital. Okay. It takes too much capital plus the day trading restrictions and everything else that we talked about. The micros are perfect. They work just fine for this model. Okay. Again, we're not looking for one tick. Okay. We are looking to drive that market in a trending direction. Okay. So that we can make multiple ticks, lots of ticks. This is not a scalping model. I don't think that you want a scalping model. I think when you get a scalping model, you end up paying the broker more in fees and commissions than you pay yourself. So look, if you want to become a member, I would love to have you. I do a lot of education. There's a lot of training sessions on this and what's going on and how it works, plus all the normal training I do, the Monday night call. I actually have a membership for day trading live every day for 45 minutes. I trade my account live with my members of that class every morning, 9:30 to 10:15. We trade the opening for real dough. Okay, a little bit faster. It's not like this. We're trading on 4-minute charts. This is what I'm using when I'm day trading with my members. Okay, here, that's what I'm using with my members. A 4-minute chart. Okay, that's what I use during the day from 9:30. I always go to my time, but from 9:30 till 10:30. I use it all day, but that's what I'm using when I'm day trading actively. This is day trading passively, and I don't have to think about it. Okay, it's automatic. Everything is done for me. So again, it's bubbatrading.com/dream. And if you have any questions, you can always ask me now because I have some extra time because I rushed because Jeff was late. No, I'm just kidding. And because again, I want to be able to help you no matter whether you want to trade with me or not. Again, I don't care if you're a member or not. I will always give you my honest answer. Okay. We do a great job. I've heard your webinars. You're awesome. Thank you. Okay. We don't trade after hours. Look, options will eventually trade after hours, but remember, after hours trading there is no liquidity. Okay. I'll teach you one thing real quickly because I know I got some extra time. Okay. If you're a trader, an option trader, okay, know this. Okay. If you're making like an earnings trade, did you know that you can exit that option in the aftermarket if it's profitable? Did you know that? Okay. No market is liquid after hours. Okay. So if anybody does that, okay, there are ways to exit options positions in the after hours market if you know what you're doing. Okay. We don't typically, I do not preach, teach, or want people to trade in the night markets because they're not liquid. Okay. Again, liquidity is our key to success, not whether they're open or not. I'd prefer they'd close again. Now, there are certain times, during Brexit, I traded 36 hours straight myself. Okay. During the elections, I traded till midnight or whatever. But normally there's not enough liquidity at night. Okay. So this trades, I daily trade myself all of it, from whatever, 9:30. Well, actually I'll trade a little earlier because I'll trade some other products. But the system itself, the first possible trade is 8 o'clock in the morning Eastern time. Okay. That would be either in the currencies, gold or crude oil. Okay. No equity trade can be done before 10:30 Eastern time. And everything is done and closed by 4 o'clock Eastern time. Again, it will go directly by the pit hour and it's over. We don't get caught in the liquidity trap. Okay. And you don't have to be there. Our commodity service, well, again, I've got models that have, my biggest model has 29 open positions every day of the year. Okay. Long or short. Okay. We trade 29 markets. We have anywhere from a $10,000 portfolio to a $350,000 portfolio, which you can trade yourself or you can have it automated traded again through CTG. Okay. But they are portfolio models. And I also have that same creation using synthetic stock in the equity market. Okay. Because I can teach you how to create synthetic stock and create a lot of levers there as well. Okay. But again, one thing that comes about, the equities are traded through Tradier. Okay. Because they charge $10 flat per month. And we have written software that will do the auto execution based on the specs of the rules that we follow, and based on there's a lot of stuff that goes on with options, right? Okay, if you know options, then you know what I'm talking about. If you don't know options, I can't teach it in 5 minutes. But there are a lot of factors that go along with options, and there's a lot of things that most people don't understand and where they can gain benefit. Okay, but yeah, so we have a lot of models. Again, certainly, if you have questions and want more information, you can reach out to me at bub@bubbatrading.com. If you don't hear from me within 10 minutes, usually that means I didn't get the email, because I'm the fastest draw in the West and have the best customer service. And how do I know that? Because I'm not only the provider, I'm the customer service too. Unless it's a billing question, and then you can talk to somebody else. But if it's about trading, I'm the guy. It's me and me for when it comes to trading in these models. Okay. Yeah, you can email me direct. I know who you are. I've seen you before. You're around. Okay. You can email me direct, and I'm more than happy to show you and talk to you about it. Okay. Again, I'm full disclosure. I don't believe in bullshit. Excuse me for those who are offended. I tell it like it is. Okay. And I don't want unhappy members. I have a beautiful chat room with a lot of people, and nobody, and even when we go to a bad day, nobody is miserable. I don't need miserable people. Okay. I don't need people that want to be, miserable about something for nothing. Okay. There's enough strife in the world. I don't need my own to add to myself. Okay. I want people that understand and want to learn, because I'm going to teach it, and you're going to get. What's the favorite book on trading? The one I wrote, the two I wrote, Bubba's Options to Trading, Bubba's Guide to Trading Options, and Bubba's Guide to Trading Weekly Options. Okay. And the one's available on Amazon, if it's still there. The other one is just available through me. But in fact, I'll tell you what, any of you who signed up today, okay, in the first 50, I will give you a free 6-hour options training session that I did that is recorded, and also a PDF copy of my 2 books. Okay. There, if you needed a kick in the ass to get over the top, there's your added bonus. But again, I'm not a big fan. I think that price action and understanding that things are priced in and learning how to read the trend, I think the rest becomes far too complex and really creates dependency on things that you don't need. Okay, again, that's my opinion. Not that, you know, that you can't learn anything from a book, because I believe in trying to learn something new every single day. But again, you'll get many different views, and it's not that complicated. Okay, it's just like the MetaStock software. It's not that complicated. You put what you want, it gives you what you want back. But anyways, Jeffrey, you email me at bob@bobbatrading.com. That's the way you get anything. And again, if you become a member, you will get my books and this free 6-hour trading session. And at least you'll get to come to the Monday night call as well. But if you have any questions, I invite you to join me at bobbatrading.com/dream. Even when I'm trading self-directed since 40 years, Bubba's offer is really good. Thank you. Thank you very much. Okay. So
we do have a couple of questions in YouTube, if it's a good time to interrupt a little bit, Bubba.
Okay.
And we promised we'd ask them. So Arnie wants to know if you can accept Canadian customers.
Yes, we can do Canadian customers.
Okay. And Player 30.
You know, I worked for 15 years to get Canadians a deal because they get screwed all the time. Okay. So yes, we can do Canadians. Okay.
Okay.
And we can do IRAs as well. Okay.
Cool. Darts Player 32 wants to know if it's possible for you to lose more than your account than what is in your account if a market event happens.
No. I mean, in life's theory, if you didn't have somebody executing for you, if you're doing it by yourself, yes. If you're using the method, no, because it's going to be stopped out. There is a stop built in, and it is not that dramatically far away based on the amount of capital that we put in. We want for the regular, we put in 30,000. I mean, excuse me, 20,000. For the aggressive, we use 30, and you cannot lose your entire account because there are triggers that stop you long before. Where you can go back to here, you can go back to yesterday. Okay, here we got not trapped. We were on the wrong side. Okay, I don't want to make it like it's. We were on the wrong side of the Dow future. Okay, we were short. Now you know how much it went up, right? There's our loss. Okay, we get stopped out. These stops are the key. Again, that's what makes it day trading. Okay, without the same exposure, because again, there is an exit. Okay. And if you look at every day, okay, you can see that yesterday, I think, was our biggest loss in one day. Okay. And we've had a number of much bigger winning days. But again, you cannot lose your entire account. And you can do it in the futures market in general, but not in this method, not on this program. Okay. Because again, you will be stopped out long before that you get there. I would say the average stop, let's say in the Dow, starts at, let's say, about 200 ticks below. Okay. So if you're trading a full mini, that's $1,000. Okay. If you happen to be in every product at one time, okay, they're not all $1,000. Most of them are less. If you were in every product at the same time and every single product went the exact same wrong way, you might lose $3,000 or $4,000. Okay. On the big contracts, not the little ones. So again, under any circumstances, no. The answer is no in this model. But yes, in futures in general. Okay. My YouTube channel is Bubba Trading. I don't know the exact address. But again, if you email me, I'll send you a link. Because I don't remember all that stuff. I'm not a tech guy. I'm a guy that knows how to trade. I'm a guy that knows how to teach it. And I'm a guy who enjoys helping people help themselves. Okay. Anyways, is there any more questions, sir?
Yeah, Arnie has another good question that you might have an answer to. He wants to know if you have a broker you would suggest for Canadian customers. The ones he's using does not do futures.
Well, iBroker does futures in Canada. Okay, they're very good. We actually get to use CTG. If you want to do this model, the auto trading model, okay, we use CTG, who actually goes through GFF. Okay, we have a way that CTG can do the execution for Canadian customers. So yes, I probably have 200 members in Canada. Okay, and for our other stuff that is automated, we couldn't help Canadians. I actually flew up and met with Waterhouse years ago and had to deal with them, but now that deal's not good anymore because it's just too expensive. Because Canada always got screwed, okay, with high prices. But in the meantime, we have a deal with an auto broker that will be able to trade our other models that use equities and futures through iBroker. So you'll be able to trade at a normally reasonable rate instead of that ridiculous rate that you pay now.
Okay, and that's the end of the YouTube questions.
Okay, well, I thank you, sir, for having me back. Okay, if you're in, I'll get you set up. You'll be all done. Mr. Gibby, you are always a great host, and I'm lucky to always follow you because I always learn something about MetaStock. You're a great guy. I appreciate it, and thank you for having me back.
Thanks for coming. Anytime, Bubba. Always good to have you. All right.
My kids, have a great weekend. It's a pleasure to be here, and I will see you another time soon, I hope. Adios, everybody.
Okay. Thanks, Bubba. All right. Let's okay. Let's go ahead and kind of get here like this. Let's do this. All right. Very cool. Kurt, I do not properly see your webcam, so maybe click on the webcam options and you might be able to kind of switch between some webcams.
Yep.
But the one that you're broadcast. Go ahead.
Yep, I'm working on that. Let me see. Share my webcam. Right. Come on, baby. Let's go.
While you're working on that, I'm going to say thank you to our sponsor, Traders Summit. We are traders. I'm getting tired. It's been a long day. I hope you guys are doing well. I want to say thank you to our sponsor, Stocks and Commodities Magazine, for supporting our event. Great magazine. Remember, if you're watching this on YouTube right now, go to metastock.com/traders-summit. Register for today's event. You can get a free magazine. You can sign up for a free week in Steve's room. You can see Kurt right now on the screen. You're coming through now. Good job. And all of the presenters actually have a really, really good offer that they did as a bonus for subscribing. So to metastock.com/traders-summit. But special thanks to Stocks and Commodities Magazine, as well as the CMT Association for sponsoring today's event. Also want to remind you that if you want to get our Summit Action Pack, you can get the CPS, the GoNoGo, the Fulgent AI. It's a great package. $2,839 is what it normally is, $1,346 today. Good special, metastock.com/summit deal, 800-882-3040, and metastock.com/sales chat. So our next presenter is very visible right now. We can see him, we can hear him. Kurt, how many times have you done an event with us? I know we've had you quite often. Do you know what the count is?
Geez, probably 5 or 6 times. I don't know.
Yeah.
It always seems like I'm on the road, so that's a good plug that you can do this trading thing from just about anywhere. So I'm in Bozeman, Montana today for a basketball game. So
is it a kids game? I imagine, or
yeah, my son plays for University of Idaho, and so today they play Montana State, which is here in Bozeman. So should be a fun time.
Cool. Well, enjoy Bozeman. Kurt does a great job. He's going to talk about ETF tipping point, I think. And I'm going to get out of his way and let him do that. Thank you, Kurt.
All right. Thanks, Mr. Gibby. Let me make sure everything's showing up okay here.
Audio down. Audio down. We can't hear you, Kurt. Yeah, not hearing that. I don't know if you can still hear me. What I'm going to recommend that you do, it looks like you have a wireless setup. Maybe unplug the dongle and plug it back on. That usually is enough. All right. Kurt, I can't hear you. Can you hear me? Just to nod your head or wave to the camera. You can hear me. Okay. What I want you to do is if you look at the sharing page, the
All right, everybody, sorry about that. We are just having one technical issue getting everything up and running here. So we will be back in just a moment. We're just having a connection issue with our presenter. So we will be right back. So give us just a second more. I'm just going to put the technical issue sign back up and we'll be right back with you. Okay, we are just about there. He's getting reconnected into the webinar room. Excuse the blank screen. That's what we're seeing at the moment. So Kurt is just about logged back in, it looks like, and we should be get going back just a moment. So thank you, the Silvery Stars. We're going to keep having some good music for just a moment. So enjoy the march. Are we back, Jeff?
Yeah, we're back up here.
Oh. No.
We had it for a second. Yes, it is. You're back again. Yeah. Okay.
MetaStock for this exact setup that we're talking about, just as a thank you. Okay, so of course the usual stuff our attorneys make us say: financial markets are risky, investing is risky, past performance does not guarantee future performance. That said, I want to talk to you today about the one thing really that for me that changed everything when it came to trading. And I'm going to share that with you. This is not something I invented. This is not something that I'm not Newton here, but this is something that's worked extremely well in the markets for well over 100 years and likely will work for another 100 years to come. It's one setup with one page of trading rules, and I'm going to give you that today. So let's start off with a real life trade example. And here is that trade example. It's on a little stock you may have heard of called Tesla. I know many of you are probably familiar with that company. But you can see in kind of the left-hand side of the screen that the price action kind of formed what we call a high tide flag or pennant or triangle, whatever you want to term it. And then at about the price of $439, we bought. And we're going to explain why we bought right there and why we held some of it to 519, as you can see on the screen, and some of it to 639.50. So that's a pretty decent trade. You can see from the time that we bought it, our risk was the low of the candle that we bought. And then you can see the market over the next few days gave us some pretty decent returns. So in this case, we bought on 11/17 for $439.20. Our risk was $6.19, and we'll explain this as we go. Our risk was the low of the candle that day. Our profit was $200.20 a share. So that gives us a risk reward of $6.19 in risk to a reward of $200.20, which is $1 in risk for $32 in profit. So just in the questions box, how many of you are familiar with the concept of risk reward and how that works in trading? If you're familiar when I say RR or risk reward, how many of you are familiar with how that works and why it's important? Give me a Y for yes or an N for no in the questions area. Okay, as those come across, we'll kind of get, we'll kind of half and half, I guess. right? Got a couple yeses. Okay, so risk reward is crucially important. And through today's presentation, I'm going to give you kind of an educational reason why it's so critically important and how that matters in your trading. So with a risk reward of 1 to 32, that means for every time, if we took a trade with these parameters, every time we took a trade, we could potentially lose $1 or we could potentially gain $32. What percentage or how often would you have to be right to break even? Is anybody a math guru?
I like this.
Figure
I
that
like
out?
us in the math.
Yeah, the math stuff is crucially important when it comes to trading. It's actually only 3.1% of the time. Am I coming through okay, Jeffrey?
I think I was coming through too loud too. Like,
Okay,
but you're
sorry
coming
about
through.
All right, sorry, I just heard your voice in the background. But Mr. Gibby's correct. It's a math problem, 3.1%. That's how often you'd have to be right just to break even. So I don't know if you're anything like me, but do you think that you would have a chance with a proper system and knowing a valid setup pattern of being right more than 3.1% of the time? I mean, we're going to the saying we could be wrong 97% of the time and we're still going to break even. So how many of you are interested in learning how to do that? Give me a quick Y for yes or N for no in the questions box. It also helps me know to make sure our connection is working, which apparently is a little bit of an issue right now. Okay, fantastic. Red Jess says, yeah, it's coming okay. Akash, okay. Okay, and just to put this in perspective, if you do this correctly enough times, you get in a situation like this. This is a fellow trader in the industry that trades the same pattern that I do, and he had open trades. This is just this last year of about $3.8 million trading this exact same setup. Now, of course, that's not going to happen to everyone. Obviously, you require a sizable account to have open profits of $3.8 million, but other people are trading this exact same methodology. Have tons of people that turned $100,000 into $500,000 in profit in a couple years. Other people turned $100,000 into 7 figures in a couple years trading this methodology. Now, we're not talking about day trading. We're not talking about options. We're not talking about futures. We're talking about just actually trading the common stock. And so you can do this. This is something that is at the skill level of almost every trader who knows how to do the basics of entering trades execution, and correct position sizing and things like that. So using the system, you will see results. We're going to teach you how to find this one simple setup and the trading rules. We're going to teach you how to hold on to your winners and squeeze out as much as you can. And we're going to teach you how to cut your losses very quickly for a tiny paper cut instead of those huge stomach churning losses. If you're anything like me, you'll know that one of the biggest problems in trading is you should have some fantastic wins, but then you look at those trades that you get into where you have a massive loss, that dramatically affects your bottom line. Usually, if you look at a trader's losses over a year or something like that, you'll notice that there'll be like 2, 3, 4, or 5 trades that potentially are like 50% or 70% or 90% of their total losses are just captured in those trades. So it's crucially important never to have a large loss and to cut your losses quickly. So we're going to teach you how to have a risk return ratio of 1 to 10 as in the norm, and a minimum of 1 to 5. That means every trade setup that we take, we want it to have the possibility for every dollar that we risk has the potential to make back 5 or make back 10. And we're only going to trade the long side of the market. So by the long side, I mean we're going to buy the stock for the hopes that it goes up. Shorting obviously is the exact opposite of that. And just for mathematical purposes, we're not going to get into shorting because there's also some theoretical problems with shorting, as I'm sure you know. If you buy a stock long, the absolute worst that could possibly happen is it goes to zero and you lose your investment. If you short a stock, theoretically, obviously your losses are potentially unlimited. Of course, your broker would liquidate your position and all that kind of stuff, but we're going to talk about only trading the long side of the market. This can also be traded from any brokerage account in the world, preferably one with 0 commissions. And in the United States, that's becoming more and more, absolutely the norm. And these charts and scans can run on Thinkorswim or TC2000 or MetaStock or TradeStation. And like I mentioned for you, obviously this is a MetaStock presentation. And for all of those who are MetaStock users, just text us at 509-720-7867. And at the end of this presentation, we'll give you a free copy of the scans that we've created for MetaStock to run this. So skeptical, obviously, great. I've been trading for 25 years and I've kind of seen a little bit of everything. But really my biggest barrier in trading was discretionary or subjective trading. Using mechanical or rules-based trading can completely change your life when you kind of go over to that other side of trading. So if you're feeling challenged, stressed, or even a little bit fearful, this is for you. When you trade mechanically and with rules, it takes that emotional burden off your shoulders. So obviously my very humble beginnings, I was born in Preston, Idaho. If you've ever seen the 2004 movie Napoleon Dynamite, that was set in my hometown. My cousins are actually extras in that movie. But I have a wonderful family. This is my wife and my 3 kids. I need to update the picture a little bit. The kid on the left-hand side that is about 10 in that picture, he's now 6'10" and 260 pounds. So they've gotten a little bit bigger since that picture. That's how it works. But dealing with my family and living life and all that is my real passion. I love trading, just like most of you, but trading isn't something that I lay awake at night at 3 a.m. I lay awake at 3 a.m. thinking of things I can do with my kids and adventures and family trips and things like that. But I figure this trading part out so you don't really have to. My life is pretty decent right now. I do take every single Friday off. I travel a lot, obviously not in 2020, not nearly as much, but I've taken my wife all over the world. This is us in Vienna right before getting on a boat to go to Budapest. And, I still traded that day, still traded that morning, just like normal. This is me in Budapest at one of the famous hot springs. And I snowboard 15 days a year and I wakeboard and wake surf another, 10, 15 days a year. In fact, I just went snowboarding yesterday here in Bozeman at Bridger Bowl, which is kind of a famous ski area in the area. Spend most of my summer in Spirit Lake, Idaho, out in the boonies. The place I don't even have cell service at my place out there, which is actually very nice. So I go to town and in the morning and trade from a coffee shop, just like I'm doing right now. But I serve sometimes 20 hours a week and I give $20 so far. I love the outdoors and nature, and I run online businesses. So I've spoken at events like this, here with MetaStock, but also all over the world. This is one of the last events kind of before the COVID shutdown in London, UK. And we're not some fly by night. I've been doing this for 20 years. Here's my office in Spokane Valley, and I kind of do this all over the world. This is me at the end of a little trading day in Costa Rica this last year. I traded from exactly that same spot on the beach, and then took a little drone video of it just to put some proof in the pudding. But all that's fantastic, and I just want to kind of give you a background where I'm coming from. Maybe some of you are in a similar situation. So let's get into the nuts and bolts. This is where you take out your notes and start jotting down notes. This is where the nitty gritty comes in. First step is I'm going to teach you how to scan for and trade the BMWs and Ferraris of the stock market, which in my opinion are momentum stocks. Number 2, I'm going to teach you how to trade long, looking for one very specific, very learnable, easy to identify setup. And 3, I'm going to teach you how to keep your risk reward absurdly high, let your winners run, and catch your losers quickly. So it's next to impossible to screw up if you follow these 3 steps. So how many of you have ever heard the term momentum investing? Go ahead and give me a Y for yes or an N for no in the questions box. If you know when I say momentum investing, what do I mean by that? Got a few yeses coming in. Well, momentum investing is simply a strategy where capitalizing on the continuance of an existing market trend. That's basically saying trends can persist for some time. It's possible to profit by following a trend to its conclusion, no matter how long that may be. So here's the benefits of momentum investing. Is quite simply, there's a potential for high profits over a short period of time. You're going to leverage the market's volatility to your advantage, and you're going to leverage the emotional decisions of other investors. So does that make sense to everyone? That's why we're talking about momentum investing. We're getting on a train that's already moving. We're not trying to pick the exact bottom. We're not trying to pick the exact top. We're just trying to get on a train that's already moving. So trading the right stock, ones that are momentum leaders, really does tilt the odds slightly in your favor right out of the gate. It also speeds up the process, since the trades will either be losers or winners in a matter of days, allowing you more compounding periods per year. So, which would you rather trade? A stock that goes up 15% in 2 weeks or 15% in 2 months? It's a no-brainer. So you can see why so many experts and successful traders view picking the right stocks as kind of crucial to the progress. So let's assume you decide to trade a slow stock, something like the company Ford Motor Company, which is kind of ironic because when I created the slide, Ford is not moving at all. But in the last month or so, if you watch Ford, you've noticed it's actually done very well using this exact setup that we're talking about. So kind of ironic how everything kind of comes full circle. So let's say you risked 3 to 4% of your capital invested in that particular trade on Ford. And if things go well and the trade is a winner, you might make 5 to 10%, right? But if you'd risk that identical 3 to 4% on a momentum leading stock like Riot or Tilray or any number one of stocks that cycle in and out of the market, if it ends up a winner, you might be up 30 to 40% and occasionally 100% run. So you could lose out on a fortune simply by trading the wrong stocks. So here's more proof around what we're talking about, momentum investing. From NASDAQ.com, they have a full article and study on this is proof that momentum strategies work. And also from UCLA School of Business, their MBA program, momentum investing, it works, but why? Leave it to the academics to come up with it works, but still not know why. And of course, in the Wall Street Journal, this was from 2020, 5 investment trends that skyrocketed in 2020. One of those was growth stocks, of which momentum investing is a subsection of that. So how do you find them? Let's get into the nitty gritty. Here's how you find them. Here's exactly how you set up the scans in Thinkorswim, TC2000, or MetaStock. What we're looking for is momentum stocks or ETFs that over the past 1 month, 3 months, or 6 months have their price has grown more than 90% relative to all the other stocks or ETFs in the market. Or if you don't have a relative function in your software, have gone up at least 20% in 1 month, gone up at least 30% in 3 months, or gone up 80% in 6 months. Okay, so that's what you're looking for. 1 month price growth that's beat out 90% of its competitors. In 3 months has also beat out 90%, or in 6 months has beat out 90%, or has gone up 20% in a month, 40% in 3 months, or 80% in 6 months. You're also going to look for an average daily range, which is the amount that the stock moves when the market's open, not including gaps, of more than 6%. We'll talk a little bit about that in a second, but you also should scan for at least 10 million in daily price volume, which is the number of shares traded times the average price. Or if you don't have that function, just look for at least 1 million shares traded. For each of the 3 scans, you're going to get some crossover, of course. The ideal would be have no more than 30 stocks appear in each of your scans. If you aren't getting enough, lower your requirements. Or if you're getting too many, you can tighten up your requirements. Only start trading lower ADR stocks as your account grows. If you have less than $200,000, don't trade anything less than 5% ADR. Now remember, this ADR rule refers on average how much that stock is going to move from the low, the open, the low of the day, or the high or the close of the day. Okay. And what we're looking for is this entry criteria. You're looking for on a daily chart or on a 1 hour chart. You're looking for something that's showing strong momentum. We already know that, right? It already has a reasonable volume. It has a big, strong linear move with a smooth chart that's surfing those 10, 20, or 50 SMAs. It has a minor, small pullback to the 10, 20, or sometimes the 50 SMA and surfs alongside it. The trading range narrows for a few days or weeks, and the price consolidates and kisses one of those SMAs. If it's a low cap, don't settle for any choppiness. It should be very, very smooth. If it's a large cap, it's okay to accept a little bit more bouncing around. And here's what it looks like on a chart. What we're looking for is a high tight flag is one of the ways to find these, right? We're looking for what's called a high tight flag. Other people would call it a triangle or pendant or ascending whatever, right? But I just call it a high tight flag. You can see there on Tupperware, you can see exactly what it looks like. The price has moved off a bottom of around $1.50, $2, has had a very linear move, surfs the 10, 20, 50 SMAs. It has a pullback and forms this high tight flag. And when it forms that high tight flag, when it breaks out, it has a huge potential to continue an upside. You can see it on lumber liquidators in several spots. You can see it here at lumber liquidators right here. Kind of at this 16, 15 price level, right? And it also has happened many more times on both of these Tupperware and lumber liquidators. can see it here on Kirkland. I've drawn it as the white lines down here at about the $2.50 range, and we rode that all the way up into the 10.50 range. You can see it here on Celsius, which is a kind of a beverage company like energy drink. You can see it has this nice linear move that is showing very strong momentum, meets all our criteria, came up in one of our scans. Then it had a pullback, went sideways, had a higher, putting in a series of higher lows, forms a high type flag, and then breaks out. And it just goes on and on and on. You can see this on LEDS. Here's a fantastic setup on LEDS right here. You can see it at about the $8 range where it broke out from there. Then it's set up again around the $19 range. You can see it here on Tilray, which is one of our better trades. You can see it here on DDS, which is Dillard's, a department store, right, of all things. A department store being a momentum stock is kind of a unique situation, but it happens from time to time. And you can see right here at the 128 price level. It happened right here on DDD, which is a software manufacturer. It just goes on and on. SIG, which is a jeweler company, SPC, which is Virgin Galactic. And of course, Wish, which is kind of an internet darling. And how about in MetaStock, since of course a ton of you use MetaStock, this is the exact scan that I'm going to give you for free in MetaStock. APPN, you can see it setting up in a high tide flag right there after significant momentum move. This is on the left-hand side is a daily chart. On the right-hand side is an hourly chart. You can see it here on MRTX, which is a biotech company. You can see it forming the high tide flag there. You can see it here on mRNA, which is highly traded momentum stock here recently with all the COVID stuff. mRNA is forming the high tide flag there. You can see it on Kodak, and it just goes on and on. So that's what we want to trade. We want to look for those long, easy to identify, very specific setup. The strongest candidates are going to find support on the 10-day SMA. The stronger ones, not quite as good as the 10 SMA, but stronger, are going to find support on the 20-day SMA. And the slower ones are going to find support on the 50-day SMA. So when do you know when to enter? Well, here's the entry rule. You want to buy at the opening range highs, in my opinion, of the 1 hour candle when obvious range is broken. So for me, that generally means market opens at 6:30 a.m. Pacific time where I live. That means I'm taking most of these trades sometime between 7:15, 7:45. 1 hour from the market open would be right at 7:30 a.m. Pacific time. And for it to be a valid trade, we want to get it before the entry price minus the low of the day. So we want to get it when it's close to the lower entry price minus the low of the day is less than the normal average true range for that day. Okay, so what we're saying is we want to get it before it moves. So to give you the definitions of these very quickly, ATR, average true range, is sometimes called average trading range, sometimes it's called average true range. That includes gaps, okay, because it uses yesterday's close with today's prices, and it's always expressed in dollars, right? $1.50, $2. ADR, average daily range, doesn't include gaps, and the way that we use it, it's expressed in percentages, 5%, 6%, right? It doesn't include gaps because it's just based on the daily highs and lows. So here's a little bit more proof about these high tight flags. Investors Business Daily has a full article on it. High tight flags can deliver skyscraper sized gains. Yahoo Finance, high tight flag is a rare pattern that can deliver incredible gains. And it just goes on and on. For step 3, how do you get into these trades and keep your risk reward ratio absurdly high, let your winners run and catch your losers quickly? So our initial stop on these trades is going to be a few cents or ticks below the low of the day, not in a number that ends in 5 or 0. And then you just simply set your stop and go away. Remember, we're not day trading with the system. We want to get into some nice swing trades or even trades that can last a long time, well, relatively long time, 30 days, 45 days, 60 days. Here's what you do. So after you enter the trade on the breakout of a high tight flag, you wait 3 to 5 days after your entry. If you're not stopped at your initial stop, and remember, where's the initial stop? Initial stop is just right below the low of the day on the date that you entered. If you're not stopped out, sell 1/3 to 1/2 of the entire position and then move your stop to break even. If the market is choppy or the position doesn't look super healthy, you could sell up to 50% on day 3, take some risk off the table. If you're in a great trending market or a position that you love a ton and you want to keep on as much as possible, just sell 33% on day 5 and let the rest run. Now, you exit the remainder of the position on the first close below the trailing 10-day SMA. Okay, so basically what you're doing is you're doing exactly what Jesse Livermore, the famous speculator, has always said. After spending many years at Wall Street and making and losing millions of dollars, I want to tell you this: it was never my thinking that made the big money for me. It was always my sitting tight or sitting. Got that? My sitting tight. So what we're saying is we're looking for positions that have a high probability of continuing on these breakouts from a high tight flag. And when we get in one, we make the position take us out by closing below the 10 SMA. Now, of course, you're going to get stopped out quite a bit. There's going to be quite a few of those that don't work out. However, this goes back to our risk reward ratios and our risk reward table. And this is why this is super, super critical, and why I'm just going to move my GoToWebinar control panel a little bit so I can see this. This is why swing trading is so much easier than day trading by far. A lot of times when you get into day trading or things like that, they'll say, okay, well, hey, we're going to risk $5 and our reward is $1. Well, if you look at that chart, if you risk $5 for every time you have a potential to make $1, what do you have to be? What's your break-even percentage have to be? Well, you have to break even 83% of the time just to break even. You have to win 83% of the time just to break even. We're on the exact opposite of that. We're down at the bottom of the chart. We want to risk $1 for the opportunity to make $5. And if we do that, well, we really only have to be right or have a winning trade 17% of the time. Ideally, we're down in that 1 to 10 area, where for every time we enter a trade, we have a potential to lose $1 or make $10. Then we only have to be right 9% of the time to break even. So this is where we get into kind of the most important thing I want to leave you with today, besides this concept of the simple high tight flag breakout, is expectancy. So what if we took 1,000 or 10,000 or 1 million of these same trades? What would we make on average? So our win rate with this system is around 30 to 40%. So let's be pessimistic and use 30%. So if our winners are 5 to 10 times the size of the losers, let's just use the worst case. Let's say they're only 5 times as big as the losers. So our R is our risk on each trade. So let's assume $100. So I want to stop at this point and make sure, is everyone following me? Everyone following along with this example? Give me a Y for yes or an N for no. Everybody following along with the math? We're going to say we're going to have a winning trade 30% of the time. If we lose, we're going to lose $100. If we win, we're going to win 5 times that, or $500. Does that make sense to everyone? Okay, that simply means our expectancy is 0.3 times 500 plus 0.7 times negative 100, which is $80. That means on average, you risk the possibility of losing $100 on each trade over time, but each trade on average nets you $80. As long as your expected value is positive and you can use your proper risk management and don't put too much capital at risk in any one particular trade, your account scientifically and mathematically has to grow over time. Is everyone following me on this and see how important this is to kind of know these numbers? So how many times do you want to take that same trade? How many times do you want to take a trade that says you're going to win 30% of the time and win $500, and 70% of the time you're going to lose and you're going to lose $100? How many times do you want to take that trade? Go ahead and give me a number in the questions box. We'll see what people's thoughts are on this so far. Now remember, we already did the math, and the math is that basically means every time you take a trade, you're pocketing $80. How many times would I want to take those trades? Well, yeah, we got the right answer. Mohammed says infinity. That's the correct answer. And that's what we're trying to teach you how to do. So you could screw up everything by not taking trades with ideal risk and reward. Number one most common trading failure is having huge losses, like we talked about earlier, and small profits. Huge losses and small profits lead to your account going to zero over time. Let's show you a few of these recent trades. Excuse me. This is Zillow entry on 9/15, 17% gain. Apps 9/15 entry, 26.6% gain. Fiverr 9/23 entry, 18.9% gain. Neo 19% gain. Goes on and on. DNLI 12/3 entry, 22% gain. Kirk 56% gain. That's on a retail. That's the company behind Costco. Rig, which is a shipping company, 15% gain. Tupperware of all products. We had an 80% gain on Tupperware. So here's a recap of what we covered. Step number 1, scan for and trade the BMWs and Ferraris, the momentum stocks. And remember, I'm going to give you the MetaStock setup. If you registered for the MetaStock free bonus ahead of this, you're going to get the scans and also like a 60-minute video on exactly how to do this. Or if you just text us at 509-720-7867, we'll shoot you the same thing. Step number 2, you're going to trade long. You're going to look for one very specific, very learnable, and easy to identify setup, a high type flag, like we've already shown you. And you're going to keep your risk reward absurdly high, let your winners run, and cut your losers quickly. That's trade mechanically, trade without emotion. That's exactly what we're going to do. That's exactly what I wanted to teach you today. So, when I thought about teaching you this, I was faced with 2 choices, and now so are you. It is going to be hard, almost impossible to create lasting change in your trading. One measly webinar isn't really going to go as far as you need to create the lasting change that you want and deserve for your trading. Today's trading is frankly the tip of the iceberg. So you're going to love what I have for you next. My first choice was that I could give you this full information, which I've held nothing back. This is exactly what we do. This is exactly what we do on a daily basis when these trades present themselves. Or I could kind of take you under my wing. That's kind of taking a more active role, active responsibility. So I've created about, it's been almost a year and a half now, my stock trading science mentorship. And here's what's included in the mentorship. You get unlimited lifetime mentorship that never expires. That means for as long as I continue to trade this methodology, you will always have exact access to the exact trades that I take. You'll have access to some other things that we'll talk about here in a minute, but basically there's nothing more to pay ever. As long as I continue to trade this, you have unlimited access to everything that I produce related to this particular strategy, this particular methodology. And here's what you'll receive. You get the full recording training. We already have 6 recorded trainings that cover the 3 core aspects. It covers the scans on any platform that you desire. Also shows you how to set up entry and exit rules and your position sizing. Value of that is easily over $1,000. We give you that training already available in the membership area. Plus, we give you every scan, indicator, and setting you'll need, complete and set up and running on your platform. If we need to, we'll go ahead and log into your platform and do it for you. For most people, it's pretty simple to set it up on Thinkorswim, TradeStation, TC2000, MetaStock, or soon TradingView. That's at least $1,000 value. And when you're set up, it'll look something like this. This is my TOS scan, but in MetaStock, it'll look very, very similar. We also give you our mentorship inside of a Slack group. If you never use Slack, Slack is wonderful. It's an awesome opportunity to have kind of a daily group text chat with me as we go over these trades. It's a daily trading chat, notification of setups, active trades with our members and moderators. And that's unlimited. That's easily a $2,000 value. Also give you the trade journal that shows you all these trades as they come up. Every trade that I take according to the rules, I place in the trade journal so you can copy those if you'd like. Also that you can just kind of see how the trades work out over time. And also you can keep your own trade journal using the same exact Google Doc. It cost me well over $500 to develop this doc with all the fancy bells and whistles in it, but you get that for free. You also get monthly live customer support webinars. We run those on a monthly basis where we just kind of recap what's gone on in the last month. Trades you were in, trades that exited profitably, trades that exited excuse me, on the losing side. So all of that, the training's $1,000, easily worth $1,000, software's $1,000, Slack group $2,000, the trade journal $500, the monthly webinars $1,000. Total value is easily over $5,500. In our normal situation, when I run my ads on YouTube, if you've seen those, we sell this all day long for $2,995. It's all obviously backed by solid evidence and real world results based on our recent portfolios, TOS. 19.4% gain. These are real trades in a TOS portfolio. 17% gain, 7% gain, 6.8% gain, 22% gain, 14% gain, and obviously in other counts, 9% gain, 38% gain. And one crazy screenshot, not my personal account, of course, like we mentioned. This is another colleague trading this exact same strat. He had an open profit on some of these exact same trades that we've taken, Z and ZS and Fastly and DDOG and NVIDIA and Beyond Meat and NIO, and had an open profit of $3.8 million when he sent us a screenshot. So, 3.8 million in unrealized gains. I don't know how many times you have to do that to have a decent trading career, but not very many. We also give you every single closed out trade, winners and losers, since we opened the doors to this in December of 2020. And that comes in our Google Doc spreadsheet. Since then, we've had 500, since the last time we've updated, 560% net gain, 36% win rate, excuse me, average win of 26%, average loss of 5%. And that gives you almost exactly like what we've talked about, a risk reward of 1 to 5.2 and an expectancy of 1.23 R. That means for every $100 we invest, on average, we expect to get back about 123 in profits. We give you the full trade log. Of course, you know, we're not day traders. This does depend on the market being in the correct conditions for these setups to actually happen. And just frankly, right now is extremely slow because we wait for the NASDAQ, the QQQ, to be above the 10 SMA, the 20 SMA, and we'll talk about this in a minute. But right now it's been extremely slow. I don't think I've taken a trade in 30 days or 45 days. However, to put that in perspective, would you rather be at no trades in 30 or 45 days, or be down 10, 20, 30, 40%, like many of my trading colleagues that I talk to, because they keep taking trades that are not working? So in this case, zero is the hero, and we just wait until the market conditions to return. And we'll talk about that here in a second, exactly when these trades present themselves. But in a year like last year, we were up nearly 100%. And frankly, there was only 2 or 3 good trading months in the entire year. And the rest of the time we sat in cash. So here's my ironclad 2-part performance guarantee. Go through the entire trading, participate, start trading live or in demo mode. If you don't love it, get a complete refund within 30 days of ordering. Okay, that's a no questions asked guarantee. Part 2, learn the system, use it for a full 6 months, execute all the trades as they come up. If you don't at least make back 10 times your investment in profit, I'll personally work with you for free until you do. Either way, you love it, you make good money with it, or you hate it and get your money back. I don't think we can be much more fair than that. So I want to treat your bank account kindly today. Like we've talked about, I do sell this through YouTube advertising, Facebook advertising, day in, day out at $2,995. But as a thank you for MetaStock and for having me on this webinar and teaching you this today, we're going to give it to you for $1,495. Remember, that's an unlimited lifetime membership. As long as I continue to trade this methodology, you'll get all the updates, all the trades, all the Slack groups, everything. If you sign up by midnight 4 calendar days today from today. So to claim one of those spots, all you got to do is go online, go to stocktradingscience.com/order, or you can book a 15-minute phone call with me directly if you're on the fence, stocktradingscience.com/call. Remember, this is the discounted price of $14.95, expires at midnight, 4 days from today, no exceptions. So basically, I just want to teach you this. I want to teach you how to get this exact same setup. This is my trading setup in my office. It doesn't have to obviously be that complicated. A lot of times I trade just from my single laptop screen, but I'm going to basically give you, as if you were sitting in my office right next to me, give you all my charts, give you all my programs, and trade exactly the same trades that you're trading. So questions and answers. A lot of people ask, how much capital do I need to get started? I'd recommend at least $5,000 to $10,000, just because you don't want to, you want to be in at least 5 different positions. You don't want to put all your capital in one position. So at least 5 to 10 grand. Now, if you have less capital than that, of course, you just have to be extra cautious, extra crucially cautious, and only take the very, very best opportunity trades as they come up to grow the account. What kind of computer do you need? This is pretty much platform agnostic. I trade on Mac. I know many people swear by PC, which is perfectly fine, as long as you can get reasonably good quotes. The nice thing is, because we're not dealing with day trading, the speed of your internet connection is basically irrelevant. I trade all the time from my cellular connection on LTE. No problems at all. Brokerage and trading account software do you need? Quite simply, doesn't matter, as long as you have TradeStation, Thinkorswim, MetaCharts, MetaStock, whatever, or TradingView, it's going to work. We have some other questions. How does the guarantee work? First part of the guarantee is simply join. If you don't like it, get your money back. No questions asked. Second part is, hey, if you put the time in, I'm going to work with you for free and tell you you're successful at this. The second question on the screen, who's most likely to succeed in this method? Who's most likely to fail? Most likely to succeed is someone who's a new trader, but knows the basics of how to place limit orders, how to set up stops, how to set up OCO orders, and a few things like that. but it's not someone who has their opinion so set that they're looking to nitpick and try to change every single little thing. This is a very, very simple methodology, and is once you trade this methodology, many people never trade anything else, because at times it's super boring because there's not as many trades come up, like right now, like we talked about, no trades for the last 30 to 45 days. But it doesn't matter when you're getting 100%, 200% gains on your account in a normal year. How long does it take to learn this and get good at it? I'd say at least 3 or 4 months to kind of get an eye for the setup and how that all works. We have some questions coming on from the GoToWebinar chat from William Adams. Yes, why is the win rate so low? It's just simply a lot of breakouts don't work. And we are setting our stop very close to where our entry position is. So we're willing to get stopped out for a tiny loss in the chance of getting on the right train at the right time, is basically what we're doing. This is from D, says, do you have option settings? I'm assuming this means option settings. Yes, we do teach you how to use options using this if you so like. It's not applicable for every stock that we trade, but in the vast majority, you can also trade this using options. Someone says, what is the phone number? That's the phone number if you want to get the free MetaStock charts. That's the free bonus for just signing up for this MetaStock event today. Just text us at 509-720-7867 with your email address, and we'll get that back to you within a couple of days. Obviously, today's a Saturday, but we'll get back to you as soon as we can on Monday. And also, if you sign up for the MetaStock free offer when you got started, it's the same thing. You get the MetaStock charts plus a kind of a 1 hour walk. Let's see. This is from Janice. How can I get this recording? I'm sure that MetaStock will have that for you. This is from William. Why not short overvalued stocks? Simply because breakouts and breakdowns don't work the same way. I also don't teach people to short because of the large potential for loss in terms of uncapped liability on shorting stocks. Shorting stocks is theoretically different than going long stocks. Why doesn't everyone trade this way? Probably because it can be boring. I mean, like I've been sitting on my hands as the Q has crashed and the SPY and all that the last, it's been over 30 days now. But yeah, we wait for the Qs to be in an uptrend and to be above the 10 SMA, the 20 SMA, and for those to be pointed up. We talked about our two-part money back guarantee. We talked about how to claim a spot. Pretty easy. You can go to stocktradingScience.com/order to order online right now. Get immediate access to the training, the indicators, the daily Slack group, the trade journal. And then, of course, on Monday when we have trade start, and I'm not posting in there every single day. If we're in a slow period like we are right now, I'm not even posting every single day because I'm not taking your trade. Or if you'd like to get a 15-minute phone call with me directly, ask any questions, stocktradingScience.com/call. And again, the mentor offer expires 4 days from now, $14.95, expires at midnight. And this is something that I've already successfully taught to many people. This is a friend of mine from church, actually taught him how to do this. He was up 97% in 4 months, 185% in one trade. He'd never placed a trade before. Another local friend of mine up 103% in 6 months. This is another friend that I've been trying to get trade this methodology for years. He turned $1,000 into $101,000 in 5 years on one trade. Obviously, it's a little bit different setup than we're talking about today, but just to kind of show you that I've been educating and helping people for a long period of time. Obviously, we're still good friends if I help him turn 1,000 into 101,000. 282% in one trade. Another local person that I taught, 2K into 65 over 4 years. That's 3,150% return. So again, go ahead, claim your spot, stocktradingScience.com/order, or book a 15-minute call with Kurt directly at stocktradingScience.com. And we ask for the phone number again. It's 509-720-7867. If you just want to get the free MetaStock stuff. And I think I'm about to the end of my time. I kind of rushed it a little bit, obviously, because we had our tech issues at the beginning, but I'm happy to take a few questions. We're at 53 minutes past the hour. Hopefully the audio worked that whole time. Was our audio good, Mr. Gibby?
Yes, we heard you. We've heard everything. So yeah, it's been coming through fine. Your Starbucks connection held. And I can uncross my fingers. But I have a ton of questions for you from YouTube. So
Okay, sure.
let's go with Frank. Frank wants to know how the system has been performing with the volatility the market has had lately.
Volatility is fine. It's just when sell-offs happen, when normally how this system works is we're looking for momentum stocks work the best when the market's either sideways or bullish. So when the market's sideways or bullish, which it is a lot of the time, obviously when the Qs or the SPY are going up 0.5% or 1% percentage in half a day, the momentum stocks that are currently in that cycle that are showing up on our scans will be going up 2, 3, 4, 5, 10% in a day, right? Now, when the volatility increases, things kind of slow down because we wait for a direction. But once there's the direction, and the direction is either sideways or bullish, trades are generated. Now, in a down market like right now, this is a zero is the hero. Be patient, hold on your capital, wait for more opportunities. Don't get into breakouts aren't having follow through right now. So even if something comes up, if it forms a high tight flag, the overall market is suppressing runners from happening. So we just wait. We trade another methodology. We something else.
Frank wants to know also, are you trading shares or options on shares?
These are all the examples I've used are using shares specifically. You can trade it using options. Obviously, the difference in options is you're going to want to make sure that it's a stock that has enough options interest and volume to not get killed on the bid-ask spread on the options. So on most of our stuff, we can use the options and it works just fine. But we're just very careful. We have a guide inside the membership area to make sure that people don't over-invest in options. We want people to use the options as a proxy for the stock, not as a way to juice up the returns dramatically.
Cool. Let's see. Jerry wants to know, what is your typical time in a trade?
Typical time is right around, I'd say 15 to 20 days. Now, a lot of times you're going to get stopped out in that first initial 1, 2, 3, 4 days. But a lot of times if you get a good runner on and you get something that continues, it can continue on for 30, 45 days.
Okay. Let's see. Jiro wants to know if ETFs work as well as stocks in this method. And William wants to know if you use inverse ETFs particularly too.
ETFs, the only difference is on ETFs. Now remember, so ETFs are typically a sector of the economy or something bigger than an individual company. So the average daily range on the ETFs is probably going to be smaller, but those ETF moves are very powerful. So say, I'm just going to make up a category, say transportation. So you see a bunch of transportation stocks that have an average daily range of 6, 7, 8, 9, 10%. And then if you take a look at the ETF for the transportation stocks, it's going to have everything in the sector. So it's probably going to be 3, 4, 5%. But they're often nice to trade because there's not the chance of gaps or crazy volatile moves like there is in an individual company. So it's fine. You just want to look for actually moving.
Cool. Vasilis wants to know how long you've been using the method. And Jerry says,
personally, I've been about 3.5 years, and I've been teaching it for about 2 years now.
Okay. Let's see. And T.S. Warren asked a good question. At the beginning, you said we should change one thing. He wanted you to remind him what that one thing was.
The one thing is trade these high tight flag breakouts with the defined risk.
And Daniel said, can you tell me what the range to stay in the trade was again?
Yeah, let me flip back to that. So this range stay in the trade would be so you're looking at once you're in the trade, the initial stop is going to be a few cents or ticks below the low of the day on the day that you enter. Okay. So you set your stop there at a good till cancel stop and go away. And then 3 to 5 days after entry, if you're not stopped at your initial stop, sell 1/3 to 1/2 the position and move the rest, move the stop on the remainder to break even. Then on the remainder, you hold it until there's a close below the 10-day simple moving average. So it gives you a chance to get some money off the table, get some risk off the table, lock in a winning trade, and then also, excuse me, hold on for a runner.
Okay, we've exhausted all the questions.
Awesome. Well, hey, again, apologies, 1,000 apologies for. I'm usually a pretty good on the road guy. You know what I mean? This is my first tech glitch. You never know. There's always a possibility.
You know, it only happened because you bragged that you could do it from anywhere. Otherwise, you would have been fine the whole time.
That's how it always works.
All right, very good. Hold on. Well, okay, and let's show this the website again one more time. People can go to.
Yep, they can go to stocktrading.science.com/order or stocktrading.science.com/call if they just have a few questions. And for those of you who wanted the freebie, which was the MetaStock settings that were created by Mr. Gibby, just text me at 509-720-7867 and we'll give you a copy of that, which is the same thing as the free bonus you got if you signed up for that upon joining today's whole session.
Awesome. Sounds good. Kurt, thank you very much for coming today. Really appreciate it. Have a great rest of your day. Thanks for taking an hour out of your Saturday to spend with us.
No, absolutely. Love MetaStock users. You guys are fantastic. And again, it's always a pleasure to be here with you guys. I love the knowledgeable, informed, long-term traders you guys attract. So it's wonderful, wonderful people. Thanks for being on.
All right. Sounds good. Thank you very much. And we'll see you at the next one.
All right.
Thanks, Kurt. Okay. Let's go ahead and go back in here real quick. Let me go ahead and change the presenter to me. Okay. Okay. We always enjoy having Kurt with us. Do want to remind you of the Trader Summit Action Pack. It's going to give you the Candle Profit Systems number 2, as well as the GoNoGo charts complete, as well as the Fulgent AI, 3 months of the Fulgent AI. Learn MetaStock 3 months for the price of 1. Unleash the power of MetaStock in 2 years of the Stocks and Commodities magazine. So normally that would be $2,839. Here at the event today, it'd be $1,346. So you can give us a call, 800-882-3040. You can go to metastock.com/summit deal. You go to metastock.com/sales chat. I do want to spend just a moment saying thank you to our sponsor today, Stocks and Commodities Magazine. We really appreciate them for sponsoring the event. They do such a great job. We really, really appreciate what they do. And they do a really, really a good job. I also want to thank the CMT Association for supporting us in the event. They're a brand new sponsor of ours. They've supported our big event that we do in November and been supporting all the summits as well. So we appreciate them. We're happy to be associated with them, and we really appreciate the work that they do. So our next, what I'm going to do right now is we're going to have just a little bit of a break. We're missing our last presenter, and I'm going to see if we can kind of just shake him out of the trees a little bit. So I'm going to play a little bit of a video for you, and here we go. Thanks.
Hi, my name is Greg Lewis, Director of Marketing for MetaStock Software. Today I'm here to give you a brief and straightforward answer to the question, what is MetaStock and how can it help my trades? If you've been trading long, you've probably heard of MetaStock. After all, MetaStock is an award-winning software and data package that has been helping traders for over 30 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders. You can scan the market to filter and sort securities that show buy and sell signals based on your criteria. You can test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. And unlike most tools, MetaStock allows you to test multiple strategies on multiple securities. With the MetaStock Forecaster, you can even take advantage of patent-pending technology to view probable future prices. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, Turtle Trading, Candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you're going to love MetaStock Zenith, the real-time news, data, and analysis package powered by Thomson Reuters. MetaStock Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data, and an array of options tools that have never been available to the private trader. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 23 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, everybody, you should be able to hear me. Just to give you an update, Vlad had a little bit of a miscommunication. He thought he was speaking at a certain time in Central Time instead of Eastern Time. So he's on his way. I'm going to play another video for you while we wait. Thanks.
My name is Martin Pring. Greg Morris.
My name is Mark Leibovitz.
Okay, I'm Price Headley.
I'm Stephen Cooper.
My name is Kevin Nelson.
I'm the founder of BigTrends.com. I've been trading for a little over 20 years.
I've written 18 books. I publish a monthly newsletter and a weekly info movie report.
I'm the chief technical analyst and the chairman of the investment committee at Stadion Money Management.
And I started off in the financial industry back as a stockbroker back in 1987.
I'm the founder of OnlineOption.com. We're a membership trading site.
I'm the editor-publisher and chief market strategist for VRTrader.com and the Leibovitz VR Gold Letter.
Since the early 1990s.
So 27 years.
I've been using MetaStock for in the neighborhood of about 6 or 7 years.
Full time for the last year to 2 years.
I've been using MetaStock since the 1980s.
What I like about MetaStock, and I think what initially attracted me to it, is the ease of creating watch lists and then being able to go through them very, very rapidly. Before I was using a very ponderous method, and it took me a long time to do my evening studies. Now I can do it in a matter of minutes.
Well, the formula language, because I can whip something out fairly quick in it and visually see it. I like that. I like the ability to color code price charts with experts based on certain conditions so that you're not really looking at an indicator, you're just changing the color of the line for the prices. I really like that feature. And then the Explorer, like if you're doing candle pattern analysis, you can narrow it down, and you can take your, say you have S&P 500 database, you can narrow it down to all the stocks that have had a recent bullish or bearish candle pattern. So the Explorer is very nice.
I tell you what I do like in particular, now thinking out loud, is the ability to almost access almost any stock in the world. Many platforms don't allow that. I literally can pick the country and get the stock, and that's useful for me, particularly when I get calls from clients saying, hey, you check this little small Canadian stock out, which I never would have tracked, but I can pull it up on the screen, so that really is a powerful function.
Well, there's a lot of different features that I think are extremely important, but hands down, in my opinion, the power tools. And probably my favorite power tool is the Explorer, just for the reason being that it gives you the ability to go out and scan on just about any type of technical criteria you can imagine.
I like two things. One is the electronic chart book feature, which you call layouts, where I can create lots of different charts on lots of different things, contain it in one file, and with one click I can bring all that stuff up. The second thing I like is the ability to create my own indicators.
My favorite features of MetaStock, well, I'm biased there because, of course, I have my Big Trends toolkit, and I use all my indicators in MetaStock and can custom code them for both intraday, daily, and longer-term charts. So we literally have multiple time frame analysis setups on MetaStock. So we can have multiple windows open, and we can be running those scans across the different time frames, especially daily and weekly. So I like to look at those time frames for the bigger picture trends, and then for shorter term trends I can say, okay, once I have the bigger picture buy signal, where do you get short term buys on the intraday chart as well?
Well, it's got an incredibly friendly user interface. It looks a little intimidating for the first time user, I'm sure, but everything is logically and sequentially arranged, and you can do just about anything you want to in the world of charting with MetaStock.
You can pretty much use it however you like. No matter what your trading style is, you'll find something in MetaStock that'll help you analyze the markets better.
It's a very versatile program. I don't use all the functions and power of MetaStock. I have other friends and those who are very close to it who show me all kinds of tricks and things you can do with it. I'm always of the view that best indicators are simple, and using a simple set of tools is the way to look at the market.
Well, it's a very comprehensive set of indicators and systems, and I love the fact that you've got the very specific buy and sell arrows where you know exactly what you need to do. It makes your job a lot easier to execute a system than it does to always be worried about whether you're right or wrong. So you can just follow your system and let the system do the work for you, and you just have to pull the trigger when you get those new buy and sells.
And why would you recommend MetaStock to others?
For all those reasons. Greg Morris. I'm the Chief Technical Analyst and the Chairman of the Investment Committee at Stadion Money Management. We've been managing money using tactical management or technical analysis, if you will, trend followers, for almost 20 years. By losing money. I think in '72 is when I bought a couple of stocks, had $3,000, and I bought them because the earnings were good. They paid a little dividend. They just made you lick your lips. They sounded so good, you know. And the last 2 months of '72, they shot straight up. I thought I was a genius. And then at the end of '74, after they were down about 85% each, I had no stops. I had no money management skills. I had no idea of what to do about the downside. I just know that during those 2 years, '73 and '74, the valuations got better and better. And I realized that there had to be a better approach. And so, being an engineer, that's what drove me to technical analysis. I accepted the mathematical approach to it more than the guessing about the future approach. Steve Akalis and I swapped programs back in, I think, 83, so 27 years. We chose it because there weren't many out there, but I still use it today, and I've used it all along. In fact, MetaStock, we use that at Stadium to manage almost $7 billion using a trend-following technical model. MetaStock is kind of like Excel. I ask people, they say, oh, there's so many features in there. I said, well, you don't use all the features in Excel, do you? And they say, well, no. And I said, well, you don't have to use all the features in MetaStock. Use what you want, play with the rest. And so it's simple to use. It's a good charting package. The formula language is easy. It's a modified algebra, if you will. So most people have the ability to build their own formulas. And you go to these other products, you have to actually know Pascal and other programming languages, or code, if you will, before you can write code, write your own formulas. So I think that right there makes MetaStock more popular for the masses because it's much easier to use. Well, the formula language, because I can whip something out fairly quick in it and visually see it. I like that. I like the ability to color code price charts with experts based on certain conditions so that you're not really looking at an indicator, you're just changing the color of the line for the prices. I really like that feature. And then the Explorer, like if you're doing candle pattern analysis, you can narrow it down, and you can take your, say you have S&P 500 database, you can narrow it down to all the stocks that have had a recent bullish or bearish candle pattern. So the Explorer is very nice. For all those reasons.
Hey everybody, we're still just waiting for Vlad to get logged in. He said it blew right in, so enjoy another video.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Hello? Can you guys hear me?
All right, Vlad, welcome to the webinar. How are you?
Sorry about that.
No problem. Actually, you came right as the last video we played stopped. So your timing was pretty good in relationship to the video. But let's go ahead and get you rolling here. I just turned over the presentation to you.
Okay.
I'll let you know we can see your screen. Vlad Karpel, everybody. Thank you, everybody, also for hanging out. It's good to have you here still.
So good. Sorry about that, guys. My apologies. Messed up my time zone, but we'll catch up. We still have 40 minutes, and give me 1 second to pull up the slides.
Okay.
1 second. All right, how's everybody doing? Sorry about being late. I'll try to catch up. All right, so my name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel and TradeSpoon, and today I want to go over current market conditions, how to trade in a new environment, right? This is an environment that probably we haven't seen since, at least some people say 2008. So I want to make sure that we go over the strategies that work in this environment and how to deal with trading psychology, how to build a trading plan. So a little bit background about me. I was Executive Vice President, Head of Technology at Options Express from 1999 to 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. I've been trading over 15 years, mentoring and teaching subscribers how to trade stock and options. Disclosures are important. You can pause the screen to see disclosures. I want to make sure that we have time to go over that. But let's jump into market conditions. And I'm sure you've had a lot of speakers today talking about what to expect short term, what to expect long term. I'm going to basically start with the idea that if you've been in my previous webinars, I always talk about psychology of money. It's a very interesting book, kind of changed my, easy read, changed my perception of, how to make money and how to and what is the psychology of the money. And the author, this is Morgan Housel, one of the statements he made that it takes two different types of skills to make money and to keep money, right? So we're all here, I assume, for the same reason. We want to learn, right? We want to learn, we want to make money, and we want to preserve our wealth, right? When I do the questions about what are the goals, those are usually typical answers, right? So what does it mean to keep the money, make money versus why there are different skills, right? How many of, so I'm going to ask that question. How many of you have been trading, started trading since March of 2020? So just say I started after March of 2020, or I started in 2020 versus I started before 2020. So I wanted to kind of to see what are the different background that you guys have. And let me know if you guys can hear me. I want to make sure that the audio is still good and you guys can hear me. So how many of you have started trading before 2020? How many of you started after 2020? Lal, Raj, Alan, anyone? All right, perfect. We have some before, Eric, before, Bruce, Carol, Daniel, anyone else? All right, so some of you started before, some of you started after. So the point that the author is making that we're all been conditioned to certain market environment, right? If you started to trade in 2020, in March of 2020, right? You kind of got used to the market always goes in one direction, right? This trend line is intact. Can it sometimes pull 5%? Yes. Can it some market pull 10%? So that's fine, but overall the market continues to go higher, right? There are a few of you said that you have started trading prior to 2020. So that means you traded, let's say, in 2018 when the market pulled back 20%, right? Or some of you actually traded during 20% correction in November of and December of 2020, or during pandemic where the market was down. How much was the market down? 35% down, peak to trough, right? But still, we are trading in a bull market, right? Even though it was considered to be a recession in February 2020, we're still kind of trading in the aftermath of pandemic, which, thank God, is coming. Looks like it's coming to an end. We know how to deal with but we're still trading in the bull market, right? We're continue to trade what a lot of traders consider to be a bull market since 2008, right? Since the Lehman collapse in September 2008. So my opinion, from what I see in the market, is that this bull market that started in 2008 is coming to an end, right? It's been 14 years. Did we have 20% correction? Did we have 30% correction? Yes, but the recession of 2020, right, it was pretty quick, right? The Fed put a lot of stimulus, a lot of money, a lot of liquidity. The reaction was much faster than 2008. So this recession was very short, right? I don't even know if we had 2 quarters of negative GDP. Market recovered rather quickly, and at least from my definition, 2008, even though the market did pull back for more than 20%, we're not in the bear market. So if you haven't traded since 2000, so how many of you traded prior to 2008? Has anyone traded prior to 2008? Bill, Peter, Ray, Eric. So the idea is that right now a lot of people are comparing. So I'm going to pose that question: anyone traded before 2008? Or have you forgot how what happened in 2008? And it's been 14 years. And unless you have a pretty intense journal and going back to 2008, you probably don't remember. So the point I'm going to try to make is that I want you to get away from this presentation is that we do get conditioned psychologically how to trade in certain environment. The author of this book has basically said that the generation of people who traded in Great Depression, right, 1931, or during the prolonged recession, right, Carter period from 1968 to 1982, where we had 14 years of prolonged recession where really market never went anywhere. Or even people that start trading right after the crash, internet crash, right, from 2000 to 2014. If you started traded right at the peak of the internet, right before the internet crash, for 12 years, market kind of traded sideways, right? It didn't, it didn't break out until actually after 2008. So that generation that started trading at the peak of the market, right, whether it's 1968 or 1999, they don't trade anymore, right? A lot of them lost so much money in the market that they don't want to invest in the market anymore. But the people that but if you started to trade into in 2009, or if you started to trade into 20, you never really experienced a prolonged bear market or prolonged recession. So the author is making claims that first you have to recognize whether you've been conditioned by certain market conditions, depending on when you start trading. I'm going to raise the hand and say that I have been, majority of my wealth, majority of my capital that I've made was after 2009. I've never traded or managed a lot of money after, before 2008, right? So I personally been conditioned that we always trade market that always trades higher, right? And a lot of the new market environment that we are trading right now, the inflation, right? That the inflation is here to stay, that it's not transitory, right? That the prices of the wages, higher wages are here to stay. Nobody's going to reduce the prices, salaries of their employees, or the oil prices, increase in oil prices, or consumer price index. This inflation, even though it might subside, right? It will not stay at 7%, for maybe next 5 years, but it will stay elevated above 2%, potentially longer than everybody expects. So the idea of buy and hold probably will not work, right? So idea that if you buy the market right now and you're gonna hold these positions, right? Let's say at 440, the market might not break this level for the next, 24 months or longer, right? It could be 12 to 24 months, or it could be, next 10 years where we're not gonna break 477. So buy and hold and wait, looking for a breakout above 477 for the next 10 years, right? That might not be a good strategy. So the time of a long-term investor is probably on a pause, right? You probably have to put it on pause. You have to wear a different hat. You have to wear a different hat of kind of a tactical trader, right? You have to be a trader. What does it mean? What is the definition of the trader? Kind of look always in my physics class. I was doing homework with my daughter. She's taking physics. My brain and the brain of the trader works in 3 different dimensions, right? Going back to our, physics, you always have to think about time, right? As a trader, you have to basically have an opinion. If you're a day trader and you hold in position for 15 minutes, for 30 minutes, you have to think about what's going to happen in the next 30 minutes or what's going to happen in the next hour. If you're a swing trader, if you're a momentum trader, you have to think about what's going to happen in the next, couple days, in the next week. If you're a long-term tactical trader, right, or investor, you have to start thinking about maybe months and maybe, quarters, right? But you always have to have an opinion about where's the market heading in terms of time, right? Then you have to think about direction, right? Right, you have to think about, is the market heading higher or is the market heading lower, right? So what is in time, whatever the time you usually hold in position, however long what is the direction of the market, right? And then you do have to think about magnitude of the move, right? Is the market going to infinitely go above 480? Will it reach 480 or will it reach 5,000, right? All the major wealth management companies that you listen on Bloomberg, CNBC, or read, they say, market is going to end up at 5,000. Market is going to end up at 5,200. Market is going to end up, I think the most bearish is at 4,400, right? So you do have to think about kind of magnitude. So you have to wear that hat in terms of magnitude, direction, and time. And if you made money in the past few years or in the next few months, right? If you made money, most of the time, my answer is, how did you make money? A little bit element of luck, right? I would say a little element of luck. You always have to acknowledge that at least luck is important, right? Just like when you play poker, it's important to have good cards. Second is, your skills, right? You have to learn, right? We're all here. I was late 20 minutes. You guys been listening to a lot of great speakers, for the past 5 or 6 hours. You're thirsty for knowledge, right? I have to acknowledge the fact that you are here and you spend your time on Saturday, where you could be, with your friends and family, but you're learning, right? So you make money because you are thirsty for knowledge, right? This is your core values. You learn, right? Maybe you're good in technical analysis, right? Maybe you're good in technical analysis from learning, right? Maybe you're good in fundamental analysis. You're using MetaStock platform, you're doing the charts, you're listening to the great speakers, you're learning, and you master your technical skills. So learning is important, luck is important, technical analysis is important. Research, right? You do research, right? You listen to Bloomberg, you read, different papers, so research. You're smart, right? You have to be smart to make money in the market, right? You're smart. You have good, genes, right? You have good genes. You're smart. Any other skills you think it requires to continue make money? All right. So a lot of you traded before 2008. Love it. That's great. Any other skills you think requires for you to, to make money, right? Anyone else? If you guys can think of make money and I missed some of the other skills, that help me a lot. No. Then the second is, so going forward, I think the most important is to keep money, right? How do you keep my money plus continue to make money? Right, and that's what the author of this book is talking about. A lot of in this book. So how do you keep money and how do you continue to make money? Keep and make. What do you think? What skills are required to keep and to make money? Discipline. All right, I like that. Discipline. What else? Wow, thank you. Discipline. What else? What any other skills? Not only to make money, but to keep the money that you make and continue to make money. So discipline is one. Confidence. All right, I like confidence. All right, you have to be confident in your skills. Confidence. All right. What else? Anybody else? All right. I'm going to put down humility. Right. I'm going to put down humility. Humility. I will say empathy. I'm going to put humility, empathy. You put them under general emotional intelligence, right? So if this is your IQ, right? IQ is important in trading, making money. Then it's a combination of EI, emotional intelligence, right? Plus your IQ.
right? If you're, and some of us have high IQ, low emotional intelligence, some of us have high emotional intelligence, low IQ, some of them have a combination, but you can learn these skills, right? The good news, you can learn to be emotionally intelligent. You can learn to be, to improve your cognitive abilities, right? So empathy, humility, AI, IQ, right? Long one. And I'm going to put fourth is a little, right? A lot of people get upset when I say this, but a little dose of paranoia, right? Paranoid. And, I'm quoting the author. If you guys don't like it, I can always say, well, the author of this book said, so a little bit paranoia. And you always have to ask yourself a question, why VIX is at 40 when it was at 20 before? And if the VIX is dropping from 40 back to 20, why does it happen? Why is there a complacency in the market, right? Emotional intelligence, being self-aware, talks about different kind of ability to observe yourself from third point of view. Are you complacent, right? Or are you overly, defensive, right? Overly. So those are skills that I encourage you to develop and encourage you to at least start thinking about them, right? If you want to trade in an environment of high volatility, right? Because, last year, everybody said we're going to have, 10% correction, and we never had 10% correction since March of 2020, right? This was January was the worst month since January 2020. Market is volatile. We had 4 weeks in a row, low highs, lower lows. Nobody really knows. Everybody's asking a question. I get asked, question every day during live trading room. Is 420 the bottom, right? Vlad, should I go and buy at 420 or should I sell at 420, right? So let me ask you another question. Plan. Good research, John. Plan. I like plan. Yes, trading plan. Very important. Disciplined trading plan. I forgot to put trading plan. Thank you. Leo, minimize risk. Trading plan. Flexible. I like this. Flexibility. Trading chart, not the signals. Yes. The MetaStock platform can help you with the charts for sure. Test, evaluate, and check. Thank you. Very good set of skills. Great. How many of you think in terms of time, right? When you enter a trade, how many of you say, Vlad, when I enter a trade, usually I hold the position for 1 hour to 2 hours. Or Vlad, usually when I enter a position, I hold it for 5 days to 20 days. Vlad, when I enter a position, 4 months to 6 months. Or just say, Vlad, I usually don't think about time. I think stocks can, I set my stop loss, I enter my target gain. I'm a disciplined trader. I've been trading for many years. I don't need to care about time. I care about, my target stop, target gain, and I don't think about time, right? It's impossible to predict the time, right? A lot of my subscribers in live trading say, Vlad, you can predict the timing of the market, right? So I don't really have to think about the time. So how many of you think about time? And just say 10. And why do why does it matter to think about time? So my next question is, so think about time. Just let me know if you answer in time. If you don't think about time, right? If you don't think how long to hold position, and most of subscribers, at least at TradeSpoon and Yellow Tunnel, tell me that we don't think about time. Then, the next question, right? It's like a chess game, right? I'm a chess player. I love to play chess. Then, my next question is, well, if you don't think about time, how do you set stop loss, right? How do you determine stop loss? Let's say, market right now is at 440, right? A lot of people think, question, is this the bottom, right? Is this the bottom, right? And, and a lot of people ask question, is this the top, right? All right, end of the day, no. All right, system create less short side, longer time to risk control. Depends on the system. All right. So the reason why I encourage everybody to think about that, because how do you stop the stop loss, right? So the question is, you know, a lot of you said hours, some of you said days. So usually I like to go through future rehearsal exercises, right? So you basically say Q1, end of March, right? We're going to say end of the March. You close your eyes, right? You close your eyes. And most of the traders, I assume most of you guys here, I mean, some of you I know day traders, but I assume some, well, I guess without making an assumption, how many of you are day traders and how many of you are long-term traders? How many of you hold the position, do not hold the position overnight? How many of you hold the position overnight? And then that'll be the question. Support prices. Thank you, Lee. So how many of you hold the position overnight? How many of you do not hold the position overnight? All right, I'm going to assume that at least 70% of you hold the position overnight. All right, so then the question becomes, close your eyes. Imagine we are end of March, right? End of March, Q1. What do you think the market is going to be? Will we break the top, right? That's scenario number one. Scenario number two, we are basically trading, you know, in this range. I'll make it easier, between 480 and 420, right? Right. And how many of you say this is not, you know, we're going to break this bottom before April 1st, right? This is Q1, end of Q1, end of Q1. So 1, 2, and 3. Those are the three scenarios. One, we reached the bottom. Friday market rallied. VIX reached 40. It subsided. 5-year yield dropping, 2-year dropping. You know, the yield curve steepening. COVID is about to end. Apple announced earnings and say that you know, supply chain issues are going to subside by end of March. Vlad won. Right? Or you say, you know what? Probably inflation is here to stay. Fed is going to raise interest rates at least 4 or 5 times. They're going to start deleveraging their balance sheet. But you know, Apple, Microsoft are going to continue to have a strong earnings. You know, Vlad, it's 2. Or you say, you know, Vlad, Russia will invade Ukraine. China will invade Taiwan, and you know, we have a $10 trillion on the balance sheet of Fed. They're going to start deleveraging and starting in March. 3, right? 3. So 1, 2, or 3. Close your eyes. Think about this question and write down 1, 2, or 3. All right, overnight, position trader. All right, so overnight. A lot of you are overnight. Lee, Eric, Lowell, thank you. So 1, 2, or 3, or you can say, Vlad, it doesn't matter, or just say, I don't know, right? Why do I need to worry about what's going to happen by end of March, right? So 1, 2, or 3. I think it's a legitimate question, right? All right, Lowell, thank you. 3, 2. Anyone else? All right. So I'm going to put down 2, right? My answer is 2, right? Why do I think it's 2? Because, right, it's a tale of 2 stories. I think interest rates is overdone, right? The 5-year yield, 2-year yield is overdone. Dollar is overbought. You know, Apple, Microsoft we still have strong earnings, even though the margins are retracting. But the reason I didn't choose 1 is because there is enough technical damage done, right? The long-term trends from the 2020 have been broken, right? We pulled back spiders, 13% semiconductors already in a bear market. Semiconductors dropped more than 20%. Russell 2000 dropped more than 20%. Very narrow leadership, you know, number of, you know, more than 50% of stocks in S&P are trading, you know, down more than 20%. So we have very narrow leadership. You know, energy stocks are overbought. bank stocks are overbought. Interest rates is not going to go above 2%. So I'm going to say 2 by end of March, right? And then you close your eyes and you say by end of 2023, right? Where's the end of the year, right? You have Morgan Stanley said by end of the 2023, our target is 440, right? Where are we going to gravitate? 440. You know, you have Tom Lee on CNBC said 520, right? Wells Fargo, JP Morgan said 480, right? 480. You know, I don't think I've heard anyone said less than 440, right? You know, so end of the year, right? End of the year. What do you think the market is going to happen? Same scenario, you know. Are you in the camp with Tom Lee? Are you in the camp with, you know, Morgan Stanley Research? Or I don't think, or on your camp was that we are starting a bear, you know, we are in a bear market. And by definition of bear market, spiders have to drop more than 20%. Well, right now it's only down 13%, right? So 1, 2, or 3. And it doesn't have to be, it's not like on December 31st, it's going to be at 380. You do some kind of a bell-shaped distribution curve of all the prices, and you basically say, Vlad, somewhere in here we're going to end up 3. If you said 2, you basically say, Vlad, somewhere in here we're going to end up. And if you say 1, you know, it doesn't matter if it's 520, 500. What matters is, are we going to break 480 or not? Or are we going to stay in this 15% correction, or are we going to drop more than 20%? That's kind of where you have to decide. So end of the year, 1, 2, or 3. Lee, let market tell me. Okay, so Lee is watching the price and, you know, the volume and the momentum. All right, Eric. All right, 2. We have 1. Eric, Bijou, 1. Phil, 3. All right. Thank you for the decision. I'm going to say 3 too. Right. I think most, you know, mentality has not changed in the market. We still are in the mentality of buy the dips. Right. We're still in the mentality of buy the dips. Right. But I think, you know, since for the reasons I mentioned above, you know, market will drop more than at least 20% by end of this year, right? Or further, right? So at least if this is 13%, we will drop below. You know, is this the bottom? My answer short term, yes. You know, I think there will be a pretty strong rebound, right? By end of Q1, people will forget this webinar and say Vlad was, you know, crazy, right? And we will probably not reach the top, you know, lower high. We're going to have a pattern of lower highs and continue to drop. And, you know, the best example to look is actually 2008. I think we're going to have a replay of 2008, right? If you look at 2008, similar setup. From top peak to trough, spiders drop 18%, right? And it happened to be actually right around January, double bottom, right? With bottom in January, double, you know, rallied about, how much did we rally? The first rebound. The first rebound was about 9% rebound, right? Then the second rebound toward May, right, was about 12% rebound. And then sell in May and go away, right? People sold in May. They decided to take a nice long vacation all the way through May. And then in September, Lehman collapsed and Bear Stearns collapsed, and then the market dropped 54%. So the magnitude would, you know, probably not the same magnitude, right? Even today, we don't have 20% correction in January, right? We only have 13% correction. So the magnitude of the moves will probably be less. You know, I don't think the market will drop from peak to trough, you know, 55%, right? This was a black swan event. You know, our financial system is much healthier than it was in 2008. We don't have, at least for now, we don't have a real estate bubble, right? Where everybody is getting, you know, loans and government pays you to get loans, right? So not the same situation, but the magnitude is not the same, but the setup, I think, is going to be very similar. Drop in January, February, double bottom, rebound toward April, May, setting lower high, people will sell in summer, and then summer, October, the support will break. Not 54% correction unless we have some kind of geopolitical risk, but I would think it's reasonable to assume at least 34% correction, right? Either by the end of this year or Q1 or by Q1 of 2023, right? So if that's the case, you have to be a tactical trader. You have to think about time, right? You don't have to be correct in terms of hours and days, but at least in terms of how long can you stay long bullish, right? Is this 3, 4 months, 5 or 6 months? So that's, I think, is going to be the setup this year, for the reason that I mentioned above. How do you trade, right? How do you trade in this condition? So at Yellow Tunnel, I'm going to give you a quick overview of Yellow Tunnel. I believe, again, we're talking about a lot of it has to do with being a little bit concerned, right? When you see VIX, right, you have to rewire yourself, right? The way we wired is that when VIX is at 40, right, most of us are afraid, right? We are afraid, right? All of us are afraid, actually, not most of it, but let's say majority of people are afraid, right? So you're afraid, and you usually get a margin call or you capitulate, right? So you're afraid and you sell your position, right? When VIX drops to 18, right, this is where we all get greedy, right? Market continues to go higher, we make new all-time highs, and we get greedy, right? So it's very hard to do that, but you have to kind of reverse your psychology, right? When market is at 40, when market is at extreme, you have to say, why is it at extreme? How long it's been at extreme levels, 4 or 5 days a week. Where is the VIX heading? Is the VIX heading this way, right? Do we have another leg up in the VIX, or is the VIX heading lower, right? I think VIX is heading lower. If VIX is heading lower, what strategy works? You sell credit put spreads, right? You sell option credits, credit put spreads. You collect premium because the implied volatility is so much higher than the historical volatility, right? So you have to rewire yourself, and that takes time, right? When VIX is 40, you sell premium. When VIX is going to drop 20 by March or April, at least hopefully you're going to go back to MetaStock and watch this video and say, what, maybe Vlad was right? He doesn't have to be right. I could be wrong, but maybe, at least maybe, when VIX drops at 20 and you're in March and April, you're going to start thinking about, maybe I should raise cash, or maybe I should have less positions, number of positions, or maybe I should reduce my position size, right? So how do we help you at Yellow Tunnel? First, if you sign up Yellow Tunnel, you get your free 14-day trial, and we have a lot of content for free, right? So read the starting guide. I actually talk about how to trade in current market conditions, how to deal with volatility. We do have live webinars, right? And we have recordings. We have a library of recordings where we have myself and different traders. Dr. Maneker, he's not only a trader, professional trader and a coach, but he's also has a PhD in psychology. So we have a lot of content that deals with psychology, trading psychology, right? How to include psychology in your trading plan, how to how to control volatility in your own portfolio. So I encourage you to review that. We also have different services, right, where you can actually follow my trades, right? We have aggressive power trader for short-term trader. We're going to give you bullish, bearish ideas. You can either use dollar cost average or sell out of the money put spread. Holding time is a couple days, or you can trade weekly service, right? Weekly power trader, a little bit longer time horizon, 5 to 10 days. We have neural networks, which we develop. You can use the option spreads, or you can not only have signals, but you can actually follow my trading. So via text messages online, my broker-dealer account is synchronized with Yellow Tunnel. Every time I trade, right, if you go into Dynamic Power Trader, every time I trade, you will actually see all of my orders, right? You will also see all of my positions. Some of it is, silver, or some of it option spreads. I bought XLI, or I bought American Airlines. Or we have a service like Earnings Power Trader, right? Earnings Power Trader this week, again, you can go in and look. I sold put spread on Apple, right? I'm taking advantage of implied volatility over historical volatility. When Apple sells off, right before the earnings, I'm selling Apple put spread, or I'm selling Microsoft put spreads, or I do iron condors, right? So combination of stock or option trader, you get SMS message every time I trade. You have live trading room recordings. Not only do you get message, I encourage you to look at the live trading room and see how we trade, right? What are the recordings? So that's a little bit about Yellow Tunnel. Sorry I'm late. I realize I'm a little bit out of time, but I would love to, if we do have a couple minutes, if you have any questions, I will be happy to answer them. Rally will start in the middle of February. Yes, I think rally will start at least in the next, I think it's already actually started. I think we will have double bottom. I think spiders will hold 420 level. Right, I think this is a good opportunity to go long at 420. But again, you have to be tactical. And if you see market approaches 460, 470 level, this is where you want to get bearish, right? So you want to convert your, bullish put spreads into bearish put spreads. Spreads are the best strategy because you long and short the market at the same time, and you can express your bias, right? My bias right now is to the upside, right? I don't think we're going to break 420. Probably not until, April, May. And thank you for the question. Any other questions?
We also don't have too many off of YouTube as well. So for what it's worth.
All right. All right, Jeff. Again, thank you, MetaStock, for organizing this great event. My apologies to everybody. Hopefully you guys can I can make up to you by giving you these free content on Yellow's site, and I'm hoping that it can make you become a more disciplined, a more confident trader. Thank you very much.
Thank you, Vlad. We appreciate you having you, and welcome. We'll see you again soon. Also, thank you for everybody for waiting for Vlad to get here. That was awesome. We lost only a few people. And thank you for hanging out and watching some videos while that happened. Vlad, thank you very much for coming.
Thank you.
Are you still with us, Vlad?
Yes, thank you. Thank you, everybody. Sorry. Thank you, everybody. Have a great
Peter wanted to know if you could reiterate what the offer was.
Oh, yes. So the offer, yes. So you have 14 days free trial of Aggressive Power Trader. So first of all, you have access to all of the free content, but you also have 14 days of the paid content. This is a neural network where you can actually, every day we will publish symbols that we think will outperform the market, like CVS was published on Friday. And you get trend analysis. We're seeing spiders. We think, we think we're going to reach 475 in the next 30 days, right? Support and resistance levels. You get video, live trading on video, and you have daily commentary where I will actually explain, what I see in the market in terms of short-term and long-term, right? What are the key support and resistance to watch if you're a day trader or if you are a long-term trader. So it's a 14-day free trial of Aggressive Power Trader.
One question from YouTube, I'm sure it's his real name, Dog Agility and Dog Training Psychology. He'd like to know if you have any suggestions for recommending or finding quality long-term buys in the market.
Quality long-term buys, I mean, we do have Dynamic Power Trader, right? So Dynamic Power Trader, I'll expose some of my positions right now. I think we're in an environment of inflation, right? So I did add to my silver position. I think silver position is going to do well. But again, the question is, what is long-term, right? A lot of my friends have been asking me, Vlad, should I buy or should I sell? My answer is that if you have a full-time job and you don't watch the market at least periodically, right? I don't think a lot of the assets classes, the best thing is cash right now, right? I think the best thing is cash if you're going to hold a position. If you say long-term is, 12 months or 24 months. So, like my friend, he has a Tesla position and all of his money is in Tesla. So he's asking me, what should I do? And I told him, listen, first of all, you should diversify, but the other one is, what is your long term? If long term is next 3 to 4 years, I think two things is going to happen. Tesla dropped, Tesla dropped from peak to trough right now. It dropped 36%. Is this the bottom? Most likely not. So if you're a long-term investor, I think it will drop at least, probably 50%, right? So what do? Do you buy? Well, or do you hold or do you sell? So if you're a long-term investor, you're going to hold the Tesla for next 3 to 4 years. Probably you want to at least raise some cash. I would maybe sell 30% of your portfolio with the idea that, when it drops to 676, you're going to buy more, right? So if you're a long-term investor, you have to be very careful. And it all depends how actively you participate in the market. If you actively participate in the market, I think right now is a great opportunity to buy silver. Emerging market, dollar is dropping. I think emerging market will do well. Obviously, high dividend stocks, you want to be in value, right? You want to be in value stocks because the value stocks, drop only, 8%, where spiders drop 13%. But all of these stocks are heading lower by the end of the year. And the recession, bear market, it's not going to be like in 2000 where it's down for 3 months. I think we're going to have a pattern of lower highs and lower lows for the next 12 to 24 months.
Okay, and to sign up for the 14 days, Francis wants to know, you can just go to yellowtunnel.com to sign up for that?
I think if you sign up for MetaStock and you selected our offer, then you should get that email. This was a special offer just for participating at MetaStock. So if you received the email and selected the offer, you will get an email from us. If not, if you forgot or did not.
Well, in that case, you can still go to traders-summit.com and register. And we will send you all the information on taking advantage of that. Actually, Traders Summit, I'll share, let me type it out, www.traders-summit.com. You go there. Also, if you're on YouTube and you go there, you can register. All of the presenters today had some really, really good presentations and or some really good bonus offers. Also good presentations, but I digress. If you go to traders-summit.com, traders-summit.com, you'll be able to register for today's event and sign up for any of the free offers today.
Probably misspelled. I know I did.
Okay, good. I got it right. Very cool. All right, Vlad. Thank you very much for joining us. I'm glad you were able to make it, and we'll see you again real soon.
Thank you. Thanks, everybody. Have a great weekend.
All right. Let's go ahead. All right, let's go ahead and wrap up. Thank you again, Vlad. I do appreciate that. Sorry about the miscommunication on the time zone. It's good that you were able to get there. I'm glad. Anyway, I do want to say thank you to our sponsor. Let me go ahead and make sure I'm sharing my screen. Let me make me the presenter here. Okay. Thanks again for Stocks and Commodities for sponsoring today's event. They did a great job. We really appreciate that. Again, you can also get a free issue if you go to metastock.com/tradersummit. Also want to say thank you to the Chartered Market Technicians Association, cmtassociation.org. Great association. They've been sponsoring a few of our events, and we're happy to be associated with them. You can also get 2 free months or 2 free years of Stocks and Commodities if you want to sign up for our MetaStock Trader Summit Action Pack. That includes the Candle Profit Systems 2.0, GoNoGo charts complete. Fulgent AI, 3 months of Fulgent AI, 3 months of Learn MetaStock, Unleash the Power of MetaStock, and 2 years of Stocks and Commodities magazine. Normally that would be $2,839. You can actually get that for less than the retail price of GoNoGo today, $1,346. So if you're interested in doing that, give us a call, 800-882-3040. You can visit us online at metastock.com/summit deal to also sign up for that. And you can also do metastock.com/sales chat if you have any questions. They'd be happy to help you. I want to say thank you for everybody for coming, all of our great speakers. Everybody did a great job today. It was good to have everybody. I hope you enjoyed it. For those of you that are waiting for the recordings, there is a question about the recordings. We will be sending those to you. If you're on YouTube, it's just the link that you're on. If you're going to go to a webinar, we will actually send you the YouTube link within about an hour. I hope we can see you at the next summit. I do appreciate your coming today. Stay healthy, stay safe. I'll see you at the next one.